Hello and welcome to Incrypted Online Conference 2026, which is the first event of our Ukrainian Blockchain Week. I'm so happy to see every one of you here. Despite the fact of the market is shit, the war in Ukraine, we're still here and you are still here. And it's cool because we want the Web3 world to hear the voice of Ukraine and Ukraine to hear the voice of Web3 world. So today will be a lot of very interesting speakers, ideas, opinions. So stay in touch, and I can't wait to present our first speaker. It's Pavlo Luchkovsky. It's the CEO of Colo. Pavlo, nice to meet you. Hello. Can you hear me? Hello.
Can you hear me?
Yes. You can speak now.
Okay, you can hear me, but I can't hear you. I can hear all the music, but haven't heard you one.
So the stage is yours. You can present.
Okay. Okay, so I can go. Thank you. As I'm the first and open the online conference, thank you, Incrypted. And today I will tell you about the boring layer that makes crypto spendable. And my name is Pavlo, and I am a CEO and co-founder at Cola. And we say that Cola is an app to live in crypto, but underneath it's a stablecoin native fintech that includes wallet, cards, 20 plus alternative payment methods across the world. And random facts about myself. I born in the family of lawyers, and it's left deep imprint on my future. I avoid bureaucracy, advocate libertarian ideas, and that's why I started in crypto 8 years ago. Because of the idea of decentralized financial system resonates me so much. But despite this, I've chosen the most controversial way in crypto. It's a regulated financial business. And for 8 years in the crypto space, I noticed that its adoption mostly goes along with the regulation. And let's change the slide. Yeah. Here is the quote, it's a Chinese proverb, and that if you ignore the dragon, it will eat you. If you try to confront the dragon, it will overpower you. If you ride the dragon, you'll make the advantage of its might and power. And for me, dragon is a regulation. And we've seen many cases in crypto when regulation eaten companies. When we've seen a lot of confrontation cases that went businesses to zero. And I understood that this is my way. I need to utilize regulation to contribute to the decentralized financial system. And what we build and who we are. We do over $10 million a month in card spend, and it's something around 1% of all crypto card payments due to payments.xyz. And we are the 6th place in between crypto cards worldwide. And we launched a year ago, working in 100 countries, more than 100 countries, and provide our consumer cards to more than 10,000 B2C users. And we have more than 100 businesses worldwide, including 5 unicorns. And so, why we are here? A lot of you were in this space for more than 4 years, and I believe you've seen how crypto adopted around the world, and especially in Ukraine, from cash exchanges to P2P. And crypto now is the almost only way for cross-border money transfers in and out, especially in Ukraine because of war and limits applied to financial operations. But it's not only about the Ukraine. People in most of the developing economies switch to crypto because of high inflation, like Argentina or Venezuela and etc. And here is the quote from annual report of Visa. It's an investor report that public companies are obligated to do like annually to their investors. And they say in their risk section that something may limit our growth or prevent us from entering new market. Like any ideas of what it is? Like it's a developing of local payment methods around the world, and big economies protect their financial system from influence of the United States or Visa and MasterCard building their own rails. And it's a huge risk for card networks like Visa and MasterCard. Most of you don't understand the problem because Visa and MasterCard integrated in Ukraine, in European Union, extremely deep in the financial ecosystem and people life. But we can say that we can't say this about Latin America, Africa, Asia, especially India. And for example, did you know that there is no Visa and MasterCards in Indian banks? The same with China, they have their own card network, and yes, they developed their proprietary financial rails and protect them on the government level, blocking development of like a Visa and MasterCard. So it's MBWay in Portugal, M-Pesa, like it's in Kenya, and same in the same thing happens in the Mexico with the UPI in India, and people in developing economies don't use the Visa and MasterCard. And here we are. That's why Visa rent its rails to companies like Cola. Because before, like a few years ago, we couldn't even imagine that crypto companies that operate with stablecoins or Bitcoin will have the approved card program with a huge card issuer like Visa. But with the risks that I told on the previous slide, that it's a risk for Visa and MasterCard to grow in the developing economy, they found a workaround. They took risks and decided to develop a whole new approach, allowing banks and financial institutions to provide their rails to crypto companies without even having a banking license. And I think it's a smart approach because developing economies switch to the stable coins. You can see the chart that it's almost 800 million in monthly payments on the crypto cards, right? The chart is almost exponential here. So that the approach is so simple. Developing economies switch to stables because of government regulates the rails and force citizens to use inflating local currencies. Then people switch to crypto, to stables, but there is no off-ramp options except the P2P. But we experienced, like, even I believe that even you experienced a lot of issues with the P2P, like fraud or blocking the payments, and that's why Visa understood that, okay, we need to give these crypto companies the approval to provide the crypto cards. This is one of the best of ramping methods, right? To grow our presence in the developing economies. And you can see the comparison here. That's like MasterCard choose their own path because of the Visa currently have more than 95% of the all crypto cards volume, but still. So let's proceed to another slide. It's the most, I believe, insightful because on my experience, when I speak to a variety of people, they don't understand how the Visa and MasterCard all earns their money. But it's quite simple. It's simpler than we can even imagine. So whenever user with a card taps like on the terminal, whenever you pay for pizza or you pay for the goods online, you pay to the merchant. You tap the card to the merchant. Then let's assume that you've been charged for $100, And with this complicated chain of intermediaries, the issuer bank gets the small portion of this payment as a reward for the card distribution. It's like a 1.8% of each payment that customers made with the Visa. It goes to the bank that issued the card. And whenever you pay in the merchant, like for example, the coffee store, it's been charged up to 2%. In some countries, it's even up to 3%, right, for the card payment. And it's because it's the approach of Visa to distribute the cards, incentivize the distribution, and charge the merchants that utilize their financial products, right? So users don't need to operate with the cash. Businesses operate or less interact with the cash. It's more convenient for both consumers and businesses, and Visa found that it's so great approach to incentivize the card issuers with a fee that they charge from the merchant. So it's quite simple, and that's how our financial system works right now. And yeah, I believe you've seen a lot of crypto cards on this space, especially last few years, because like I personally seen more than 30 projects that launched or planned to launch last year, and big part of them died. Like yeah, a part of them just burned investors' money, and few found their product market fit. But still, like it's currently more than 60 crypto card products right now on the space. And yeah, I want to tell you one secret that if you pull the mask off the next big crypto card project, you'll find that it's issued by one of the few issuers, like it's Rain Cards or Virex or Kalipa, and it's only 5 or 6 of them that provide their crypto card rails. Yeah. They provide their crypto card rails, and it's like this meme with from the Scooby-Doo, like yeah, that you see the great product with the big cashback that operates around the world, that with high limits, but still it's the same card issuer. So that's how this space works, right? And what do you think? How to compete on this market? Because mostly the difference is in the marketing budgets they deploy on cashback or influencers, but everything else remains mostly the same as far as these rails are being provided from like few of the big issuers, right? And to compete in this market, you just need to fork a non-custodial wallet, like it's the public implementation from GitHub, or use key management infrastructure from Privy or Turnkey, integrate one card issue and API, and start onboarding users. And that's the way how 90% of all the crypto cards, the way they have chosen. But I can say that it's not the best approach, that because most of them, as I can say, died because of this approach. It's extremely hard to compete. It's like a really red ocean, and that's what we spent 2 years at. That you need to build your own compliance. You need to um, get all the legal approval, licensing, and then you have benefits of this. And as I mentioned, that I do hate bureaucracy, right? But still, it's the only way to grow the financial system in between the traditional finance and the centralized finance. You need to build we are building the bridge, and bridge is always, it's more focused on the regulation. And as far as I said, that you need to that you don't need to confront the dragon. You might take the advantage of it, right? And to differentiate, you need to get licenses around the world. You need to build the orchestration. You need to build the in-house compliance, and then you can provide to your users the classical banking experience. That's what we are trying to build. Well, if you're, for example, located in Latin America, you will get one card issuer. If you're located in the Europe, you'll get another card issuer, right? Whenever you onboarded from, I don't know, from Africa, you will get the alternative payment methods that are that you can pay inside your country, right? And to do so, it's a quite complicated approach that differentiate us from others, because yes, it's a down we have the downside. It's a custodial product. Most of the competitors are like a non-custodial, but current crypto space is not really adopted for this. We all of us like pushing this, that to remain on custodial, to remain on chain, but now there is, it's a pity, but it's there's no option to this. And I can tell you the case when I recently rented the camera during my trip to Kenya, and I paid and their local payment methods, like it's an M-Pesa with the Kenyan shilling, but I used the USDC. I haven't opened the Kenyan bank account. I just paid to the Kenyan citizen with his local payment methods, just utilizing my USDC. And it's the future that we see, that local currencies, local rails will be connected to the decentralized financial system, and you'll be able to travel around the world. You are free from any like regulation within your country or within your area where you reside. You will have the ability to your financial ability to travel around the world, pay with their local payment methods, but for example, stay in your stable coins in the US dollars or euro, and you're not the you don't have the impact of the inflation in the you're protected from the inflation and staying in the decentralized financial system. And it's the future that's already here, because it's not really that integrated in the consumer products, but it's already here. We already see the APIs, the product, the licenses that provide the local rails. And you, for example, can come to Indonesia, for example, you can pay with the QR code payments, but still having only the USDC. You don't need to onboard to their local banks. You can just utilize your USDC and utilize the rail that accepts your verification, right? And you can transfer money to your friends in Indonesia to pay for goods and services whenever Visa and MasterCard are even not accepted, if you can pay with them. So that's the future. Future is in the intersection, like yes, whenever you need to on-ramp and off-ramp to crypto. And we are contributing especially this part of the crypto space. And I want to tell you one thing. Uh, there is a shortcut, right? For the if you've seen a lot about the non-QIC card, non-QIC cards, I can say that it's like Jenga. I want to tell you how it works, and for you just to understand, because I know that especially I even targeted with a lot of advertisement of the non-QIC cards, and I believe that you guys are targeted with this not less than me. And I want you to understand that how it works, right? And so why it's not the how to say, why it's not the way you need to interact with the crypto and the financial world. Uh, the two ways to stay under radar with your crypto when you off ramp is it's built on the gift cards, for example, and it's they earn on the leftover balance. It's more or less legit approach of to stay under radar, but it's not a financial product, right? It's just the utilization of the it's a workaround. But most of the non-QIC cards that maybe if you even tried, it's just the corporate cards, and somebody passed this QIC for you, or business verification for you, and it's not your money, it's not your rails. And I know the case when guys launched the QIC card product and left with 2 million in debt because of card issuer rugged all of their clients, right? And Visa warned the issuer, then blocked them. Issuer just disappeared with all of the money. It's like a Jenga. There are that is depicted on the slide. There are a lot of counterparties in this scheme to issue this non-QRC card. If something goes wrong in the chain, everybody lose their money, and hopefully not the end users, but these proxies, right? And so I want to say also that anonymity is a fraud magnet that you can defend, and it's a big gap between the privacy and anonymity. And if you want to stay under radar but not do any fraud, someone else definitely do on the rails you use to stay anonymous, like, yeah. And you take this risk using non-QoC rails not because of you, because of other fraudsters that utilize the rails that stays anonymous. It will lead to blocking of these rails, and maybe it will block even with your money. And so to end on the good note, right now we are on the pivotal moment. And a year ago, when I've seen the financial projects built for the agentic era, it means that AI agents will do the payments, I would say that it's just a fundraising narrative, right? But with latest AI models and AI developments, we had call even bet that no less than 30% of all e-commerce payments will be executed by agents, and we need to be ready for this. In a few years, I believe in the timeline of 5 years, like it's fully achievable to switch to like a 30% of the all e-com payments, because even now we see the products that you can utilize to record the voice message and to order some food or product online, and agents will pay each other on chain in stables, because it's so far the most cheap and convenient way to transfer value. And they will need to have off-ramp infrastructure to interact with the real world. Yeah, order you food in the Uber Eats, buy railway tickets, send payroll to your employees around the world. Whenever even the AI agents will be on it will transfer their value in between each other on chain, they will need the off ramps to the real world. That's what we need to focus on, and that's what we bet on. And yeah, so thank you thank you, Incrypted, for a great opportunity and listeners on the event. And I can say that the Ukrainian crypto community have one of the best builders around the world, and speaker lineup speaks for itself. And be brave and think big.
Thank you, Pavlo. Do you hear me or not?
Yeah, now I can hear you.
Oh, that's cool. So we have 5 minutes to have a short blitz. So quick questions, quick answers. If you're ready, it'll be not a lot of questions. So, what is best for investment, crypto or stocks?
If it's bliss, I can say that now it's stocks.
Okay. So what's better, privacy or regulation?
Privacy, but not the anonymity.
Okay. So crypto at the end of this year, higher or lower?
Higher.
So what's now, bear or bull market?
Short-term bear market. Definitely, like it's the
You're just optimistic. And finally, what would you say to Satoshi Nakamoto if you meet him in person?
Don't lose access to your wallet.
Okay, thank you. So it was Pavlo from the Cola project, and we will be glad to see you on our offline events and next year online events. So thank you and have a good day.
Thank you. Thank you.
So, and we're moving on. I will say one more time that it's our online crypto conference, which is the first event of our Ukrainian Blockchain Week, which will be actually a week, and we'll finish with our offline conference in Kiev. It's annual conference, and you're all welcome. I understand that now is not very good circumstances to visit Ukraine, but you're still welcome, and we will glad to see you next year or the year after the next year. And so we are moving to our next speaker. It's Sergey Kuntz. It's the co-founder of 1inch. Hello, Sergey. It's so nice to see you again. It's like a tradition to see you every year, and we're glad of this tradition. We know Sergey like since 2018, I guess, before 1inch, and we always tell this story to everyone. So, hello, welcome to Incrypted Conference.
Pleasure to be here.
So Sergey will tell us about rethinking of AMMs, and so I'm sharing your presentation. The stage is yours.
So today I'm going to speak about how the current design for liquidity provisioning won't work at scale. We have a huge 100 billion question, and so if you look into liquidity protocols, we have more than 70 right now, June 2026. We have around $73 billion US sitting in different liquidity protocols. And if you look more in detail in the analytics and statistics, you will recognize that between 85 and 98% of this liquidity sits actually idle. You can verify this by going to dune.com/1inch/idle. You will find a dashboard where you can look into the data that actually the liquidity stays very, very idle in the protocols. So it is idle because it is idle by design. The protocols are built in the manner that you fragment your liquidity and put into different liquidity pools and even also to different protocols. So, and even with the concentrated liquidity, it's still not efficient enough to even cover specific costs. If you look, for example, costs like impairment loss, to this I will explain a little bit later. If you look into the list of the protocols, and Uniswap in $1.27 billion US of locked liquidity, we see in average 87% sits idle. So in the best day usage, we are around 12%. And in Curve, it doesn't look better. Yeah, even in Curve, where we have a lot of packed assets to each other, the liquidity just participate in their price formation, but not in the volumes what the protocols get. So the experience in general is very broken from our point of view. So a user face impairment loss, and the fees, generated fees, don't really cover for most of the users the losses. So the problem is the fragmentation. So when you have amount of asset, for example, here in this example, we have LP, liquidity provider, who has $300,000 in different assets like WTH, USDC, USDT, and USDS. In the traditional AMM world, this person would need to split it in a lot of different pools to provide to these specific pairs. So in our case, the person with the liquidity provider would split in 15K pieces and would very, very fragment the liquidity. So the problem is that some pools get more volume, some pools get less, and the assets what sits in these isolated pairs are not really working if the price moves only a little bit in each of these pools, and moves also only on this very tight liquidity what is spread among these different pools. And the user needs to create huge amount of positions to cover all the combinations they can actually build with these different assets. We need to rethink and move from total value locked, where user need to lock liquidity in smart contract custody by providing liquidity into Uniswap pools, curve pools, and other similar designed pools, to total value unlocked. So these TVL metrics are used right now to kind of compare projects, who is better, yeah, but who's better in what? Right now, Uniswap says they are better, but again, in what? In getting liquidity providers, locking assets, what sits idle, in around 85% of the assets. We need to move to TVU, total value unlocked. So how much capital is actually unlocked? And the capital efficiency with this TVU approach is infinite. It depends on the amount of the pairs and assets you create. So the fix is not incremental. It's not a kind of an upgrade of the existing system. This is a fix of the wrong architecture. Yeah? Back to the first days of IMMs, it was nice. It was cool. It was smart contract custody, not people custody solution, but it is not efficient. Yeah. So we don't need better pools. We need to rethink how capital connects to strategies. So we need to rethink it from moving from pools to registries. Yeah. So to positions, you can create on your liquidity on your wallet without blocking your liquidity somewhere. Actually, a lot of positions. It's like virtual pools, what reuse the same liquidity on the wallet. So in the worst case, you can just move all the assets out of your wallet, and then all the positions would sit fully deactivated because there are no funds. So instead of fragment the liquidity and putting it into each smart contract, you can just keep it non-custodial. So and you can have a lot of strategies, and you have the capital in your wallet. So the flow is very simple. You give just approval to the smart contract. It's like limit order actually. So what works already since I think 2021 at 1 inch, and you can define your strategy. You can define is it concentrated liquidity, is it a full range liquidity, or is it packed liquidity? What is like for tokens what are very packed to each other, for example, USDT and USDC, or Ethereum and stacked Ethereum, they don't drift that much from each other. There's also room for very advanced strategies. Any market maker can actually build on special strategies for, or even a private person can create own strategy to maybe sell in time specific asset and not buying it back. So I'm buying right now Ethereum at $1,600 and would like to sell it until 4,600. So, and I can do it, and I wouldn't buy it back because I'm okay to buy it now and sell it over time. But yeah, some more strategies are also possible, like also flash loans. You can just give someone allowance to flash loan from your wallet for one single transaction and to give it to you back in the same transaction with additional fees. So after you give the approval to the smart contract, you can deploy the strategy and everyone can settle on it. And there's no kind of withdrawal of the assets. You don't need to deposit in the pool. You don't need to withdraw it. You can just close your position if you want to and create a new one. Or you move all your assets out of your wallet, what I said before. So these strategies are kind of programs. Not really contracts, but it can be also implemented in our own specific contract. So we introduced strategies where what are looking like programs, what are already kind of predefined and can be used at bind of the strategy to the wallet. There are different ways what can be used as a strategy, and we are coming with few strategies what everyone knows, like constrained liquidity, like what you see in use of V3 and V4. Even Dutch auction approach is possible. Limit orders, same here. So what I said before, it's like similar to limit orders. You just define it and you can anytime cancel it. So when the liquidity is custodial and it's shared and programmable, everything shifts. You can back with one balance multiple strategies. A good example would be if you have USDC, WTH, and USDT, you could back the strategy USDC to WTH and to USDT in the same time. So the liquidity would be reduced and the utilization of the assets would increase by every strategy you create on top of it. So better architecture solves the supply, but who generates the demand? So our bet is that the next billion users will be human. So we believe, and I would say we know, that the next billion users will be the AI agents. So, and they are programmable, yeah, and can act to help the users for the better onboarding. So not everyone needs to find out and do proper analysis of the market to understand what is the price range for this specific pair in this period of time. I want to create a position, and what specific fees I should charge for this period of time in this price range. And from our point of view, AI agents can do it much better already today by having access to the right information and to OneInch as well. So if you look into Polymarket, like 14 of 20 wallets are already AI agents and bots, what are using informations to set the bets to extract value out of it. We have seen also some standards, ERC 8004 built for also agents to have better access control for specific interactions on chain. We have the X402 for the payments, machine-to-machine payments. So, and daily trading volume of the AI agents is growing. So we see the shift in AI from cloud agents like Cloud or ChatGPT chat where you ask to people who buy a Mac Mini, install OpenClaw and automate almost everything for themselves. And these agents are already using crypto for also liquidity provisioning, for trading, and are able also to rebalance your own portfolio. So I personally using my own written agent to provide me the right information of the current market. And I even can rebalance my portfolio through the Wallet Connect, for example, what allows to connect anything to your crypto wallet, and you have still the control. You can verify what you are signing. Yeah, if you're swapping on 1inch, you get the information that you get exactly what you expect, and then you can confirm these interactions. Same for liquidity provisioning. So from my point of view, no one needs to understand how this new DApp works, where I can connect my wallet and how I swap or how I provide liquidity in this specific liquidity protocol. This user experience will very soon disappear, and the most of the volume will go through the AI agents. And you can speak just with AI agents in normal human language, and it understands what you want. It can access a lot of data on Dune Analytics. Dune Analytics offer MCP endpoint. And it can suggest you how you should provide liquidity into a specific pair based on the market trend and market conditions. And this is better user experience than we have right now. If I go to Curve, I need to adapt to this old school style UI, UX. We did a redesign for 1inch as well, and a lot of people was wondering, wow, so it looks very different. Yeah, and there are other projects who come with less prepared UIs and user flows. Where people struggle, and it will disappear with more AI agent adoption. I like the latest approach of AI agents with their own Mac Mini, where you can install your own agent and run it 24 hours every day, every week, every month, the whole year. It feels like very, very near to what we have in crypto. Web3 is about self-custody. And it feels like AI becomes also self-custody on Mac Minis, Mac Studios, so on. So my message is to everyone: stop locking the capital, start unlocking it, rethink it. If you're a builder, there are a lot of different ways to unlock this huge potential what we have in our market. We are still small, but we have a lot of liquidity what actually doesn't properly work, and we from 1inch offer to participate in what we're building, and this is the future of finance, and offer to builders build strategies for our 1inch Aqua protocol to introduce more efficient and reliable way for liquidity provisioning, and to solve this chicken egg problem when you have a market that has not efficient liquidity. It needs a lot of liquidity, and a lot of liquidity comes with a lot of pain because someone needs to pay for this liquidity or to take risks. So when we solve the liquidity fragmentation problem, then we will get also more volumes. And people who earn on the liquidity much more than could earn before and would earn more than in traditional finance, then we will have much faster adoption of digitalized finance and Web3. Thank you very much. It was a pleasure to be here, and I think I'm staying here for questions.
Hello. We have a few minutes for questions, so you can write your questions in the comments. And I want to ask you about AI because, like maybe a week ago, we had a news that DeFi ecosystem is the most vulnerable direction of crypto due to improvement of AI. So how is OneInch preparing for this, new attack from AI guys?
Yeah, we were preparing it from the beginning. Yeah? So we did everything to make it possible to build the code as simple as possible. If we can remove something, we remove. Even these new strategies for ARC, what we're building right now, sometimes people like to overcomplicate. But if you can remove something what can be removed, then you stay with something what actually cannot really break. And based on Murphy's law, if something can break or something can go wrong, it will go wrong. And this is kind of a rule of this world, I would say. And you have seen in the last time a lot of hacks. Every breach was hacked. Even this project, what did kind of set up by using these cross-chain protocols, messaging protocols, even these projects got hacked because you have the human factor, the social engineering part of what the hacker did, and also like you have the admin keys. And if you can avoid admin key in your project, you should avoid. You should remove it. You should not give any surface to attackers. We are doing a lot of security audits. We spent last production release around $1 million just for the security audits. I know how it is to be a very small project and not able to pay all these huge fees for security audits. Nowadays you have AI models, right? So nowadays AI models potentially produce better outputs than some of the teams out there. And you can still kind of ensure that you have specific grade of safety. So we from our side, we do every day everything what is possible to protect our team from social engineering, from spam scam campaigns, to the vulnerabilities of dependency injections and other zero kind of course, if it's zero-day exploit, you cannot do anything because you don't know about that. But we try to reduce the complexity everywhere where we can.
So it's like the bad part of AI, like vulnerability and so on and so forth. But there is a good part of AI. Everyone talking about, blockchain as a layer for AI agents, and we know that you have resolvers. So is OneInch optimized for AI agents to someday change the human resolvers to maybe AI agents resolvers?
I would say AI is bad in terms of like security and vulnerabilities. Actually, it's hardening the environment. Yeah, if something what got battle tested with almost everything what's possible, can only work highly efficient and sustainable. OneInch offer MCP as well and skills, so you can easily integrate in your project, in your agent or your application. AI APIs and use it. I have my own written AI bot and agent actually use our APIs very well to get the current prices. If I'm asking the AI agent, I did a transaction like a year ago. I bought some Ethereum. Can you tell me for what price it was? It can look in the history through our APIs to find this transaction and tell me to what price I bought and can tell me how much money I made out of it. I think to the current time, I did a loss.
Like minus 20%.
Oh yeah, could be. Yeah.
Okay, so one more question before our blitz. So, on your opinion, what's the biggest narrative in crypto right now? I understand that the narratives are much shorter, and has a smaller period of life, but at the moment, what is the biggest narrative at your point of view?
I know one very good one: to not get hacked.
To what?
To not get hacked.
To not get hacked.
Yeah, this is
I
the
think
narrative
it's
right
narrative
now.
for times, for all the times.
Yeah, but right now it's very famous right now to ensure that you not get hacked. Yeah, it's difficult. Kind of, you get attacked from all the different angles. Yeah, in terms of tech, actually, a lot of teams become very silent. We have seen a lot of layoffs also in the teams, in the bigger projects, and also some core team members are migrating from. I have seen in Aave, for example, core members moving to build something own like own projects. I think what we have seen with Aave highlighted to us that DeFi lending protocols are things what we can optimize, what we can still come with new innovations. And I think you have maybe seen what I posted on X.com when I faced the problem that I couldn't exit Aave and had to sell with 6% loss of my assets in Aave. There are ways to improve it. Yeah, we could just rethink also the architecture. Yeah, and here the same. You don't need to pool in one single smart custody with high risks where human factor decides to list the asset what is not secure enough, yeah, or secure at all. So, and it could be more marketplace approach with intent-based lending protocol, for example, with fixed interest rates and option protocols. These narratives from our point of view are still there and needs to be addressed if we want to bring traditional finance on chain.
Okay, cool. Thank you. So now, short blitz, quick questions, quick answers. They are the same as the previous, so we want to get like a summary from all our speakers. So the first question: what's the best for investment right now, crypto or stocks?
If you get access to a pre-IPO Anthropic, I would buy pre-IPO Anthropic.
You can buy, but if you're talking about crypto abilities, so it's like minus 40% of it. So what's better, privacy or regulation?
Both.
Maybe percentage?
Mix.
50-50, 40-60.
Yeah, so regulator needs say kind of verification that this privacy is not misused for bad actors. It could be also 20%, of 80. With 20% is good enough and proofs and verifications for the regulators that this privacy setup is not used for money laundering and other criminal activities. That would be, from our point of view, for regulators enough to allow these technologies.
Okay. Crypto at the end of this year, higher or lower?
245,000 for Bitcoin.
How much? 45?
245,000.
245.
End of this year. Yes.
Okay. And 1inch token?
No comments.
You can't comment. I'm sorry. So what is now, bear market or bull market?
We are in a state of where weak hands drops and strong hands catch it.
Okay. And the final question: what would you say to Satoshi Nakamoto if you met him in person?
I met him, I'm pretty sure, and I said thank you
what
very
did you
much
say?
for your service. I said thank you very much for your service.
Sir. Okay. Thank you. Thank you for your time. It was, as always, pleasure to see you. We will wait you the next year and sometimes maybe offline in Ukraine. Hope so. So have a good day. Thank you for your presentation, and good luck with all that you're doing.
I don't need luck. We don't need luck. We need just success, everyone here in the space. Thank you very much.
Bless you. Okay, thank you. Bye-bye. So it was Sergey Kuntz, a co-founder of Bandinch, with the presentation about rethinking AMMs. You can always rewatch this stream because it will be a recording on YouTube. And we're still waiting for our next speakers, and I will tell a bit what will you see and hear on this stream next. So we will have the representations of Binance, of Kraken, of Solana Foundation, of Base, of OKX, of Optimism Foundation, head of Cointelegraph Accelerator, head of Near Intents, the Trezor, the Mantle, Avalanche, Certic, and Limitless. So as you see, it's a lot of great speakers will be here today. So keep in touch. Don't move. And we are waiting at the moment for Kirill Khomykov. It's the regional head of CEE, CIS, and Africa in Binance. And while we're waiting, I will tell you one more time that Online Crypto Conference, it's the first event of our Ukrainian Blockchain Week. So we decided to make Ukrainian Blockchain Week the same as the most powerful conferences in the world do. So we have the main event, offline event, it's Incrypted Conference. It'll be on 13th of June. So in this Saturday in Kyiv. And if you're in Ukraine and still has no ticket, solve this thing, because you have to be here. It's the biggest crypto event in Ukraine. And we are so happy that we still can do these events because of all this stuff happening in crypto, in Ukraine in particular. But we do believe that it can make a great boost to Ukrainian Web3 community, because while we have the war in Ukraine, the Web3 world is not paused. So it's continue to develop, continue to make new products, continue to create new narratives. And we want our Web3 community to get all of this, to be on top notch of Web3 development, which is happening at the moment. And so this Blockchain Week is also has to bring us more bright ideas, projects to Ukrainian Web3 community. So we have like hackathons and meetups and all these kind of stuff, like just parties. We can do without parties also. So now I want to ask my team about our next speaker, and we're still waiting for him. So you can write some questions in the chat to me, maybe, so I can answer them while we are waiting for our next speaker. Can you put in the comments if you have a ticket to Incrypted Conference, type plus. If you don't have a ticket to Incrypted Conference, type minus. And while you going to put pluses and minuses, we get our next speaker. So it'll be, one more time, it'll be Kirill Khomykov. It's the regional head of CE, CIS in Africa. Please welcome. Hey, Kirilo, it's so nice to see you here. And thank you for coming on time. It's 5 p.m. in Kiev, and you're just on time.
Hey, Ivan, thanks for having me. Are we doing it in English? You guys go global.
Sure, not
Nice.
just global. We will have a fire chat, so it's not a keynote. So I will ask questions, and you can answer them. So the first question is about legislation. So is Binance involved in developing Ukraine's crypto legislation? And if so, to what extent?
Yeah, we are involved, and this is for quite a while. We are doing this. We are working with all the regulators for a couple of years now. The Ministry of Digital, the National Bank, our Commission, SEC, right? That's going to be the regulators. So we support from both, from the strategic perspective and also from the like operational perspective, right? Because once the main law is signed in the parliament and signed by the president, the regulators, National Bank and the Commission, will have another 6 months to prepare all the sub-laws or additional regulations, how the licensing works, what are the violations, what is the audit process, many different aspects. So provided we are the most licensed exchange in the world. So previously we were saying that we are 21 countries where we are licensed, but now all the Binance Global.com is also licensed in the ADGM by FSRA in Abu Dhabi. So even the global platform is now being licensed. So everywhere where Binance operates, we provide the licensed compliant services. So we just wanted to share this experience, both positive and negative, that we saw in another country to make Ukraine legislation perfect as much as it can be in this complicated situation.
So, and if we talk about, you have a huge experience in all kind of countries, and which kind of influence do you have on our legislative guys? I mean, do they try to hear you because you have both positive and negative, or they just go their way, or they listen to you?
So actually, it was a quite collaborative process at the SEC level, at the Commission level. There was a working group, and they're all representative of the biggest exchanges and the industry leaders and the supporting businesses were a part of it, both Ukrainian and international. As well, there was a working group at the parliamentary level, at the committee on the parliamentary level, who was putting together the final hybrid the final law as we have it right now. They were also talking to the industry in terms of receiving the amendments. We worked with a couple of the parliamentary members to provide our amendments, as well as when they reviewed these amendments, they were also getting our feedback, not just Binance, but all the industry feedback, whether or not we think this will be effective for the regulation. So the process was quite collaborative, but again, it's just the first part of the process. Once the law is signed, the law is very generic, right? There should be the sub-laws. Well, as I said, licensing rules, audit rules, product rules, marketing rules, what's possible, what's not possible. Taxes actually is a part of the law. So this is not negotiable, but everything else is the subject for discussion with the industry. So it was very collaborative process so far, and we hope it continues like that.
Cool. So you recently mentioned the possibility of launching a local platform in Ukraine. So once full regulation is in place, can you explain in simple terms what that means for an average Ukrainian user? So will it be an entirely separate app, or will existing Binance users simply get some new features?
So it's actually the same process as in 99% of the countries where we are licensed. So there should be the local legal entity, right? So Binance should have the Ukrainian entity that provides the service to the Binance users. The product will be the same. So we hope that there is not going to be a lot of the limitation in terms of the features proposed, like futures, margin products, Web3 wallet, alpha, trading stocks, precious metals. So we hope that as much products as possible will remain. But if the local regulation will require some limitations, for example, they will say US equities will require another license and they are not possible, then we remove this product. So for Ukrainian users, it's going to be the same platform, the same experience, Binance experience, but Ukrainian users will have to agree with the new terms and conditions that they now become the users of the Ukrainian entity, and the product offering and the marketing offering will be compliant with Ukrainian regulations. So we will keep for Ukrainian users only the list of the products that's allowed by the final regulation. And then there is going to be the migration process. So every user, when they will be migrating from the global platform to the local platform, they can accept it or not accept it, right? So it's not going to be automatic for the users. But the local platform means local legal entity and the local product sets in accordance to the regulation.
Okay.
I wanted to add one thing, that the global liquidity, the user experience, the website's address, everything will remain the same. It's just the compliance part that can change if any of the products
On the list
will
of
not
products
be allowed.
which allowed. Okay. Also, you mentioned that after full launch in Ukraine, Binance would give clients the ability to open cards and hryvnia accounts finally, make payments within Ukraine and abroad, invest in precious metals and traditional stocks. That sounds quite sweeping. Is Binance planning to become a financial super app for Ukraine?
We are actually becoming a financial super app globally, right? So I don't know if you remember, but we recently launched the precious metals trading. And then within the first months, we become the 20% of the global trading volumes of the precious metals, right? Because Binance is easy to access, it's 24/7, it's 365 days a year, and we have the huge amount of the users. So we quickly scooped the market share. The same happens with the US equity, the same happens with the B stocks that we will launch soon, with the Web3 wallet, with Alpha, with all the other products. So our vision is that we want to provide the banking services, traditional and the Web3, for users across the globe. And our mission is the freedom of money, right? So whether you need the banking service or transfer service or a cross-border payment service or the stocks investment service or the crypto trading service, we want all this to be under one roof and compliant to the users of every specific country. So in Ukraine, our strategy will be the same. The big piece that we are missing in Ukraine, as well as all the other exchanges, is the card nominated in UAH and the local fiat channels. So integrations with the Ukrainian banks to withdraw and deposit hryvnias from the exchanges. So hopefully when the both banks, they are compliant already, but when the exchanges become compliant and licensed, there is not going to be any blockers anymore to build these integrations, a fiat, a card, and maybe some local products, as we discussed, some Overgaze or any other products that local users has the interest, and provide the global umbrella of all the other traditional financial services.
Okay. The next question about Chainalysis ranks Ukraine first in the world of crypto adoption per capita and 8th in the global index. Nigeria, meanwhile, sits in the global top 6. So both markets fall within your area of responsibility. So how would you describe these markets in your own words? What's the difference between how crypto is used in Ukraine, Kazakhstan, or Nigeria?
Yeah, that's a very good question, right? Because historically, the biggest countries with the smaller, with the bad economy, they were dominating in terms of the crypto. So the countries like Nigeria, Turkey, Russia, Ukraine, Pakistan, Philippines. So these huge countries where users do not trust the local economy, and once they get their payments or their local currency, they would like to de-risk it from the local inflation and the devaluation, either through buying international currency or through the investing in crypto. So this trend continues, but Ukraine is absolutely a special case, right? Because Ukraine has additional use cases that none other country in the world has. A lot of the people has, unfortunately, and I hope temporary, has left out of Ukraine. So that's the remittances supporting their families, that's the donations, and there is a free float of the capital in and out of the country. And of course, UH is not very strong because of the obvious reasons and is devaluating quite fast. So that's why per capita, this means for the number of users and the number of the active traders, Ukraine is number one. In Nigeria, is the only difference is that they have the 250 million people, their population, but their crypto adoption is more or less the same as ours, maybe a little bit less because yes. Percentage-wise, it's a little bit less, but from the number of the users, of course, much better because just the size of the country. We had our challenges in Nigeria, but they are going to be resolved very, very soon. So we hope to have the announcement out this or the next months. And in terms of Kazakhstan, I think from the CIS Central Asia perspective, Kazakhstan is actually the leading country in terms of the crypto regulation and the approach from the regulators to the crypto exchanges and building the local market step by step, very collaborative, no limitations. And what they are doing is really a great example of the couple of things that we can do in Ukraine. We have our own way, of course, but I think provided their experience, there is some learnings we can implement in Ukraine too. So we will be working closely between our and their regulators once the law is signed.
Great, thanks you. And the next question. So we're seeing how in emerging markets within the remit. So Africa being a prime example, stable coins are often replacing local currencies, not for trading, but as the hedge against hyperinflation. How does Binance assesses this trend on a global level? So not long ago, the dominant market narrative was the meme coin cycle, then prediction markets. So what do you think will define the narrative in the second half of 2026 and beyond? So let's divide this question to two parts.
Great question. Africa and the next trends. So I'll start from Africa. Africa is very interesting, obviously a very poor continent, but growing and developing very fast. The speed of their growth is amazing. They were unbanked, but they completely skipped the banking stage, right? The banks are not that developed in the continent. They moved immediately from not being unbanked to the mobile money. So mobile money is something that they have developed themselves. And this is like not non-banking, non-Visa, non-MasterCard, but the local ecosystem that allows you to transact locally without any limitations, just having your mobile phone and your mobile package. So this is absolutely great. For example, I met and I'm meeting soon the MTN, the fifth global biggest telecom operator, 330 million users. And they are having globally. In Africa, 14 countries. Africa. In Africa, 330 million users. And they have their financial arm called Momo. So telecom operators, they understand that they need to become a super app too, not just provide the telecom services, but provide all the financial services. And we are talking with them how we can also connect the crypto to these 330 million users. So again, quite poor, quite undeveloped so far, but the speed of the growth from the fintech, education, internet, quality of life, GDP per capita is huge. 6 out of 10 fastest growing economies in the world are from Africa.
So it's like it's making the companies more influential than governments, right? Because the companies has their financial arms, they have stable coins, crypto, and all this kind of payment stuff, and the level of influence of the government is lower and lower. Is it
stable coins not that much yet, but there is a lot of the interesting projects that are starting there. And from the regulations perspective too, not a lot of the regulated markets yet, just the South Africa for right now, but a lot of the markets are getting ready. Ghana, Kenya, Nigeria, the biggest markets are very close to issue their own regulations. And the second part, in terms of the trends, you are absolutely right. Previously, after the Bitcoin and Ethereum, all other use cases were like casino style, right? NFTs, top games, meme
In
coins.
its bed, yeah.
Yeah, so it's like more like an entertainment and something fun, but industry was looking for some serious infrastructure level innovation that can actually change the perception of the crypto industry, traditional perception and this recent casino style innovation perception. And I think we found this way, which is the stablecoin payments, cross-border payments. So just last year, the amount of the stablecoin payments was more than the Visa and MasterCard combined. And it grows like a hockey stick, right? Super fast, because the quality of the traditional financial system and the Web3 ecosystem, right, is absolutely not measurable. The amount of time you need to spend with the bank, the time you wait, the commission you pay, the package of the documents you deliver, and then through the stable coin, you just do it in less than $1 and in less than 1 minute, right? Any amount anywhere in the world. So the technology itself is very different. But finally, this infrastructural level has changing, and the biggest proof of that is that all the biggest banks, all the biggest payment system in the world, they are building their own stable coins, Web3 rails, blockchain, transactions and transfers ecosystem, because everyone understands that the future of money is there, and we will see it already this and the next year.
So that's why this narrative is not so popular for regular users, because they can't make money on it. They can make money or lose money on meme coins of prediction market, but stablecoin narrative is like more infrastructural layer for B2B, and they just can use it but not earn on it.
It's just the industry is a little bit changing, right? Remember the previous cycle, the 2017 to 2021, it was the ICO boom, right? So all the altcoins, they were flying. Now it's the standardization and the industrialization happening, right? So there's most of the altcoins are either dying or not being successful. All the recent listing globally on Binance and on other exchanges has not been successful because there should be the value they are bringing, right? So the business is shifting towards the infrastructure. So what's bringing the money is the payments protocols, stablecoin protocols, DEXs like Hyperliquid, like Aster, and of course servicing of the traditional financial institutions in terms of the ETFs, etc. It's just a normal process. The industry is changing.
By the way, the changing of industry, Binance is actively developing its built-in Web3 wallet directly inside the main app. Why would a centralized giant invest so heavily in helping users navigate DeFi? Aren't you worried that over time users will migrate from techs to decentralized tools entirely?
It actually was our response to the meme coins, to be honest, right? Users, they wanted to have the meme coins and they didn't want to wait. They wanted to snipe the right meme coins and find these diamonds, right? When they can do 50x, 100x. But the compliance and the listing process of Binance is quite heavy, right? We have a strong due diligence, we have a long processes, we evaluate the projects very well. And while we finish our standard listing processes, our users are missing out, right, on some opportunities that are happening. So we wanted to find a way how to get them a quicker way, the access to the tokens that they want to buy, right? Whether it's a meme coins or some smaller tokens, and to do it quickly and get them the quick time to market. That was actually the response. So that within the one app, and you don't need to be like advanced users to be able to, save your recovery phrase, your seed phrase, or to know how to use the complicated DEXs, so that you have it in one app, protected by the Binance security and the product usability, but have the access to all the tokens that you need here and now. So that's the idea.
So you just saw that the market is huge and decided to become a part of it by giving an opportunity to your users, right?
We just listen to what our users are saying, right? We are going to these meetups, to the conferences, and amazing conferences like yours, and we would like to hear back from the users what they are missing, what products we can add, why do they use other platforms, that there is something that we do not have. So we listen it very carefully. We pass the message we fast track the message to our leadership, to our products team, and we try to quickly build the products that they need every day.
Okay, so we're continuing. The next question. So many argue that with regulation coming, the crypto industry is becoming institutionalized, and you said so a few minutes ago, and is turning into part of the global financial system. But for some people, it's very like losing independence and getting independence from that system is one of crypto core ideas. So regulation clearly has its upsides, but what do you think the industry risks losing or has already lost on the road to legitimacy?
Oh, something else is starting.
Where? Oh, everything is okay.
I can hear there is another panel started with Ivan, something else.
No, it'll be a bit later. Everything is okay. Online
Because
is okay.
In studio, there is now 4 people in the studio. I can hear them.
I think it's your waiting room studio.
Oh,
yeah, you're in the second room. Please close the second room.
It's okay. It's your previous waiting room where we gather the speakers before the main stage.
Okay, cool. Can you hear me okay?
Yes, everything is okay.
Yeah. So I don't understand this narrative of the risks that this BlackRock will buy all your Bitcoin, right? Or they will influence the industry. I think it's just an evolution, and you do not fight innovation and evolution. You just embrace it, and you understand how you can benefit from this, right? These big institutions will be buying Bitcoin, and they will be selling Bitcoin, and they will be buying ETH and the BNB and everything. It just becomes the part of the industry. Initially, the crypto were just a small little innovation only for advanced internet users, right, who were almost like hackers, who knew about crypto, Bitcoin, etc. But now there is more and more, not just traditional financial institutions, but there is like companies who build their business model around buying crypto, right, like Strategy and like other similar companies. And that is also opening the door for the like not advanced users, right? For someone who is very basic in terms of the Web3, for the newcomers, for the students, for the teachers, for everyone who doesn't understand the complicated things. The guys like Revolut, like us, like all the other banks who offer the crypto functionality, give the quick access to buying like key coins. So the system, the ecosystem is just evolving into the bringing the crypto adoption for both individuals and institutions, and this process will continue. I hope that soon, something that we were waiting, and there was a big narrative when the President Trump was elected, that the countries will now also buy crypto. It will happen very, very soon. The Kazakhstan already bought BNB. Kyrgyzstan will soon make the national crypto reserve. And a lot of countries will do that soon. So there is going to be more and more types of the users in the industry, and this is a good thing. I don't think there's any risks there, to be honest.
And in continuation of this question, so what does the most likely future of crypto look like to you in like 10 years? So do you lean toward crypto becoming part of the mainstream financial system or remaining a parallel one?
It's going to be an evolving adoption of the finance as we know it. So first, crypto will be regulated similarly as banks and the PSPs, financial payments and financial service companies, right? It's going to be in all the countries when there is going to be the regulation of the biggest players and the platforms like Binance.com or any other big players.com. They will become the centralized providers of the liquidity, infrastructure, and security. But the business in every country will be provided by the local companies. So like local platforms, you can call it, like what we discussed for Ukraine, right? And the global.com will be responsible for just the, as I said, liquidity, infrastructure, and security. So it's going to be fragmented, similarly to banks, right? In order to operate in one country, you will need a license. So that's one thing. So operations will become a little bit more complicated. But from another side, eventually crypto and the blockchain will replace the traditional financial system. It's going to be different methods. Somewhere banks will embrace the technology and will provide the services. Somewhere the big financial players like us will come into the country and replace the banks. Somewhere they will be the hybrid. But eventually, after the 10 years, as you said, I'm sure that it's going to be the financial super apps time, when just few of the biggest players that master providing the quality of all the types of the products to the local users will survive and will have most of the market.
Okay, so we have a few minutes for our short blitz, if you're ready. So
Yep.
What's the best for investment at the moment, crypto or stocks?
Currently, it is stocks. Q4, definitely crypto. Q4, Q1, my personal opinion, not financial advice as always, that is going to be the lowest lows of the crypto, and this is good time to enter.
What's better, privacy or regulation?
That's a very good question. We are actually trying to have both. We want the crypto to be the same protected as the banking secrecy laws in every country. So hopefully the data of the users will have the same, if not higher protection as the traditional financial services. So I would say both are important and both needs to be established.
Crypto at the end of this year, higher or lower? If I understood you correctly, lower to buy. Right?
I think lower, yeah.
Okay, so what do we have now? Bear market or bull market?
It's a bear market.
And the final question: what would you say to Satoshi Nakamoto if you met him in person? And did you?
I'll say huge thank you for changing the future of finance and the reality of finance. And I will definitely invite him in Ukraine to show how crypto has changed and keep on changing the lives of Ukrainian on the everyday basis.
Actually, we had Satoshi Nakamoto by I don't know. It was Peter Todd who was told that he was Satoshi Nakamoto, but he refuses to be it. So maybe the real one will come sometimes in Ukraine. Thank you for your time, Kirill. It's always nice to see you here. We are waiting for you at home in Ukraine. So someday the war will be finished. Thank you and bye-bye.
Thanks for having me. Have a good conference. Thank you very much. Bye.
Okay, bye-bye. He wanted to say, have a good Kraken, I guess, because our next speakers are from Kraken. It's Mayur Gupta, it's Chief Growth and Marketing Officer in Kraken, and moderating this fireside will be Ivan Paskar, our old friend. He's the head of EM Growth, also in Kraken, so please welcome the guys from Kraken. Hey guys, welcome to Incrypted Online Conference. It's so great to hear and see you here.
Hey,
Hello.
Ron. Thanks for having us.
Thank you very much. Nice to meet you.
If I understood you correctly, so I give the stage to Ivan as the moderator of this fireside chat, and you will be talking about Kraken and all these interesting things that happening there.
Yeah,
So
thank
the stage is yours. Yeah.
Thank you very much. Kraken ecosystem is very broad. We can touch on many things today. We have one of the C-level representative today with us on a call. Mayur Gupta is leading the growth and marketing department. Myself, my name is Ivan Paskar. I recently joined Kraken as a head of emerging markets, and it's like absolute privilege for me to be here at Incrypted Conference. Today I'm very much excited because before Web3, just some things you need to know about Mayur, because I guess it's important to highlight whom we are talking to today. He served as a global VP of growth at Spotify, scaling them past 100 million subscribers as a chief marketing and strategy officer at Gannett. He started out a computer scientist and brings that exact engineering right to how we scale Kraken every single day. And I wanted to touch a little bit about not just things we want to talk about Kraken, which is great always because it's from one side a new player in some markets like Ukraine, but also it's a very established and OG player in the market. So Mayur, welcome. Let's dive in if you're ready.
Thanks, Ivan. Yes, let's do it.
Thank you. Kraken is one of the oldest crypto exchange, which means many of clients are now mature investors with complete different needs than Gen Z traders in 2026. Although even Gen Z traders these days, they pivot to X stocks. Luckily, we have on Kraken. So how do you balance between brand positioning, all the values and USPs to these users, and also to look conservative and reliable to an institutional fund, which historically has been one of the ICP at Kraken, right? Remaining active to these different type of users and cohorts.
Yeah, I think you're right, Ivan. We've been around for 15 plus years. I think in crypto, it means a lot. Our journey in the first 10 years or 8 to 9 perhaps was definitely focused a lot more on professional traders, institutional clients. That's how we established our brand, and then we evolved into more retail consumers and have been growing that since then. But if I were to summarize where we stand today, I would say we evolved from a crypto exchange, even though that's where we started, to now a multi-asset, multi-product, end-to-end financial ecosystem. Where yes, we have a number of clients and users who come to trade, but then you can also now invest, save, earn yield, lend, borrow, send money, spend money. So it's an overarching end-to-end ecosystem where where different client segments are coming to fulfill their needs. And if you look at our vision for this entire ecosystem, it's not been to build a super product or a super app. We believe that these different segments have different needs, and we want to do the extra work to make sure that we are providing experiences that are relevant to those needs. So that's why we have multiple surfaces, different interfaces through which these segments engage. And that's how we think about the brand as well. Yes, there is a macro ecosystem. We are all part of Payward, which is our holding company. But underneath, there is a lot of flexibility. For example, if you look at Crack, which is our money app in a way, you can send money, you can save, you can spend. The core audience, the primary segment for that is actually looking for simplicity. They're looking for higher yield. Whereas if you look at our NinjaTrader product, the core clients for NinjaTrader need depth. They need a regulated infrastructure. They need more advanced tooling and dashboards, very much like a pro trader. So our vision has been, how do we take the macro level first principles of security, trust, but give enough flexibility within our sub brands, which are more relevant to their primary audience for each one of those surfaces.
Got it. That explains why there is still a separation: the Kraken consumer app, Kraken Pro app, Krak app. And I think that's a great response, because essentially if we run a parallel between like traditional banks we use on a daily basis, I'm sure you have a few bank accounts either as well. Same as like on average, a crypto trader may also have a few brokerage accounts, a few crypto exchange accounts. So that explains. One thing I'm wondering, how do you prioritize out of the whole globe the strategy of like rolling out? Because this is something very hectic, right? So what's your view on like scaling big, massive businesses like Kraken?
Yeah, we're smiling because obviously Ivan and I talk about that very often. That's one of the reasons why he's here. But look, first of all, I think one of Kraken's or one of Paywood's strengths is our regulatory and compliance footprint. This is what we've invested heavily in the last 15 years. We believe that is our stronger value proposition, because as an infrastructure player now, this is the glue that ties it all together for us across the ecosystem across the country. So we today operate in 100 plus countries, but of course, the goal for any business is not that you take the finite set of resources you have and you distribute them evenly. So we have tiers of markets. We assess these markets based on where the competition is. We assess these markets based on, within our product portfolio, which products are more relevant to that culture, to that geography, to the user needs there. So there are some markets which are going to be more pro heavy. They are more relevant to Kraken Pro, Ninja Trader, and so on. There are certain markets that are where we are going to lean in with perhaps Krak as an entry point to get access to tokenized equities, for example, in different parts of the world, or users who are perhaps immigrants and they want to send money back. So it all depends on where do we believe we have the strongest value proposition for the core audience, and where can we prove product market fit. But then we look at our core markets where that have the strongest market share. We look at emerging markets. We look at where do we stack rank in terms of the competitive landscape. But overall, the important part is a lot of this is influenced by data. A lot of this is influenced by what traction we are seeing. We build those tiers, and then we build frameworks that are repeatable across those tiers. But there's a constant effort to figure out how do we penetrate more geographies where we strongly believe that the ecosystem that Paywood and Kraken are building are actually going to drive value to the local user. So that's how we figure out the prioritization, but this keeps evolving on a weekly, monthly basis.
I see. One thing I was wondering before even I joined Kraken is like what Kraken sees as a real bottleneck and mass adoption, because this totally depends like company by company. And I've seen, for example, that Kraken has been onboarding users in crypto for more than decades, and it's still not a surprise to me whenever I talk to someone like, hey, if you have an account on Kraken, everyone is smiling and says, yeah, actually it was like one of my first exchange back at that time. From inside that operation, looking at like real funnels, global scale, what is actually still in the way of like mainstreaming adoption, according to your opinion, or your opinion you hear at the board meeting you have on a regular basis? What is the bottleneck Kraken, Paywood sees like the rest of industry consistently underestimates?
Yeah, I mean, look, I can share my perspective on how I see it, and obviously this is all ladders up to how we talk about it internally. But first of all, we've been around here for 15 years. We've been through ebbs and flows of the category. We've seen crypto stand on its own. We are now in a world where, or we've seen crypto stand on its own, and crypto was a bridge to all things financial freedom. And now we are seeing the intersection of crypto and traditional finance, where I personally believe that in maybe 18 to 24 months, we won't be using words like crypto or AI. I think everything will be by default on chain. Everything we do in our financial life, and very similar to everything by default will be artificially intelligent. We won't have to use those phrases because the world will be natively on chain, natively AI. In terms of how I think about the evolution of everything crypto, everything on chain, look, I think this category has taken a while for it to finally start to solve daily utility and human needs and human use cases. We've spent 15 plus years or so as a category to build the infrastructure to get to the point where the technology is finally hidden, and it is the value proposition, it is the human need that is finally becoming visible. So I think these are very exciting times. If you look at stable coins as perhaps one of those most obvious use cases that is fundamentally changing how people all around the world are holding assets, saving, sending money. If you look at tokenized real world assets as great timing, because on Kraken we just launched SpaceX's pledge, and over the weekend the team launched SpaceX perps as well. So those are great examples where these are real world assets that were only restricted to certain parts of the world, and within those parts to a certain class of people who had certain access. Now anybody in pretty much any part of the world can now have access to one of the most liquid and deepest markets in the world, which is US stock exchange. So I think finally there is real utility, real use cases that are solving human problems on a daily basis. And there are going to be ebbs and flows, of course, but the roadblocks are only going to be insular in the sense, what type of experiences can we create? How do we remove friction from the single human? How do we make sure that we are actually giving back more and more value to them versus keeping them, on the centralized layer? So from our standpoint, we are very bullish and excited. Our mission doesn't change. It is still about driving financial freedom, where that concept of financial freedom is native. It's not a bolt-on, and we continue to march towards that.
I see. You've mentioned about the tokenized equities, and I instantly realized that we are not just predicting these, we are building it, because Xtalks, the company which is also part of the Kraken Payward family, crossed recently a $10 billion in combined exchange and on-chain volume. And there is a strong demand in many emerging markets as well for this product, because they have a limitation. So technically, to sum up, I believe we can agree that crypto at some point democratized the finance access, so everyone could get a bit of exposure, right, in terms of investing. And now we are entering on the verge of, let's say, entering the new era where we can expect something new. On the AI and on-chain, I was wondering if we can talk a little bit about Inc. and plans of Kraken ecosystem. Do you believe it would be right to say that independent blockchain network like Inc. are and this is where does responsibility for a user experience sits on their on-chain moves, and they are going to be very much connected with AI very much soon? Is this going to be the case, or they still will be mostly connected and integrated with centralized products like Kraken Consumer, Kraken Pro?
Look, first of all, I think AI is going to be underneath everything we do. It is inevitable. There's a lot more that continue to get launched. Also, when we do it right, it won't be explicit, right? Because the experience itself gets smarter. The experience itself gives you more and more control to do what's best for you and give you a lot more flexibility as we continue to evolve. But in context to Inc., I think, or in general, how the user relationships evolves. Look, when you're coming directly to the Kraken ecosystem and using one of the interfaces, Kraken Consumer, Kraken Pro, Crack, etc. Of course, we are managing the assets. The only difference is if we are still the gateway, or if Kraken is still the gateway, and platforms or chains like Inc. actually provide you the flexibility to self-custody, to transact on-chain, to bring all the value proposition of on-chain and DeFi, which was reasonably fragmented for the last so many years. It was only typically available or more easily accessible to the early adopters. Our goal is, how do we bring that value proposition more seamlessly available and accessible to the normal user? So again, for me, from my standpoint, as the experiences evolve, as the frictions between on-chain and off-chain or managed custody and self-custody remove, for an end user, it'll be less about whether it's on-chain or managed custody. It'll be more about, where do I have risk versus yield? Where do I have flexibility? What assets do I have available where? And that is the vision that we have, which is bring that access, create experiences that remove those silos and fragments, and give users a choice to where they have the confidence and where do they find the most easy way to fulfill their needs. That's the ultimate goal.
I realized that you have lots of experience already in Web3, but you've recently technically pivoted from Web2, right, company? And one idea came to my mind. If, let's say, you came into Kraken from a long career building consumer brands, and if a CMO of your level at Web2 company this day called you tomorrow, and he would ask hey, Mayur, I'm thinking about moving into Web3. What is the most important thing you would tell them, grounded in what do you have already had learned at Kraken?
Yeah.
And if you actually tell him to do these or pivot to AI.
Yeah, I was going to say, I had not heard about Web3 in a while now, because everything has been about this AI native evolution and transformation that we are living and breathing every single day. So look, I think the world's changing faster than we can even comprehend right now. So my advice to myself every day and anybody else would be, if you have a playbook in your mind, if there is something you've learned for the last 20, 25 years, be prepared to unlearn and learn again. Because the way we are operating is, while the first principles don't change, but the way we are operating is going to dramatically shift, or is already shifting. And in my role, growth is now going to be fundamentally about distribution and attention, where distribution is being rewritten because of AI. For the first time in the history, we are going to have someone making the final decision, someone making the choice, which is different from a human being. It's never happened. So many things have changed, but we always used to say, but at the end, it's a human making a choice. Now it's going to be machines, agents making a choice for the human. So that fundamentally shifts. But one thing in all this evolution and fast-paced changes that are happening, that the value of intuition, the value of human connection, the value of honest, authentic, trusted brands, especially in the financial ecosystem, is going to become even more critical, especially when we are going to have the entire engine running natively through agents and so on. So that honest creative storytelling, that human connection is what will build brands. That serendipity and irrationality is what differentiates when everything else becomes commoditized.
I see. I hate to ask these type of questions, but generally I think for everyone who's watching us today and maybe watching in the recording session, Kraken has been very local, starting from the beginning of this year with many announcements, integrations, partnerships, and acquisitions. And there are still founders, builders, marketers, and investors watching with us. I was wondering if there is, to wrap up things, basically, one of the last questions I would love you to ask. For example, with just one thing to think about as they head back to work today, informed by what you're seeing inside of Kraken, what would it be? What kind of success and type of company you envision Kraken to be? I'm not even speaking of years, because we are living in the world where everything is changing on a monthly basis, but maybe there is some vision in your head as a growth leader, how Kraken can look like in a few years, let's say within the next cycle.
Look, I'm sure a lot of folks here have heard Arjun, our co-CEO, share his vision, and I'm sure you all have heard a lot from Jesse Powell, our founder and chairman now. Mission for Kraken has not changed. It is all about driving financial freedom in the universe, in every single part of the world. From a growth standpoint, what we often talk about is where do we want Kraken and Payward to be, let's say, in the foreseeable future. It is no matter who you are, a business, a safe investor, someone who is traveling all around the world and has to send money back to one place or the other, an advanced trader, a derivatives trader, someone who's on the move, someone who has this adrenaline rush every time the market moves. Whoever you are, the vision is that we want you to think about Kraken as the platform, as a first platform that's trusted, where you will find everything from all kinds of tools and dashboards and data, the most trusted information, the most trusted and secure platform for you to fulfill your need. Whether that is investing, saving, sending, borrowing, lending, you believe that this is a place where your money can work more for you than any other place. So how we get there, those are all mechanics. There's going to be continuous, fast-paced experiments, launching new products, learn a lot, launch in new markets, get into more verticals. But ultimately, that's where we want to be. An end-to-end, multi-asset, multi-product financial ecosystem for the world, where financial freedom is native and not a bolt-on.
Cheers. Let it be this way. Let's get it cracking, as they say. Thank you to Incrypted team for hosting us and giving this opportunity to deliver a message. And thank you, Ivan, for organizing this.
Yeah, thanks. Both
thank you, guys. I have Blitz. So if you can answer quick, and both of you can answer at the same time, so we will see what's the difference between your answers. So what's the best for investment at the moment, crypto or stocks?
Crypto.
I think risk reward for Bitcoin is way much better.
Stocks on Kraken, right? So what's better, privacy or regulation?
Regulation.
I think a convergence of both.
Okay. Crypto at the end of this year, higher or lower?
Irrelevant.
Flat.
Pass. Hard pass. So what is now, bear market or bull market?
I would say transition.
Yeah. Feels bearish, but it doesn't matter.
It's been a few times already this way, and then it's been bullish. So
we've been there for 3 times, I guess, from 2017. And what would you say to Satoshi Nakamoto if you met him in person?
Go ahead, Ivan.
I don't know. I would probably thank him very much for changing my life completely, 360. Yeah, since that time. I found out about him or this group of people. What about you?
Well, yeah, of course. I think we all will thank him, but I'll just be in awe of someone who could actually have the vision that could radically shift the most archaic of human principles, that is the concept of money. So I think I'll just say thank you and try and observe him. How did we have someone like him think so far out?
For me personal, I think I'll ask what is his point of view about what it moved to from his idea to what's happening now. So it's very interesting for me how he described what he sees at the moment. Okay, guys, thank you very much for a very interesting conversation. I guess that Kraken is one of the most discussed projects at the moment in Ukraine because of Ivan moved to Kraken, because of all these kind of, I don't know how to tell it in English, NATO. Or what is it called? NATO. So, and we're waiting for more good news for Ukraine. Thanks for coming. We are waiting for you offline in Ukraine. You're always welcome. I hope that the situation will improve soon, and we'll be happy to see you here in Ukraine. Thank you, guys. Bye-bye.
Thanks a lot. Thanks for having me. Bye-bye.
And before the next conversation, I want to present to you another, how to tell it, my colleague. It's Vlad Shevchenko. It's our head of BD and sales department. He will be in charge of Incrypted Online Conference for the next 2 hours. Because I'm too old for this shit, I need some break. And Vlad is too young, still young, and he can do it. So the stage is yours. Please present the next speakers.
Thank you, Ivan. Okay, I'm really happy to be here with you guys. Really great speakers today we have at our Incrypted conference, online part of our Incrypted conference. Small reminder that we have Ukrainian Blockchain Week this week starting just today with our yearly online conference, and already this weekend we're gonna have big offline event in Kyiv, Ukraine. So if you guys in Ukraine, please, it's your time to grab tickets. If you are not in Ukraine, okay, but we are waiting for you this year or next year. So we are doing this for 4th year in a row. Unfortunately, the worst conditions that we can imagine, but we're still organizing our Incrypted conference. And before I introduce our next speakers for Fireside Chat, I would love to say huge thanks to our big friends, brothers and sisters from Solana Super Team Ukraine, who actually managed to get us these great speakers. And frankly, huge thanks to the whole Solana ecosystem, these OGs, big friends of ours, I would say all-time partners of Incrypted. Our story with Solana started in 2019, I guess, with Anatoly joined Incrypted live stream back then, before even the token was launched, and we were trying to get him at our stream for a couple of months, and like less than 100 people watched the stream back then. So 7 years passed, and right now Solana is one of the most amazing projects in our space. So I'm happy to introduce our next speakers, and here's our intro. So today we have Vibhu Norby, the Chief Product Officer at Solana Foundation, and my colleague, let's say, who will be hosting this fireside chat, Jack Dunham, Head of Video at Solana Floor, the biggest media at Solana ecosystem. That's why I'm calling him our colleague. So the stage is yours, guys. I'm taking out, and I will see you in 30 minutes with the small quiz.
Excellent. Hello, everyone. I'm Jack Dunham, as my colleague very kindly mentioned, head of video at Solana Floor, which is the Solana ecosystem's largest source of news and information. Now, we do live coverage of news, of macro, of crypto, all the good stuff. So you can find us on X. It's very active. It's at Solana Floor. And I'm super excited to be chatting with Vibhu today. If you haven't seen Vibhu on X, you've either been living under a rock or you're missing out. Vibhu is CPO at Solana Foundation. Previously a serial entrepreneur, and this is where it gets interesting, founded Drip, which is a collectibles platform on Solana, was acquired by Jupiter, then he joined Foundation after that. Now we know Vibhu for being unusually candid, some would say unapologetically forthcoming in public discourse. Now you might have seen a recent perpetual futures trading competition. This was on Phoenix Trade. It was against a hyperliquid trader, and I hope you don't mind me saying this, Vibhu, but you can see all of those results, the end result, the daily results, etc., at perp.so. Please don't hate me for sharing those results, but it was very interesting. And the point here, Vibhu, and the reason why I'm super excited to pick your brain today, actually, is because you've cracked the code when it comes to public discourse, when it comes to public controversy in the name of advancing Solana's vision, the sort of core vision that we've had since day one, which is to be the best place to trade everything in the world. So very excited to chat with you, Vibhu, today. How are you doing?
I'm well. You guys do awesome work. You do awesome work. It's nice to be here with you.
Appreciate you. Now
Thanks
we're going
for
to get into
sharing
Solana.
my
We're going to
worst
get
week
into
of all
Sol.
time.
Yeah, listen, there's so much to talk about. We have a limited amount of time, so I'm going to keep the conversation as focused as is humanly possible. We want to talk about the agentic economy as well. We want to talk about what agents are doing on chain already. A lot of interesting topics, but we are going to end with a fun sort of rapid fire question, as they just mentioned. Before we get to that, before we get to those spicy bombshells, I want to start with something fun. What do you actually do at Foundation, Vibhu? And what do people think you do at Foundation? Because I think there's a bit of a discrepancy there.
What I actually do, I wear two different hats. So I lead our marketing team, which manages the Solana brand assets and events, that you see in every channel and around the world. And then I also run our new product team, and our product team has been building a bunch of awesome things. We launched Solana Developer Platform this year. We launched Pay.sh. We launched tokens.xyz at tokens on Twitter. So yeah, those are the two hats that I wear at the foundation. What do people think I do? I think most people see me as like a institutional grade shit poster. But that's just in my spare time. That's just for fun.
Yeah, I think that's
unapologetic Solana maxi though.
Very good. Let's talk about some of those upgrades announcements. You mentioned Pay.sh, tokens, etc. But we are halfway through the year. Aside from those major moments, we've had Accelerate. Miami was huge. JTX has been announced. There's a deal with Google Cloud. You mentioned Pay.sh. So the monumental Alpenglow upgrade, I think, is really the sort of foundation upon which this is all being built. Yet, in my regular conversations with macro experts, with TradFi peeps, we often talk about this sort of decoupling of price from fundamentals. It seems depending on where in financial markets you operate, you have a different perspective on things. And over in the sort of real world, if you will, people talk about this K-shaped economy, this economic theory that's being observed as well. But I'm curious, from your perspective, being inside the foundation, what has Solana really done in 2026 that brought us to this point?
And when you say this point, what do you mean by that?
The point that we're talking about the future of agentic payments. Pay.sh was launched. You've got tokens. It seems that Solana's pushing forward in so many different fronts, and it's certainly not where we were a few years ago. So given that there is so much happening, what were the sort of key milestones that you think Solana's achieved in the first, 6 months of the year?
Yeah, I mean, Solana is an incredible ecosystem. It's a robust digital economy that spans every possible thing that might be touching money in any way. It isn't a niche chain. It isn't an app. It is truly a platform for anybody. And I think the things that really make it stand out, one, it's the chain for entrepreneurs. It's a place where the best founders in crypto come to build their companies. What you've seen, despite everyone loves to post the Solana REV chart, but including Solana floor, but underneath that, what we've seen is the app layer continuing to be this like hot spot, and I think that's for me that's really really awesome. Like, you should be able to come somewhere and build a real business on chain. That's what we've seen. We have many companies that are able to survive and live and entirely on the network, and that's pretty cool. I think too, we've seen this kind of like 6-year journey of spot trading, and Solana's emerged as the king of spot pretty clearly. There's been a couple milestones. One, it started as a whisper in terms of Sol USD volume on chain. And now when you look at those charts, you compare people trading Sol on Solana versus central exchanges. It's not even in the same league. I think there's more volume on Solana than all exchanges combined, which is remarkable. But we're seeing that same thing now happen with other assets. We're seeing that with Hype, for example, last week. BTC has seen record volumes on Solana, and even equities like SpaceX, their pre-stock has done like $400 or $500 million of volume in the last 8 months, which is pretty cool. So, and then on the AI side, there's really 2 chains today that are building a platform for AI apps, not just a product. I think there are some other chains that have built really awesome products. There's some really good tokens out there, but from a generalizable platform where anyone can build things, we're seeing tremendous amounts of AI companies launching on Solana or building new things, not just in agentic commerce and payments, but also more frontier things. RWAs. I don't know. I could go on forever, man. Like I track all the same stuff, but yeah, like I think the key message is like this year you can see that Solana isn't one thing, it's everything. And that's been really, really awesome. In my opinion. Yeah.
I agree. And it certainly makes my life easier covering it from a news perspective when it's the chain for everything, when it's the best place for everything. There's so many different ups and downs and different angles that we can touch on. So definitely a lot happening within the Solana ecosystem. I think ETFs generally were a very good marker of Solana's sort of maturity, if you will, as well, over the last, let's say, 24 months. It was a long process, but it happened eventually. And I think it really showed to a lot of people that it's not just a single demographic that's interested in the network, the asset, the user base. We saw this with some of the trillion-dollar asset managers that were on the ground with us at Breakpoint in Abu Dhabi as well. So definitely a lot to be proud of. But I do want to get a bit deeper into some Solana specifics here, because one of the things that was thrown around a lot, let's say over the last 12 months, definitely is this idea of internet capital markets, right? It's become one of the sort of core statements of Solana this cycle. And I want to sort of push you on the meaning there, because again, depending on who you are and where you operate in the world, it has completely different meanings for people. If you come from a poker background, which so many traders do, it means independent chip model. If you're a meme coin community member, then they have a different meaning for it. It's about sort of launching speculative tokens, but Foundation sort of refined it into what it is today. So yeah, from your perspective, then what is ICM? Why is it resonating now with people more so than it was in earlier cycles?
Mm-hmm. Ball, huh? With the poker reference. Someone's been MTTing in their spare time.
Definitely,
yeah. So the original idea of internet capital markets was to allow anyone with an internet connection to invest in the asset, from the comfort of their home. Why is that important? It's important because capital markets traditionally are pretty regional and pretty difficult to get access to. Many of the best stocks in the world in the US are not available to people outside. If you're in the US and you want to invest in Korean stocks or Chinese stocks, actually not so easy. Not something that you can just do. And certainly, what that creates is local markets that are just inefficient. And if they were to be at a global scale and open to anyone, you'd probably see better price discovery. You'd probably see more competition. You'd probably see less wealth disparity and things like that. So I think the noble goal of crypto is to make financial systems open to everybody, no matter where they come from or who they are. Obviously, the crypto community kind of took internet capital markets in its own way, and it became a kind of like it started to mean like startups that were tokenizing their equity or just launching tokens that had nothing to do with their equity in most cases. And certainly that was an interesting model as well. I don't know. It kind of means it really is about like just we just believe that every asset should be open to everybody, and that's the fundamentals of internet capital markets to me.
Yeah, really well put. I like that there's a core vision that unites people, builders and users behind it. So that's really exciting. I want to talk about this idea of all assets on chain. Sunrise obviously sort of pops up in this conversation regularly. New assets being listed every week. We talk a lot about the velocity of new assets coming on chain and being available, sort of second order effect of more liquidity being available. But yeah, the original pitch, as you mentioned there, was that every asset needs to be tradable on Solana. Great goal, great vision. How does Sunrise fit into that vision that Foundation has?
So Sunrise is what we've called a day one listing platform. And, at any given time in crypto and in trad markets, there's like a handful of tokens or a handful of public equities that are newsworthy and everyone wants to trade. And sometimes that's a TGE, and so it's the first time you can trade those things. And sometimes that's something is having a moment or some fundamental change to their business, and people want to trade it. And Sunrise kind of popped up to be this fast listing product where anything that's catching momentum somewhere or that has that people want to trade, there'll be a version of that on Solana that's a real wrapped version of those things. They started with crypto tokens, maybe expanding out from that soon, but can't share too much. And it's just been a remarkable success story on Solana. It turns out that people really do want to keep their money on Solana, and they want to trade the things and keep those assets in the same wallet as they keep their Sol or USDC or whatever on Solana. And because of that, and because of the incredible DeFi infrastructure that powers our spot markets, some of those tokens not only do they have deep liquidity on Solana, but you're getting better prices for those on chain. And the examples that we often give are like Zcash and Hype, where people just prefer trading that on Solana. They just prefer holding those in their Solana wallet, and they're getting lower fees for doing so and better prices on those assets when they do trade. Sunrise has been listing, I don't know, a couple tokens per week. And they're really tapped into the zeitgeist. Like sometimes I don't even know the tokens they're bringing over, but there's something that's catching a bid somewhere in the world. And the team is remarkably good at just like figuring out how to get those on chain and then coordinating with all the various front ends and DeFi platforms to make sure they have availability everywhere.
Yeah, it's pretty crazy how often there's a shiny new thing in crypto. And it's definitely important to be the first one to it. But it's so hard to keep track of. So having platforms like Sunrise and Solana definitely makes it easier. But I guess if we sort of zoom out, one of the main reasons why I was attracted to crypto so many years ago, aside from the core tokens and the coins and the sort of value accrual and all the rest, was eventually this idea of bringing everything that already existed in TradFi on chain and using different rails. I think Solana's RWA ecosystem is a pretty good example of that, right? Real world assets, the rate at which they've been coming on chain is insane. I think in January, we were at about $800 million. And I want to say now we're very close to $3 billion, right? End of May. So that's like tripling in 5 months. The velocity is absolutely incredible there. And I think the most important question that people have around that growth of real world assets on crypto chains and specifically on Solana being faster and cheaper and so on and so forth is like, at what point do we say, okay, we have enough RWAs on Solana? Is there an end point for that?
A couple notes there. I'll answer that question in a second. Yes, RWA ecosystem of Solana has been booming, and it is a huge bright spot for us. You mentioned the growth since January of this year, but if you reverse all the way back to January last year, which was kind of the peak of meme coin season, there was virtually zero RWAs on Solana. I think we've seen like 1,500, 1,600% growth in that category over the last 18 months, which is really awesome. But what makes Solana unique with RWAs is these are not just narratives. These are real assets with real holder bases, and people are actually transacting on these as well, similar to the Sunrise tokens we just talked about. You're seeing the same thing happen with RWAs. I know you guys have been posting about this. I've been posting about this. Record number of holders. I think we had like a 30% increase in RWA holders just in the last month alone, which is pretty cool. And we're leading in transfers and transactions. So people putting these to work, send them around or trading them. And it's honestly not even that close. Solana is running away with the lead on RWAs in use, not just sitting on the chain, but actually being used by people and being held. And I don't think anyone will ever surpass us from this point. I think that's kind of, that game is done. And now I forgot the question that you asked at the end, but
at what point is it enough? Is it ever going to be enough, right? I think as the total amount of assets in the world continues to expand, as anything becomes tradable in the real world, does the sort of the end game for Solana then move with it, right? Is there ever going to be a point where we say that's probably enough RWAs, we'll just sort of focus on trading what we have, or is it really for eternity just bringing everything on chain?
Well, I think there's like 2 or 3 end games. I think the first one is anything that someone would want to own, they should be able to own it on chain. And to be honest, $3 billion is pretty impressive, but it wouldn't even be 0.001% of the world's total like assets that exist that people want to own. So, you know, it's impressive, but I mean, we're not even in the realm of, I mean, I don't know how many hundreds of trillions of dollars of RWAs exist out there. So the first step is getting those hundreds of trillions of dollars of assets on chain in some fashion. I think because some of those are not going to be something that you can own, but there are things that kind of exist there, and maybe banks are doing related settlement and things like that together. And you're seeing that in other ecosystems and on Solana as well. And then the second end game is, okay, cool, we've brought the assets on chain. Now let's put those into internet capital markets. Let's make those, let's open up the access to anybody. So we're not even 1/10,000,000th of the way to where we need to be here. As impressive as it is, the job is not done and not even close.
That's bullish. That's bullish. When we think about RWAs, I think maybe this is a demographic thing, and depending on how old you are or how young you are, you might focus on a different category of real-world assets. I know there's a massive collectibles movement that's happening on chain at the moment, whether it's Pokemon cards or baseball cards or all these collectibles. The amount of revenue that's been generated there from trading volumes is insane. It's huge amounts of growth. But then the more sort of traditional investors of the world think, I love assets like gold, metals in general, silver, even some of the more sort of long tail metals out there that you can't just buy and keep under your mattress or keep in a safety deposit box. And there's great ways to get exposure to this on chain on places like Solana. So how do you balance that sort of, not a dichotomy necessarily, but the two different categories of RWAs that are not stable coins, things like metals on the one end, really more esoteric things like collectibles on the other? Does either of those categories get you more excited? Do you think either of those categories are more valuable to Solana in the long run? Yeah, how do you think about the growth of the different RWA categories in general?
Yeah, there's a lot of commodities coming on chain. We have many different variants of gold, XA, UT0 from Tether or gold. We even have like gold backs. We have even esoteric forms of metals ownership on Solana. And then you mentioned the collectibles growth. This is again another bright spot. I mean, there's so many amazing things. It's hard to underestimate how many awesome things are happening in crypto, but especially on Solana. Collectibles is one of them. We just saw another $1 billion run rate company minted on Solana, Collector Crypts, just soaring. And I would say I still have a dream, which is internet native assets and turning things into assets or tradable assets that aren't easily tradable in other places in the world. So as exciting as gold is, we have this team Dominion coming on chain soon with silver. Like, as exciting as those categories are, they are easy to trade in other places. Gold is one of the most well understood assets in the history of the planet, and anyone in any country probably has access to gold in some fashion, right? And our dollars and our many countries have like a lot of sovereign stores of gold. So this is kind of like a well understood thing. I think the vanguard of taking this huge category of Pokemon cards and sports cards and things like that, and putting them into a liquid market is genuinely new, and that story is still, it's very much in, this is still very much early days. Like when you look at collectibles and then you extend that to outside of just cards, but you look at memorabilia and art and things like that, there's probably, $100 to $150 billion worth of assets to be tokenized there, that don't exist anywhere on chain. And, dinosaur fossils you've seen recently, I just think that white space is really, really big, and Solana is really well positioned to win that.
Yeah, definitely a lot to talk about that's exciting for people being on chain and doing all these really, really exciting things, whether it's traditional assets or some of these more long tail assets. But one thing that I think doesn't get as much attention as it should is the intersection of AI and crypto. And the reason why I say that is I was talking to Hasib, great mind, great thinker, in 2023, and I asked him the same question this year as well. Two very different answers. I asked him about AI and crypto in 2023. He said it's an absolute nothing burger. I asked him the same question this year, and he said it's one of the most exciting, heavily invested in, promising areas, AI and crypto, that intersection. So curious what you think about the very near future of AI and crypto on Solana, and what excites you there? What's happening that really sort of gets you out of bed in the morning?
Yeah, tons. So the first, there's like 3 categories of AI I think about. The lowest hanging fruit is commerce and payments. People are moving. We've I don't want to retread the same things everyone's heard already, but like, there's a real use case emerging for stable coins and agents. It's easier for them to pay for things with crypto than it is with credit cards or banks or things like that. I think the second is the DevX experience. Building apps has never been easier. We've seen, like a huge record number of entries to our hackathons. Even at Solana Foundation, we're seeing a huge increase in the number of people asking for grants and things like that, because there's just so many more people building. It's so easy to build now. And I think the Solana ecosystem has done a really awesome job of making their tools accessible and easy to use by AI. And certainly at Foundation, we've been trying to be a part of that as well with things like the Tokens API, which we launched last week, and SDP, which is AI native tokenization product. And then the last thing is like moonshots. There's tons of moonshots happening. I talked to an interesting project last week that's doing like what he calls inference capital markets, where you can basically pay to, you can like rent other people's LLM credits and things like that. And certainly we have some other moonshots in development here. There's kind of like nothing else other than AI. Like from a technology side, like there's AI, and then there's everything else is a blip, including crypto and what's happening. AI is eating capital markets. It's eating all the capital in the world, all the physical infrastructure, and we're wanting to be a part of that. And we think that what we have in crypto can help fund what's happening in AI. We think what we have can help just accelerate the progress of that category in so many ways. And Solana is, again, not a it isn't like, we've talked about so many different things today. It's flexible enough to be able to tackle anything someone wants to build with AI. And we have a lot more coming here. We have I don't want to say, people have seen the Solana AI handle. We're like pretty close to activating that. I think we're going to blow people's minds away. Like we've been cooking like some pretty cool stuff together with the ecosystem on the product side. And then like later, like probably 3 or 4 months from now, you're going to see like a couple of moonshots emerge from Foundation, again, in partnership with the ecosystem. There's so many big ideas just sitting around the corner. And we have, I don't know, there's just so much speed right now in this category. It's a really exciting place to be in.
Yeah. The amount of investment that's flowing into it, both in AI and crypto products and more native AI products is insane. As you mentioned, it's sort of sucking a lot of the oxygen out the room in many ways. But I think because of that, it's, for me at least, great to see that Solana's positioning itself in a way to facilitate a lot of the sort of future agentic on-chain transactions. You mentioned pay.sh earlier. For anyone who's joining just now or missed that first part of our conversation, what is pay.sh? And I know you launched it in partnership with some pretty big names. So maybe just give us a sort of boilerplate there.
Yeah, so we launched pay.sh with Google and Google Cloud. It started as a wallet for your terminal. So if you're coding with LLMs or you're using LLMs for research and things like that, deep research, very often you'll run into APIs or like paywalls that the agent can't get through or needs a billing account set up. So what we did is we started partnering with third parties, starting with Google, and now there's I think we have like there's at least 100 or 150 APIs now that are available through pay.sh and more every day. But basically, that agent can now simply pay with its own wallet balance for exactly the resources that it needs, whether that's a Google Places request or Google Maps request, or even things like inference from Gemini or Nano Banana if they want to do image generation. You can get data from providers like Birdeye. We just enabled subscriptions and allowances. I don't know if you saw this, but now your terminal can subscribe to services and pay monthly. That's pretty cool with stable coins. Pay.sh is a really fun and kind of like simple way to use your agent and crypto together for useful things. We've got another banger lined up for that pretty soon, but honestly, like at Foundation, I mentioned that I wear these two hats. The product hat is an AI hat at the end of the day. It's like, and like, I think everyone should be building. You should be building. You should be exploring. Everyone should be doing that. It's there will be I just think it's a skill set everyone has to have, and things are moving too fast right now not to be involved as a product builder, even if you're the foundation.
Well, there's some pretty cool ways that even non-technical background people like myself can already get involved and build, whether it's through the vibe coding tools that are available, and then some of the sort of software development kits that you guys have published. But there's a cool project, trynoah.ai, and I know they're really working at the intersection of crypto mobile, so helping people launch there. Great team, bunch of gigabrains, and you can just go in and chat as you would with ChatGPT or Claude, and it's going to give you all these agentic options that you probably didn't think were available to you if you don't come from a technical background like myself. But just wanted to sort of highlight the fact that we can also go and explore some of these new agentic frontiers, and it's really, really exciting to me. I can also quite clearly tell here, Vibhu, that you're passionate and excited about the future of agentic payments. But zooming out, we've again touched on so many different things that are happening on Solana. What else is super exciting to you that's happening on Solana? I know perps is a huge focus right now. Obviously, stablecoins coming on chain has been a conversation for a long, long time. The institutional adoption is another narrative. But yeah, which of these high-level topics, aside from agentic payments, is super exciting to you?
I mentioned a couple of things. I think there are like some like really incredible niche communities developing around things. Or is one that comes to mind. Those guys have been crushing it. We call it Solana's native store value. They just added quantum wallets. You have a quantum safe and like privacy available store of value right on Solana. That's pretty cool. I think MetaDAO has been a personal like interest of mine. We mentioned the token as fossils product. That's something that's was available through MetaDAO. Those guys continue to like find interesting stories and interesting companies to come through there. And then perps, we've been, I think pretty interested in supporting this category. Last week or maybe the week prior, we launched the public perps program, which is basically Solana Foundation's offer and willingness to fund novel perps infrastructure on chain, but also front ends that implements the perps products that already exist. I can't not mention Phoenix here. Despite all the timeline takes, the growth is really looking good. Like I have to say, astounding progress for a month. They've seen record volumes and open interest over the last week, and they have barely even scratched the surface of the kind of markets that are available. And Phoenix is entirely on chains. It's an incredible piece of tech. So those are some of the things that came to mind when you asked that question. But yeah, there's so much happening. Yeah. It's hard to.
It's almost too much.
Play favorites. Yeah.
Yeah, it's almost too much. And you mentioned Phoenix there. I know very briefly name dropped, but the program, the competition that you essentially instigated, I think was in significant part responsible for that growth that we've seen over the last 3 to 4 weeks. So that's been great. Now, I'm going to ask you one very final question because we're going to enter into a quiz now. I see Vlad has popped in. So hi, Vlad. I want to ask you, for all the audience members, myself included, people who are not founders, or maybe they used to be founders. You used to be a founder and now you're working in one of the most successful foundations in the industry. What's the single most valuable piece of advice you can give any founder who's listening to this conversation today, given the sheer number of topics and areas of growth and development that they can essentially choose to build in and provide value in?
Yeah. The most important advice I often have to give is don't overthink things. You need to just ship. And I mean that literally. Like, I think people spend way too much time on things that aren't that important. They spend too much time trying to pick a name, trying to figure out whether something is, something people are going to want. You have to just get things out there and do it quickly. The market is the ultimate test. And oftentimes people stress out about things that just honestly aren't that important. You can always pivot. You can always do something else. Well, you don't have, the only thing you don't have infinite supply of is time. And so when you're a startup, you need to be using time. Like, your one advantage is time. And that means moving as fast as you can without overthinking anything. That's my best startup advice.
Excellent advice. Vlad, welcome back, sir.
Thank you. I'm so impressed. First of all, thank you a lot. It was really, really great. Thank you, Vibu. Thank you, Jack. I have really short blitz for you guys, and we're getting on with our next speaker. So you can answer both. You can do whatever you like, but we should really be really short. So best for investment, crypto or stocks?
Best for investment? Are you asking
Yes.
Jack or me?
Let's start with you.
I would say we're probably somewhere near the local top of stocks, and somewhere in the middle of crypto. So I would say you should probably, I don't want anyone to invest in something on my advice, because I've been pretty publicly bad at this, but yeah, I think crypto is more interesting.
Okay,
I'm
Jack,
going to say both stocks and crypto, but on chain.
There you go. That's a better answer.
Okay, I like that. I like the phrase. So what's better, privacy or regulation?
Privacy.
Vibu?
Yeah, that's a bit unfair. No, if you're in crypto, you probably are not going to answer with regulation. Yeah, privacy is we'll be doing a lot more there, and yeah, I'm pretty bullish on privacy on Solana.
Okay, thank you. Prices of major crypto assets end of this year, higher or lower?
Definitely higher.
No comment.
Okay, we know you're bad at financial advice. Right?
I think I should say lower, and then you can trade the inverse
of balance. There we go. I can't get into trouble for saying this, Vibu. You maybe can. So I'm going to go with by the end of December, I'm going to go with higher total crypto market cap than today.
We're all going to be happy if we was mistaken. So let's say also the final one: bear or bull market right now?
It's a
bear or bull market. Okay.
Deep in the bear.
Okay. And what would you say to Satoshi Nakamoto if you met him in person?
I'll let you take this one, Vibu.
What's your seed phrase?
That's good. Okay, well, thank you guys. We had Solana Foundation here, and I'm really excited to have you guys at our stage. Thank you. You are both awesome. Jack, you're just pure gem as a host. I'm really super excited to have you here as our colleague.
Appreciate you guys. Just want to say very finally, thank you, Vibu, for chatting today. But thank you to Incrypted and all the hard work that you guys are doing in difficult times. I know it's very difficult. It's a difficult time for the world, but you guys are particularly going through it. So thank you very much for putting this on. And hopefully we get to meet in person IRL very, very soon. But thank you all for being here, and thank you for doing this.
Thank you for being here. Thank you for being with us. Bye, guys. I should move on. So right now we're happy to have our next speaker. So who is it going to be? So I'm happy to introduce you to Soumya Saxena, the EMEA and India lead at Base. We are happy to have you here. How are you doing? I guess your mic is turned off. Please turn on before we started. Yeah.
Okay, awesome. Glad to be here. And yeah, I mean, I was listening to the previous conversation. Pretty funny and like very interesting questions. So I'm looking forward to a chat.
Previous organization, that's how we call competitors, right?
Yeah, I mean, I think very highly of them. And very few people know, like I also was very early super team and started in Solana. So I think, yeah, my mindset is sort of like, let's grow the pie together.
You've started in Solana, right?
Yeah, I started with Super Team India.
Oh, okay. Yeah, let's start this. Again, thank you for being here. So we would like to start with your own path because I guess recently Base had some changes in its structure and teams, and I know that we've just met. Frankly, we just met and started our friendship. So I was going to ask. Right now, you are in charge of huge amount of different regions, really different by its nature, its culture, its on-chain behavior, statistics, and so on, regulations maybe. Could you describe in few words maybe what's on your mind as a top differences between these regions and what you can say, what you can underline? Maybe you had already some insights about Ukrainian NCS market that you can share with us too.
Yeah, I mean, so I lead EMEA and India regions for Base, and I think the way I think about these regions are they're vastly different, but underlying, I think, from a builder point of view, very similar. On like you've got really ambitious builders, you've got a lot of talent across these regions. Some may be slightly further away than others, but I think that desire to build something meaningful exists sort of like everywhere. And yeah, I mean, Europe, Middle East. I mean, European region in general is like slightly more regulated with MiCA, and the Middle East region again, especially Dubai, has like done an incredible job at setting up Vara. And so you've got like some regions where there's like a lot more clarity. So which means that builders and founders, especially serious founders, take this space a lot more seriously, and they're like constantly thinking about how we should, building the space. What's the opportunity? What's the tech? Where's the future heading, and where can we carve out an opportunity for ourselves? Whereas, say India is slightly uh, less regulated, and that means it's gotten, and as a market, India's got lots of builders. So you've got a large number of early founders, builders, but because the regulation is like not there yet, you've got those founders either moving to Dubai or other regions, or thinking about building like smaller scale setup. So yeah, I mean, different markets, different regions. What we think about generally from like the chain or network point of view is to go where the builders are and sort of create support structures for them there. So if, for example, yeah, I mean, for European markets, we'll do more high touch activations. For Indian market, we'll do a more like larger activation, which will allow for a lot more builders to come in and work with us. So much more deeper programs here, much more lighter but broader programs here. So it just depends on the market a little and the persona of the builder we are working with.
Yeah, speaking of like the combination of markets and the market state that we have right now this year, well, everything's changing, and I was going to ask, what changes have you like seen and observed in like behavior of founders and builders? So, what changed in 2026, and maybe lately, Q2 this year?
Yeah, that's a good question. I feel largely this year, especially, I think there's this notion of AI has taken off so like fast, and the intersection of crypto and AI has become like, it's a lot of blurry now, and it's become increasingly a lot of builders and founders are evaluating that space, and I feel there's a see there were a lot of builders that had come in earlier to explore the space, but after prices crashing, you see this every cycle, they sort of churn out. But the builders that stayed are even, like they're more motivated than ever, and especially at this intersection of crypto and AI, crypto and stable coins with like Clarity Act coming in picture in the US. So there's a lot of, I would say, excitement within the no. So if you're, it's just a bear market, and people that have seen these cycles have seen these cycles. So it's more of, hey, we're gonna survive this market, and this is also like the best time to focus, heads down, build, because prices are down. The market is not after you. The community is not badgering you. Constantly thinking, you can think from first principles, you can think from a product lens, and you can build something truly world class and meaningful and innovative. Uh, yeah, that's what I think this market is about, and that's what I've seen change in builders. There's this whole set, right? So you've got people that are churning to people that are doubling down heavily. Uh,
Okay, and well, speaking about changes, what do you think changed for Base itself, for the whole ecosystem, for the teams, for like maybe challenges that you're facing with, or goals that you're setting? What changed this year for you, or maybe last month?
yeah, I mean, I think the biggest focus in our like 2026 strategy is to pick few things and do them well. And the positioning for us is now completely honing in on-chain finance. So initially we were focused on consumer, we focused on gaming, we're doing like a bunch of things. Now I think the focus is, hey, we're gonna let other people do that. And we're gonna hone in on this like on-chain finance category, which we excel at. So we've got like Coinbase's trust, institutional reputation, and we're gonna double down on that reputation, and build trusted systems and trusted products. And yeah, so I mean, that's the larger vision. I think the focus for us now is completely on trading, on payments, on builders and agentic builders. So I think like we're going to focus very heavily on these three verticals, and yeah, and see where we get.
Can we dive deeply into those product strategies that you currently have in Base? I guess for 2026, well, according to the documents that you have, you're like switching from like and shifting from speculative capitals to payments, commerce, everyday applications together with Base App, I hope. So which sectors of consumer apps, for example, on your view, will make the breakthrough for Base, maybe for your regions, maybe for like globally, let's say, this year?
So it depends a little. I feel like one, on the app side, our focus is to make sure that consumer app founders can get distribution through the Base app. So from a like what are product categories that consumer founders are building that are interesting for us is like largely on-chain finance, because it sort of ties into our vision and narrative of focusing and becoming like the trusted home for global finance, right? And yeah, so that's the bigger picture focus for us. On payments and agentic infra, that is also like those verticals are exciting, and we've seen like real use cases emerge, right? We've seen like lots of stablecoin players, we've seen like invoice discounting companies, we've seen working capital companies, and I feel the more sophisticated these primitives get, and they've become really good, especially in the last couple of quarters. And the more we'll see like innovation in on-chain finance, you'll see like a lot more tokenized stocks. You'll see a lot more, tokenized real-world assets and that sort of stuff, which initially were just like conversations that, hey, this is going to happen someday. We have reached a point where it's happening today, but it doesn't have deep liquidity, right? But we're gonna go from here to a point where people will find these pockets of product categories and build and solve for arbitrage opportunities within those pockets. And yeah, that's what I think. And so if I had to pick something from I'm gonna pick like on-chain finance as a category, and that's a slightly broader category, obviously, right? Like from consumer point of view, it includes a lot of like tokenized stuff, a lot of working capital requirements. Anywhere where you are coordinating capital, it's just far more efficient to coordinate capital on chain. And because it is efficient to coordinate capital on chain, you can reduce the pricing for and create arbitrage opportunities for different product categories. So you can have invoice discounting at a much cheaper price. If you were coordinating capital on chain, you can have like better lending rates. You can have like the whole 9 yards is open, just because it is far more efficient to coordinate capital on chain.
Our previous speaker actually said that in crypto we can see only two big chains actually doing something for AI and like building infrastructure for AI. Can we say that apart from our previous speakers, it's also Base and Coinbase in general?
I would say so. I feel like, one, it's a huge focus area for us, and we've sort of pioneered this with sort of Expo Node 2, microtransactions. We've got the Base MCP that went live a few weeks ago, and that, I mean, we are razor focused on agents, and we've doubled down to a point where you would have seen tweets from Brian saying, like, we're building for agents and we're building products that serve these agents. So I think we gotta think through you gotta reimagine everything from a first principles lens of what does an agentic world look like, and then create products for that world. And Base MCP is one of those things, and we're gonna see everything moving in that direction where it's intent first as opposed to execution first.
Yeah. Okay. Could you tell us more about the NPC that you just launched?
Think of it as a bridge between your Claude, your ChatGPT, your Cursor, whatever like CLI or tool you're using to chat with AI. Think of Base MCP as a bridge or a connector between that tool and a Base account. So that's essentially it. A Base account can now then give you ability to access this on-chain world of any workflow, right? So any agentic workflow, you can set up a wallet, you can transact, you can swap, you can create trades, you can invest in a stock, you can do whatever. Anything that is possible on chain is now accessible through the Base MCP. Yeah, and I think that is it's a huge unlock, especially given that it's in a trusted setting, in the way that we've built it.
Isn't it kind of competitive for the Base app? Like, you use like your regular ChatGPT or Claude or whatever application you usually use, like, but maybe it could be also inside of the Base app, or I don't know. So how does it work, like in terms of connection to Base app?
Yeah, it's a good question. I mean, like if you take a step back, a lot of these products that you build are gonna be doing similar things in different formats. Now, for us, you want to build the best product experience and be able to offer a menu of services to a user. So the user for a Base app is a different user than the user for someone who's using agentic infra or who's using like Base MCP. But what we're trying to do with Base MCP is we're gonna give like the tools to other builders to use Base MCP to be able to offer services to their customers. So I think it's a different model It is obviously like it can allow for like similar functions like swaps and access to assets, but it is fundamentally different in our approach to catering to a different persona, and the product experience is obviously like really different.
Yeah, I understand. Thank you. It's been a lot of different news for Base recently. For example, the Azul, right? Azul is it called Azul mainnet launch, right? Could we tell more about that?
Yeah. So one, I was personally very excited about Azul when Azul was going to launch. I think for us, being Ethereum aligned has been like a huge value prop. And what we wanted to do was how do we move faster? And from that lens, I think Azul is our first network upgrade that is like independent. And yeah, I mean, we are quite excited about it. Happened, I think last week or like 3 weeks ago, and you would have seen the new base logo uh, with this Azul thing. Anyway, I mean, like the big focus with Azul is like our focus on performance, our focus on being able to scale the network, and you would see that with our like newest stats, everything uh, is now focused on how do we create the best product suite out there, which allows builders to build high quality apps and products that can cater to this large global finance vision that we are going after. So this, I mean, the big change, think of it as like the big change is just performance and our ability to independently upgrade the system. We've sort of also, I mean, the most critical pieces that we have now say brought in multi-proofs, which allows like different routing to validate something, and it's just a faster, more scalable way to agree to something, to an event happening. And it also includes like the Osaka upgrade, and so we're still like fundamentally Ethereum aligned, but we're able to move much faster.
Thank you. Getting back to the AI era, how do you see the future of decentralized applications interfaces in general, or specifically on Base, or together with Base? Given the development of AI, its integrations like your MPC or like some other solutions.
I think increasingly I've started to feel like with AI is that the risk of building something on chain has increased, because when
Yeah.
you're building like it's just harder, right, to be building something. And so what you need, it's gotten increasingly easier to build with AI, but it's also become much harder to build in its own way.
In both ways.
Right, it goes I mean, it's always a sort of a chicken and egg problem with
Yeah.
technology that like moves fast. And yeah, I feel on the decentralized application piece, from an AI point of view, I'm excited about just being able to build fast across. Yeah, I mean, I was chatting with the Eigen team a few days back, and they're one of their like 18-year-old, 20-year-old devs built something that beat Google in AI or something. So I was like, the speed at which people can ship, if they put their mind to it here, is insane. We've got lots of problems for people to solve, and a large amount of them are focused on this, like data coordination and capital coordination problem statement. So yeah, let's see. I mean, I'm just as optimistic as I'm like, hey, this is gonna be hard before it gets better, but it will get better.
Okay. It's interesting that you touched the security issues, and it's obviously a big problem for developers. Do you have some current programs for developers, not in terms of security, but in general, so helping them actually to ship, as you said, quickly new products, and what do you guys have right now for builders?
Yeah, I mean, so from a program point of view, we've launched base batches, like the third version concluded in SF recently. And so we continue to put out these like calls for applications where you can sign up if you're a builder, if you're building something in this large on-chain finance category that is aligned to our vision and our mission. We're happy to like look deeper and find ways to support you. So that is through batches. And from a problem statement point of view, I think the crypto x AI piece is really interesting, and we think deeply about that. So like even in this batch, you would see projects that were building credits for agents, that were building credits for creators, a lot of focus on capital coordination. I feel like at the end of the bottom line, it comes down to, can you create like better infrastructure for the world to coordinate capital, and everything is a function of that. So investing in tokenized stocks is essentially people coordinating capital to create value for each other. People investing in real estate, it's the same thing, right? Like being able to lend and borrow money in different settings and different worlds with different personas and credit histories, and still being able to access capital, still capital coordination. So I feel like that as a primitive is really important. And I would urge builders to think deeply about it from first principles, that, hey, can I take a problem statement that exists currently? There's an existing solution for it. There's a large potential financial bank for it that focuses just on agriculture or climate or something like a real problem statement, and see, can I help them coordinate capital better? And 9 times out of 10, you'll be able to help them coordinate capital better. And that means you'll be able to create a real business with these people as customers. And then eventually you can expand into that specific use case by evaluating that industry a little bit.
Okay, thank you. Before finishing with our quiz, the final question, or maybe advice, I would say, what is the best piece of advice for our audience, the Web3 community and builders that we have in our region, from you personally?
I would say, like, especially every time people have doubted this industry has bounced back like 100 times over. We're again in that phase where people are doubting the industry at a point where the world is looking very different, right? We've got the Clarity Act come in, we've got real regulation come in. Every single major bank and fintech is now thinking about crypto rails, is thinking about stable coins, is thinking about blockchains in their own setups. So like these two things are not matching. And I feel like there's an arbitrage opportunity here for you as a builder to double down and build in this space, solve a real problem, build and like be at it for a fair amount of time, and you'll create massive value for yourself and the world.
Okay, thank you for this advice. So let's finish with our blitz. You can answer like whatever you like, short or long, but I guess we can have this interesting one. So what's best for investment, crypto or stocks right now?
Right now, I mean, like the way the market is going, like 100%, I would DCA in. I mean, no, not financial advice, but I would pick crypto personally.
Crypto DCA is better rather than stocks, right? Okay. What's better, privacy or regulation?
Yeah, this is a good one. I feel like it's really hard to be able to bring our vision of bringing like billions on chain and build a better world without regulation. But not at the cost of privacy. It's a very tricky one. Yeah, I mean, I feel like there's got to be a balance. If I had to pick one, then I'd pick privacy. And
Okay. Crypto prices at the end of this year, higher or lower?
Oh, that's a tough one. It's like my personal sense is it's gonna be higher. Just like my sense of the market.
Okay. So for now, is it a bear market or bull market?
Oh, it's a hardcore bear market. And,
Okay. I remember that you said like everybody who will suffer this market. Well, let's continue. Will suffer at any other market because obviously, really furious market. And the final one, I guess you like it. What would you say to Satoshi Nakamoto if you met him in person?
Say that again.
What would you say to Satoshi Nakamoto if you met him in person right now in 2026?
Wow. Yeah, I would probably like sit down and be like, "What were you thinking? Like, how did you come up with this?" And yeah.
Okay. Thank you. It was really awesome. Thank you, and I wish for Base to grow and cope with all of the challenges we have currently in our Web3 space this year. And I hope to see you guys in Ukraine at Incrypted Conference. Maybe next year. I hope we can bring and build together a community here in Ukraine. Thank you for your time. It was really awesome. I have to leave for the another speaker.
Awesome. Thank you so much for doing this, and thank you so much for inviting me. And great chat.
Thank you. It was really great. So, and we have our next speaker, who's going to be. Okay, so we have Arik from OKX. Actually, Arik is Web3 Growth and Operations Director. Today we're going to have a keynote speech about the OKX DEX, Exchange, OS, and beyond. So, how are you, Arik?
Hi, Vlad. Great. Thank you for the invite. Appreciate it. It's sunny weather in New York, I have to say,
Okay.
but I wish I would be in Ukraine. It's been a minute. Yeah.
It's not so sunny, frankly. We have a week of hard rains, but I feel your love and energy. So thank you for being here. Should we start with your keynote, right? Should I help you with it?
Yeah, that would work. I would appreciate if you can share the presentation on your end.
Yeah, we have it here, bro.
Thank you for everyone for tuning in today. So today we're going to be talking about quite a few products, and I guess like some of you might be familiar, some of you might be less familiar with the current OKX Web3 product suite. But today in today's agenda, we're going to cover OKX DEX, Exchange OS, our agentic wallet, our wallet itself, and pretty much what other things we are looking forward to. Can you go for the next slide? Thank you. So for OKX wallet, so kind of like the whole idea was relatively simple. When you look from the CX perspective, right, like on the user landscape, you see that some users are maturing and they need more advanced products back in the day. So we launched the OKX wallet in 2021, initially branded as MetaX. And later on, we saw quite a big adoption. So right now you're able to pretty much manage cross-chain assets, do DeFi, pretty much log into any Web3 dApps and kind of like explore the whole nature of Web3 itself using OKX wallet. For OKX wallet itself, it's non-custodial wallet, and right now we support over 100 chains. In terms of the current user interface, you would be able to navigate to NFT Marketplace, DeFi Earn Aggregator, OKX DEX Aggregator, and quite a few other products. If you haven't tried it out yet, I highly suggest to have a look and give it a try. Next slide. Yes, so for OKX DEX, OKX DEX aggregator is quite interesting and unique product. You're probably familiar with 1inch or CowSwap. Right now, we are within top 3 aggregators on the market. And generally, our engine is our router, right? So our router provides quotes on different assets. And let's say you want to swap long tail or short tail assets. We would try our best to find the best route and pretty much let you provide the best, let you get the best quote out there. In terms of settlement, it works quite fast. For the next one, if you can go, Vlad, thank you. In terms of the current state, so OKX DEX supports over 40 chains. We aggregate quite a lot of pools, even like those liquidity pools with relatively small liquidity. And right now, pretty much you would be able to find almost any token which exists out there and trade it with OKX DEX. So in terms of the features, we do have general swap, which is pretty much market order. We have limit order capabilities. We have DCA. I think like it was covered earlier about like what is the best approach, how to kind of like invest. I guess like it's not financial advice, but most people would DCA over time, right, on with certain frequency. And we also have a bridge. So for OKX DEX itself, the router consists of few types of aggregation. One type of aggregation is AMM DEX aggregation. And then there is also RFQ, where there is a lot of market makers, which will be able to provide competitive quotes. And then there is also intent part to it. So depending on the most effective route, we will use multi-hop to kind of like find the most optimal quote for you guys. For the next slide, if you can go. Thank you. Yeah, so here you can see pretty much our terminal, right? You would be able to see pretty much KOLs which participate there. You would be able to utilize certain strategies, and depending on your needs, you might use different features within this product. Highly suggest to have a look in your own free time. But pretty much it's extensive product suite which can be utilized by professional traders as well as newcomers. Next slide. Yeah, so OKX DEX consists of 2 parts. First part is our retail facing business, and second one is our B2B. So for the value prop out there, you would probably think like, hey, can I use OKX DEX everywhere? And the answer probably depends whether we have a partner who is working with us and utilizing OKX DEX. So right now, if you are playing with Phantom Wallet or MetaMask, probably we are covering some of the routes, depending on whether our quote is competitive enough. And if someone have a question in regards of like, hey, is there like the best aggregator? Technically, the answer would be no. And the reason is quite simple, because whenever you tune any model, you would always need to tune it based on certain data. And then like based on the certain data, you would have certain points where certain models perform better than others, and cases where they would perform worse than others. But right now, I guess like if we compare it to major competitors, we are relatively competitive in terms of quote performance, latency. And in terms of the current product suite for our API business side, we do support SDK implementation. We do support self-host API, and we also have CPI, which can be used by some advanced traders. Next one. Yeah, again, for I guess for the key partners here, I guess I mentioned some of them before. So we partnered with Phantom and MetaMask relatively a long time ago. The most recent partner is Ledger. So anyone would be able to do swaps within the Ledger using the OKX DEX. There is some DeFi partners on our end, bridges which use OKX DEX for either solvers or in between transactions. And then there is trading terminals like FOMO, GMG, and DEX tools. Also, we do have our MCP and skills, and for MCP and skills, I can expand a little bit more later. We do have Market API, which is pretty much super useful if you're trying to set alerts and you've been using pretty much AI in your daily work. So it can be achieved relatively easier. So you can query historical data, trending insights, and then there is also security API on our end. Next one. Okay, so the most recent initiatives that we announced was actually ExchangeOS. And ExchangeOS is part of infrastructure play. So if we look from the perspective of OKX DEX, right, we have to B and to C side. So ExchangeOS is a relatively new product on our end, which is powering which ideally would power in all the financial markets in the future. It's built on top of the X layer, and pretty much idea is everyone would be able to launch prediction markets, perps, customize it based on their needs. And right now we just launched our prediction market, which is pretty much acts as proof of concept for ExchangeOS. Next one. So we also have our on-chain OS stack focusing on agents, right? And you can see here easy way how you can pretty much use agentic wallet within your Claude. Next slide. Yeah, so if we look in all the products that we right now are focusing on AI, that would be agentic wallet, that would be AI toolkit, it would be our DEX aggregator, right, which lets your agent to execute transactions using OKX DEX. And also we launched payments. So pretty much it's pay-as-you-go basis. Anyone would be able to utilize our current partners pool data and implement it with their agents or AI itself. That's pretty much quick overview of OKX DEX, ExchangeOS, and other product initiatives that we have on our side. Thank you.
Thank you, Arik. So few questions from our side. Maybe audience would also would like to ask any questions from official OKX representative. So I would say that centralized exchanges right now is the #1 tool, application, and a friend inside of crypto Web3 space in general of any guy. And we all use it, we all have it, we all like it, we all we have, like, everybody has their own preferences, obviously, but like having this level of popularity, this level of use cases, products, etc., etc. So what do you think should be next big thing for OKX specifically, or exchanges in general? Because for now, it's really the whole world in your pocket, in your smartphone, in your laptop. So it seems like you covered almost everything, you know, like it's like it has everything. What do you think should be the next big step?
The next big step is actually frictionless experience. So I guess, like, on our side, we are doing our best to make experience as frictionless as possible for crypto and normal users, right? But then, like, definitely from my personal perspective, it seems like there is lack of onboarding right now into crypto. And again, like, if we're talking about centralized onboarding experience versus decentralized onboarding experience, that's quite a different experience to have, right, for the user. And the major step is to figure out the way how to, let's say, I think like it's bold to say, but like pretty much on board was 1 or 2 clicks, right? I think everyone is attempting this right now. Like there is a lot of startups who are focusing on frictionless onboarding experience. But I think there is definitely room for all of us in the space to work on it. And this is the way how we would be able to onboard more or build more crypto native users, right, in the future.
Okay, so we as Incrypted, we really believe that education could be actually the major key to onboard next billion users. Let's say it really popular and common idea. What do you guys believe will help to grow the Web3 family and bring new billion users here?
Well, as you mentioned, education is definitely one of the core aspects, right? But then I feel like beyond education, there is also some approaches which were taken by some companies where they abstract crypto or blockchain, right? And then like at some point, you see like, hey, a lot of people who are actually not familiar with crypto are using this. For example, a good example would be Polymarket, right? I think like when it comes to onboarding experience or in general user experience, some of them are not even familiar with the fact that they are doing it on chain.
Yeah. You actually mentioned that you've started the path for creating product on the prediction markets. Will it be similar to Hip4 on Hyperliquid or something else? So, and why you decided? Is it because big market or because like it's just like native next step for the exchange to go into these markets?
So we launched a product called OKX Outcomes, and right now, pretty much idea is focused around the fact that it's more a growth tool at the moment, right? For us, we think that it can be a pretty good experience that everyone can give it a try and kind of like see how well they can do, or pretty much enjoy the actual fun experience, right? Being a fan in the World Cup. That's our current view. But I guess like when we are referring back to like the question, is it like similar to Hyperliquid? I think the product from our end is going to be totally different. So I don't think I can disclose much here right now, but
yeah. But can you disclose the like types of markets that you can cover? So you already mentioned sports, I guess.
That's right. So so far, OKX Outcome is focusing only on World Cup. But idea is to look more into different sports, right? And also maybe different types of market structures too. So yeah.
Who's going to be your favorite team at the World Cup?
To be honest, I'm not sure. I think it would be France, but again, I haven't decided. Unfortunately, haven't had enough free time to decide on favorite team. But let it be France. Yeah.
Okay. I like that answer.
How about you?
I of course hoped it could be Ukraine at the World Cup, but unfortunately no. So yeah,
I know, right? But
I'm an all-time fan of Spain. Maybe I won't change my my priority this year too. So the next question will be about the AI era, right? So everybody's talking about AI, everybody's trying to build the products, everybody's watching the pre-IPO and the IPOs of the huge companies, what will be happening with Anthropic, with OpenAI and all these guys, what products will they create? And a lot of questions happen to be discussed during this conference and around the Web3 space about the security, the Opus by Anthropic and everything. So Let's divide it into a few smaller questions. First of all, how do you personally and how do you guys at OKX look at these events happening in the world of AI? What do you see? The threat? What threats do you see, and what opportunities do you see for OKX and the whole industry of exchanges?
So I think from centralized exchange perspective, cannot give much comments here, but from OKX Web3 side, definitely can share more. So right now, we definitely see a lot of convergence, right? Like between traditional finance and Web3 itself, right? Or crypto and blockchain. But when it comes to actual benefits out there, right? If we look into financial markets, right? Financial markets have limited trading time, right? Like it doesn't work 24/7 right now. So it seems like in the future, there is definitely room for this. And right now, like numerous companies are attempting to enable 24/7 trading. And I think there is already a few which enable it on their side. It just depends on whether the infrastructure is ready. So on our side, we are actually working with Xtalks team relatively closely. And for OKX wallet or OKX DEX users, they're actually able to trade Xtalks right now on different chains. And Xtalks will be also coming to Xlayer as well. So
Okay.
this is definitely a big thing there. But for traditional finance companies, right, like their perspective on why crypto is beneficial, right? First is distribution, right? You would be able to access the level of distribution which was never seen before. I guess there is some sort of distribution when it comes to foreign exchanges, right? But those are not frictionless experience, right? So the question is like, how frictionless the experience going to be, and the question is like, how regulations are in particular areas.
Okay, thank you for the answer. So we actually don't have any other questions, but we have a small blitz where you can answer really quickly or have a big answer. So where do we have? Okay, best for investment, crypto or stocks right now?
Not financial advice, crypto.
Okay, yeah. What's better, privacy or regulation?
Regulations.
Okay. Crypto and the prices at the end of this year, higher or lower? Bitcoin. It is Bitcoin.
What is the end of the year? Is that's I guess
December 31. December 31. December
Okay.
30.
Not financial advice, but I guess we are relatively low already, right? So I assume it should be higher, but
Okay. What do we have right now? Bear or bull market?
definitely bear.
Okay. And the final one, what would you say to Satoshi Nakamoto if you can meet him in person right now?
I would probably ask if it's possible that he's gonna burn the rest of the supply.
That's a good question. The worrying question, I would say, right?
Yeah.
And the final one, what's the best piece of advice for our community builders, retail traders, and everyone we have at Incrypted?
Yeah, so I think like one of the biggest advices, because I'm relatively familiar with Ukrainian crypto markets. I guess my personal advice would be trying to use more Twitter than Telegram in certain cases for quick updates, right? To understand what's going on in the industry, have your personal opinion. That would be definitely useful. Second would be if you're interested to actually go build something meaningful, we definitely would love to chat and share more expertise from our side, and see if there is a way for us to work together. And third one would be never stop building, because I guess the markets can be bullish, bearish. It's always a good time to build. During bear market, it's even better to build, because then you would be able to, be able to find the product market fit.
Yeah, that's nice. That's nice. Thank you. So we have Ari Shinkarevsky, Web3 Growth and Operations Director at OKX, our all-time friends and partners. Thank you for support of our conference. It was really nice to have you here. Thank you for answers and insights.
Thank you, Vlad. Appreciate everyone's time, and feel free to reach out to me on LinkedIn or Telegram or Twitter.
Thank you.
Thank you, guys.
Thank you, bro. So we should move on, and we have our next speaker. So we have Kyle from Optimism, actually Chief Business Officer at Optimism Foundation, with the keynote today. Thank you for being with us, Kyle. How are you doing?
Yeah, Vlad, thanks for having me.
Where are you from?
I'm from New York, and calling in from the Optimism headquarters in Soho here in New York.
Wow, that's great. Actually, majority of our speakers today are from New York right now. We are happy to have our American friends. So yeah, we have a keynote, and the stage is yours. Let me show it, and you can start already.
Yeah, great.
If you need my help, I will be here. Thank you.
Thank you, Vlad. Yeah, Vlad, thanks to you. Thanks to the Incrypted team for having me, and everybody here who's joining from the Ukraine and across the region. I'm going to take 15 minutes or so on a topic that I think is really important, and it's a shift that's happening right now in crypto infrastructure. And it's one that I think maybe most people are not tracking quite yet. And that's what we refer to as programmable financial infrastructure. And this is a category that we're very focused on. And today, 5 of the world's largest crypto exchanges have moved in the last 2 years. We're talking about some of the biggest names that you're familiar with: Coinbase, Kraken, OKX, Upbit, and Bitpanda. In each of these centralized crypto exchanges, they're building different products for different markets with different regulators, but they're all operating on the same chain stack, and that's Optimism. And when we look across these 5 exchanges, we see pretty impressive numbers. This is backwards looking. So this is what's already happened. This isn't an estimate of the future. This isn't a projection. This is the numbers that we are seeing across these 5 exchanges on the OP tech stack. One is $495 million in application revenue in the second half of 2025 alone. 6 billion transactions and 5.5 billion in smart contract held assets. This isn't like experiments that are happening. This is a pattern that we're seeing repeat across crypto exchanges. Before I dive in a bit more on each of these crypto exchanges and what they're doing with Optimism, I wanted to give a bit of background on Optimism. We started in 2017 as a research project at the Ethereum Foundation. Carl, Ben, and a small team working on a scaling problem. Jing Wang joined and pushed it from a research project into an actual product. And they ended up inventing optimistic rollups, fault proofs, and sequencer architecture. And these are the foundational ideas that are powering the entire L2 industry today. And so there's a really deep and rich history here at Optimism, which we're excited about. When the Optimism stack was ready, the team made a very important and consequential decision. They decided to open source the OP stack under an MIT license. What that means is anybody can fork it, anyone can build on it, and anybody can leave at any time. And the hypothesis here was very simple. Good infrastructure earns the right to be built on. And so we don't license to try to lock people in. People have the freedom and the flexibility through this MIT license to come and go as they want on the OP stack. And because of this, today more than 50 chains and 3.5 billion transactions are on the OP stack. A little known stat is that close to 15% of all crypto activity, these are all transactions across all of crypto, actually happen on OP stacks. 65% of all L2 transactions and 16 billion in TVS. And so again, the OP stack is really the foundational infrastructure layer for a lot of the largest companies in the world. Okay, so I want to talk through the 5 exchanges that have built on top of the OP stack and tell a little bit of the story of each one. So Coinbase built Base as a DeFi platform. This became the largest L2 on the OP stack. It has close to $5 billion of TVL. Roughly 50% of all DeFi and L2s sits on Base. When Morpho launched on Base, it went from 350 million to 2 billion TVL in under a year. Base now generates 13x more fees than Arbitrum, 13 times as many fees as Arbitrum, and more fees than any other non-Ethereum chain combined. This has been a breakout success by a centralized crypto exchange. Next, I want to talk about Ink, which is Kraken's chain. Kraken built Ink as a vertically integrated revenue stack. This means DeFi, perps, lending all chain. They white labeled Aave v3 for it in a product they called Hydro. And they pulled it over 120 million in deposits in less than 24 hours. For other competitors, with Aave v3, it took over 2 years to hit that same number. They did it in 24 hours. And 99% of Ink's first million users had no prior on-chain footprint. And so again, a really great success story of a crypto exchange building their own chain. Let me talk about XLayer by OKX. I think we just had a speaker on from OKX. OKX migrated XLayer to the OP stack last year. ICE, who's the parent company of the New York Stock Exchange, they invested over $200 million into OKX at a $25 billion valuation. Why? Because New York Stock Exchange listed tokenized equities will settle on XLayer for OKX users in the second half of this year. Again, this is a very real use case of OKX and XLayer. All right, I want to talk about Giwa. Upbit, which is the largest exchange in South Korea, is building Giwa for Korean and Southeast Asian exchange native use cases. Requires programmable sequencer policy engines from day one, And the regulatory angle is baked into the chain architecture. It's not bolted on. Again, this is a great use case in Korea with Upbit, one of the largest exchanges building Giwa. And lastly, I want to talk about Vision Chain by Bitpanda. Bitpanda launched Vision Chain in March this year. It's the first fully managed OP enterprise client. It's MiCA compliant in the EU, which is important for being to operate with exchanges. It has a EuroPeg stablecoin for gas, no FX friction for institutional users. It is white label partnerships with major European financial institutions that are in development. These are large banks in Europe. And for the European audience in this room, this is the most directly relevant of the 5 that I'm talking about here today. And so again, we're seeing 5 different large investments being made by crypto exchanges. They all ran the math. They all made the same decision of who they wanted to work with. So why did they choose Optimism? Well, reason number 1, for every dollar in processing fees on the OP stack, chains return $10 in application revenues. Chain owners capture both sides of this ratio, and operators shared in both the gas fees and also the app economics. That's a 10-to-1 ratio. Reason number 2 is sovereignty. Every OP stack chain runs its own sequencer. Compliant enforcement, fee policy, custom asset rules, all programmable at the sequencer level. You can halt one regulator asset without touching anything else on chain. On a shared chain, that's not possible. On your chain, this is possible. The sovereignty is important here. The third reason they're working with Optimism is speed. We can go from signed contract to live in 8 to 12 weeks. If you're building in-house, that takes 12 to 18 months and costs somewhere between $1 and $5 million, plus a dedicated blockchain engineering team that you're going to need to spin up. The speed here for working with OP is day and night compared to going it on your own. And lastly, reason number 4, they're choosing to work with Optimism is because they get an ecosystem on day 1. When Inc. launched, Velodrome was a day 1 liquidity partner. Tidro went live with Aave v3 already committed. Chainlink, indexers, bridges, wallets, they're already integrated across 50 chains. Our partners, they're not starting from 0. They're starting with the credibility of this ecosystem. So again, these are the reasons we're seeing Optimism become the home for these centralized exchanges. And very specifically, when we think again about Europe, MiCA is live now in Europe. The US has clarified token securities. Banks are explicitly authorized to custody and trade digital assets under recent OCC guidance. JP Morgan, BlackRock, Visa, they've already walked down the regulatory path. And so we view the window for owning programmable financial infrastructure, it's open right now in a way that it's never been before. And we're incredibly bullish as we look forward in 2026. So thank you. And with that, I'm happy to take any questions.
Thank you, Kyle. It was really nice. And it was really, frankly, impressive path done by the foundation and by you too. So let's start with the problem questions, the issues that we have here in the industry. First of all, the market that we currently have at Web3 space. So do you see a problem with narratives and with lack of liquidity and because of the shift of attention of people, funds, retail users, builders into AI. We're faced with the problems of shortening liquidity, shortening interest, and etc. So how do you see optimism inside of the challenges, and do you guys prepare for like better times or worse times? So how do you see our future here or this year at Optimism?
Yeah, totally, Vlad. If you think about crypto as the price of tokens, then obviously right now the market is way down, and that's discouraging. But if you think about crypto as financial infrastructure that's being adopted by the largest companies around the world, it's incredibly bullish. And that's the way that we think about it. When we look at 2026, the pace and rate of adoption by the largest companies in the world is absolutely incredible. If you look across fintechs like a Revolut, if you look across centralized crypto exchanges, if you look across payments companies like an Adyen, if you look across financial institutions like a New York Stock Exchange or a JP Morgan, all of these verticals are aggressively moving into crypto. To put it in context, right now globally, we're talking to 215 different very large enterprises who are making decisions about moving into crypto right now this year. And so again, while like token prices may be down, the actual like impact around infrastructure the industry is having is very, very material and very bullish. When it comes to optimism, how are we preparing for this? We're actually leaning in. And so while other companies are maybe pulling back, they're doing hiring freezes, we're actually going the opposite direction. We're aggressively expanding. We just opened up an OP entity in Japan, and we have people on the ground. We just opened one up in Korea. We have people on the ground. We're hiring aggressively across product, engineering, go-to-market. And so we see a huge opportunity. We're leaning into it. We're aggressively investing in it because we think 2026 is the year these large enterprises are going to make decisions.
Okay. What narrative specifically can you underline for us, for the audience, as those who are in the focus of those enterprises entering the Web3 space right now?
Yeah. I mean, let's talk about traditional stock exchanges. The New York Stock Exchange, the largest exchange in the world, they are going to launch 24/7 instant settlement trading on chain. So they're heading down that path. They've publicly talked about that. The moment that they publicly announce that, that's going to create a cascade effect for all the other public exchanges. Think about the London Stock Exchange. Think about in Germany. Think about in France. If I'm the CEO of one of those exchanges and the New York Stock Exchange launches 24/7 trading with instant settlement on chain, you can bet that I'm going to get a phone call from my board of directors asking me, what are our plans? And I can't be caught flat-footed if I'm the CEO of one of these exchanges. And so that's just an anecdote. The New York Stock Exchange doing this, when they announce exactly what they're doing, that's going to create a cascading effect through this whole vertical that's going to be very positive for crypto. That's one example. Let me give you another example. If you look across fintechs, you take like a Revolut, they publicly have said, hey, we are leaning more into crypto as well. They're offering crypto products. They publicly talked about stable coins that they want to launch. So again, that is one of the largest fintechs in the world that is leaning fully into crypto, and that will have cascading effects through the fintech vertical. Again, we're very bullish on what we're seeing.
What do you mean specifically by cascading effect? So do you mean it will be a nice timing for the infrastructure projects who actually helping those stock exchanges to launch the on-chain trading 24/7, right? Or like the other type of why do I ask? Because obviously a lot of builders watching us, and it's a huge challenge for now, especially during the crazy AI world and everything. Well, it's hard for them to understand what direction like to dig, so what path to choose when you're building the product, when you're shifting it between like and you're picking between different narratives, different types of things that you can do right now. So maybe some insights that you can share with us, your own thoughts, or maybe companies' thoughts on what exactly do you mean by those companies.
Yeah. So what we're seeing through our conversations is that the largest enterprises in the world are leaning into crypto across those four verticals. And so you just had, OKX on, right? They've launched XLayer. They're investing heavily in that. They're bringing on developers. They're bringing their users on chain. There's an opportunity right there to build alongside OKX. Upbit is doing the same thing. Base is doing the same thing. Kraken is doing the same thing. Bitpanda is about to do the same thing. And so you're seeing this cascading effect in verticals where when one major player does it, the rest we see typically following. We expect to see the same thing in financial institutions, where again, as they launch their own chains, there will be huge opportunities for these builders to build and bring the products alongside these large institutions.
Okay, well, having this conversation about the huge institutions and really big projects, exchanges like Kraken, like Base, Bitpanda, what we can say for like the smaller guys, for regular builders, for now thinking how to make their own startup, what idea to pick? Well, maybe they have idea, but they don't know what path to start with, So what you can say for this type of audience?
Yeah, I mean, for these builders, let's talk again about these crypto exchanges. These exchanges are hungry for you to build alongside them. And so go to any of the 5 that we just talked about in this presentation. They have developer programs where they will give you financial support. They will give you tooling support. You'll get access to their large user base, and they're hungry to work alongside you. And so I would lean in there to start. You're going to get a heck of a lot of support. There's great alignment, and you get access to their user base, which helps you with your distribution. I would start there. That's really low-hanging fruit.
Okay, thank you. What are your foundation's optimism patients goals for this year or the next 5-year period? What are the main targets that you would like to achieve?
Yeah, so our goals are pretty simple. We have 4 of them. Number 1 is we want to bring enterprises on chain. And so we want to bring the largest companies in the world on chain. Number 2, we want to build the best programmable financial infrastructure. And we're investing very heavily across product and engineering to do this. Number 3, we want to make our customers successful and profitable. It's one thing to launch a chain. It's one thing to build an app in crypto. It's another to be successful and profitable doing it. And so we're investing really heavily to make sure our customers are successful and profitable. And then lastly, we say we want to be the best company in crypto. That's a goal for us. We want to be the most attractive place for top talent to want to work at. And we want to build our brand so that people know what optimism is and the impact we're having across the industry. And so those are the 4 areas that we're focused on through the rest of this year and over the next couple of years.
Speaking about the first goal, about the huge companies to onboard them into crypto, what's your maybe number 1 ideal project, company, institution, or whatever. So who you would like to onboard through optimism into Web3 space? Maybe Netflix, maybe someone else.
Yeah, I would love to see JP Morgan lean in very aggressively in terms of coming on chain and building their own chain with optimism. And the reason why is JP Morgan has such a large impact on the global financial ecosystem that if JP Morgan is launching their own chain, especially in L2 on Ethereum, that's going to have an impact globally on the rest of the financial institutions. And that's going to be incredibly bullish and incredibly positive for this industry.
How do you see the role of investment banks inside of our industry? Maybe a part of JP Morgan's example.
In terms of investing into the industry, or in terms of leveraging crypto in their own operations?
Well, let's take both. I would say from the capital inflows, investments, maybe ETF products, maybe some other products. So let's make it wide.
Yeah, I mean, these investment banks are leaning in. I spent quite a bit of time in Miami at Consensus a couple weeks ago with some of the largest investment banks in the US. Some of the ones I think you probably named on this conference today. And they're trying to figure out, how do we tokenize more assets and bring them on chain, number one. And then number two, how do we create an ecosystem around that? And so, okay, hey, maybe now you have tokenized stocks, but how then can I actually enable you to borrow and lend against those tokenized assets? And what are other tools and capabilities can actually an ecosystem around these assets bring? That's the conversation we're having with these investment banks. And so while today they're tokenizing money market account funds and they're tokenizing private credit, the vision that they have is they want to build an ecosystem to enable their customers to do a lot more than just buy and sell on chain.
Okay, well, great example. I don't know whether I can disclose it or not, because it's not, well, one of the products built on top of the company that you actually already said about during your keynote, launching a similar product that you're talking about right now. But I don't know whether I can disclose it, sorry. Funny situation. Yeah, okay, speaking about the real world assets, so the question is like what we can getting back to the idea that we should tokenize everything. Well, the question of the investment banks and the industry leaders, what we can actually tokenize and how we can utilize this value behind it. What do you guys in Optimism Foundation do towards like this growing trend of RWAs, obviously, and what partnerships do you have? What partnerships do you plan to have? So what you can say about this for us?
Yeah, so it's a great question. We are partnered at different parts of the stack that's required to do this tokenization. And so as an example, Xstocks, which is one of the major players here, they've chosen to build their chain on top of Optimism. And, as assets get deployed there, that benefits our company, that benefits our partners. So that's number one right there. We're directly partnered. I think a little bit more future facing and forward looking is we're partnered with companies like Morpho, who, as more assets get tokenized, I think are going to play a growing role in the ecosystem. Again, they can facilitate that borrowing and lending of these various tokenized assets. Aave is another example here, but Morpho and Aave, I think they have a huge opportunity here. They're great partners to us. We talk to them every single day. They're deployed across the 50 chains that we've helped build. And so then that's another example of where we partner in the industry. And so tokenization, it's going to hit a lot of different parts of the industry, everything from the application layer down to the infrastructure layer. And we're really excited to be partnered with who we think are some of the best partners there.
Thank you. Thank you for the keynote, the answers, and your insights. We have a short quiz for you, for everybody actually during this conference, for every speaker. So you can answer any way you would like it to be.
Yep.
Best for investment, crypto or stocks right now?
Oh, especially today, crypto. Yeah, absolutely.
Okay. Okay. What's better, privacy or regulation?
Man, they're both really important. I'd say both, but doing it the right way.
Okay. What do you prefer personally?
I would prefer to have some really great regulation globally.
Yeah, okay. It sounds relevant. Prices, crypto prices at the end of this year, lower or higher?
Higher.
Okay. So now we have bear or bull market.
When it comes to token prices, definitely feels like we're in a bear market right now. But when it actually comes to crypto adoption, I see us in a very bull market, and I'm very excited.
Yeah, and you can feel it from your keynote and answers, obviously. And what would you say to Satoshi Nakamoto if you met him in person in Miami? Consensus.
I'd tell him thank you. He was the catalyst to build something pretty incredible, and I would just show gratitude and thank him.
Yeah, likewise. The final one, the best piece of advice for Web3 industry, for retail community. Most of our community is from retail users, I would say. Some part of it also from builders, founders, and guys who are growing some like communities like we do, or products.
This advice will probably be unpopular because everybody likes to look at token prices. But I'd really encourage builders, retail users to spend time building and investing in businesses that are creating a tremendous amount of value for their users and for the companies that use them. I think there's an incredible opportunity here to build this next wave of growth. And if you can stay heads down on serving your customers and serving your users, despite the distraction of token prices, I think you'll end up in a really good spot.
Yeah, definitely something we should all think about during these times. Okay, thank you for your time. Thank you for your insights. It was really great. It was our pleasure to have you here at the Incrypted Conference 2026. Kyle Jeng from Optimus Foundation, thank you. The time is over. We should move on to our next speaker. Thank you for your time.
Thanks, Vlad.
So let's continue with our major, big bro and boss, Ivan, with our next speakers. I'm leaving you. Thank you for your time. I hope it was good, and it was a pleasure for me to be here. Bye-bye.
Thank you for giving me this break. I really needed it. So without any other talk, I want to present my next speaker. I'll tell the truth, it's my favorite speaker. I'm sorry for other speakers. It's the friend of mine, and I like reading his posts on Telegram, and he like watching me drinking alcohol while he's 100% sober. It's interesting. So the next speaker is the head of Cointelegraph Accelerator, David Shungart. Hey,
Oh.
sweetheart. Nice to see you.
Great to see you, my favorite grandpa.
I'm sure it'll be good. I just friendly remind that you have like 25 minutes and leave 5 minutes for our short blitz. So the stage is yours. Please share your experience and ideas.
I
Here's
will
your.
try. I will try. So first of all, glad to be here. Thank you for hosting me. Biggest and the greatest conference out of Ukraine. I'm so glad that we have this place to meet and to present ideas. I'll dive in straight away into what I'm about to present today. I'll be talking about fundraising for early stage Web3 startups and the landscape, how to form the narrative, how to create evidence, and then how to receive the commitment itself. Hosting this from New York, and it's a very interesting environment here. I'm at the ETH Conf, but had to tag along in my room to actually present it to you guys. So try to be quite concise with it. Let's go. Let's get it going. So fundraising is really not about the hype. Fundraising, in one sentence, for me, it's about reducing investors' uncertainty with evidence. So the fundraising landscape has really changed within the last year and a half, I would say. There is more, the amount of projects that trying to raise money is actually bigger. The amount of money in the market is not less, but then the amount of projects that successfully conduct the fundraising is actually way down. So the champions win, and everybody else is standing outside of the boat, unfortunately. So I would say out of 100% of projects that raising, only 7 to 8 is actually successful at what they do. And those champions are getting bigger tickets, and an early stage market, especially like pre-seed levels, are probably the hardest part right now. Investors are more willing to invest into series, maybe later seed, series A and series B, where there's more conviction. There's less amount of money that you could make, but the conviction is way higher. And that's basically to set the stage. So the outcomes that I want you guys to get out of my presentation today is basically identify your most fundable offering, build a research-driven pitch tailored to a specific types of investors, and the last one, navigate rounds, dilution, save SAFTs, convertibles securely. It might take a bit longer than that. Usually this presentation lasts for hour and a half, but I try to be concise, as I said. So evidence and execution that you guys or people that are raising early stage founders and builders, use partnerships proofs like Lois, pilots, partnerships commitment. That's your perfect and a very unique leverage. Present unit economy and growth in the language that investors are actually understand, and run and track those relationship pipeline properly. It will compound over time. So your CRM system is the biggest key on how you're raising, and with the help of AI these days, building those CRM systems is way easier, and actually flagging the next steps and conducting the next steps are getting easier and easier. It doesn't mean that it's easier to raise, it's just easier to track. So the comparison between 25 to 26, more capital has skewed to later stage, as I said, relative to early stage in some quarters. Investors are really searching for those durable and proper investment business models. Nobody wants, to be honest, nobody wants token anymore. There's only few projects that where it makes sense to launch your token, and then usually token doesn't mean you have a plan. So raising in token is way harder than raising for a proper business model these days. So in comparison between 25 to 26, the funding grew drastically, and especially it grew within the RWA sector. Obviously, with the introduction of institutions, those big companies, where I'm actually at their headquarters right now, all the JP Morgans, Wells Fargo's, Franklin Templetons, and the legal rails that been built within the last year and a half are allowing more of our RWA projects to actually successfully raise money. So this is a trending narrative, as we want to call it. What investors are optimizing for? So basically the formula of conviction. This is kind of the main information on this slide. Is evidence of certain demand that you have for your product or for your service, multiplied by execution and divided by credibility. What brings you credibility is either regulation, the market that is booming, or a technical risk that you are solving. So what's hot? Stable coins and payments, of course. RWA, as I mentioned before. Crypto and AI intersection. This is everywhere right now. And infrastructure and security is still a narrative, even though it doesn't occupy too much of the investors' minds as of now. Fundraising is sales reframing. So you're basically not raising money. What you're selling to investors is a risk reduction package. And how do you want to prove that you're reducing that risk is through certain market proofs, through the access to different distribution channels that you could prove that you have access to, through proper margins, which is probably the most kind of clear thing to show. If you have margins, if you have revenue, if you have proper unit economy, this is as for me, the most convincing part. The speed of your execution is also a great thing. If you move very, very fast, and as I mentioned before, with the help of AI, technically moving fast is not an issue anymore. And then if you understand how you regulatory ready, this is also a great part of convincing. If, for example, your clients are in US and some of your clients are in Asia, and you resolving those regulatory complexities at the same time and for different regions, it basically shows that you are market ready. And as usual, as we all and many investors are saying out loud for eternity, is that we don't invest in products, we invest in teams. Having a credible team is always the must wherever the market is going to be and wherever the narrative is going to be. And obviously, the founder's experience will have to be applicable to the product that you're building right now. Sometimes it's not a decision, it's not a deal breaker, but obviously, having your experiences applied to your product is important. So in one sentence, an investor is buying our ability to do something better than anyone. Is basically if you in a Vault project is or I don't know, a DeFi project is investors is buying your ability to make money securely better than anyone, because we have certain proof. This is basically the one sentence that you have to complete the blanks and with which you would love to, and I would invite you to start the conversation with any investor. So your proof stack, how do you prove that? How do you show evidence that you're digging into the right direction? First of all is the easiest one, and obviously not everybody will have that, but it's assigned contracts and revenue. Basically, either paid pilots or active revenue streams is a huge decision maker, but I understand that it might sound quite difficult for an early stage startup. LOI with a certain scope. The LOIs that you sign with investors, they will have to have timelines and commercial terms. Wherever the memorandum of understanding you're signing, if it's just a a letter that doesn't prove anything, that doesn't mean anything. So the lawyers that you sign will have to have a precise commercial terms. Usage and retention, obviously the old-fashioned marketing, different types of marketing numbers that you could show, and different types of customer acquisition cost, lifetime values, and all of those numbers demonstrate through the clear cohort curves. So you have to demonstrate that you're progressing in terms of the usage and retention. B2B distribution and partnerships. So with co-marketing and pipeline access, obviously showing that you have access to those distribution channels, either offline or online or any other ways that you could reach to your client, and you can prove that you can reach to them even without the revenue yet, is obviously great evidence for any investors that will be looking at your deck and at your stack of financial information that you present. Security and compliance posture, audits, licenses, and different types of controls are important. Not the most important part, but quite important to show that you are understanding your legal landscape and your security landscape as well. So community demand measured by active conversion, and nobody wants to see just the vanity metrics, just metrics that people would not care about. If you show the metrics, they have to be relevant. Research that converts, and the main principles. Most teams do list building, winners do targeted alignment. So basically, you have to match the thesis with your investor. I would suggest research. So if you have a list of 100 investors, I would suggest researching the 10 most applicable to you and clearly articulate why you fit within their thesis. Speak their language. Look at their publishing. Look at what are their activities publicly, and try to use the language that they use in LinkedIn, that they use in their publications, align with them. Then look at the portfolio adjacency. Is basically look at the fund, open up their portfolio, see how many companies that they have and what kind of companies there are, and try to align with those companies. Try to show your investor that you complement those companies really clearly. Show that your product acts as a force multiplier or infrastructure layer for the bets that they already have. So try to understand who's the decision maker. I think it's the most clear and most simple thing here on this slide. Obviously, you don't want to talk to a marketing manager in the fund. He can only connect you to the GP or investment team. So try to understand who's your decision maker. Timing and milestone. Try to understand what milestone unlocks their check size. What actually they need to, what do you need to provide them with to unlock that milestone? And also ask them those questions. And it's like, are you guys deploying? How much have you deployed within last year? How many projects do you invested within last cycle? Sometimes there are funds that just don't deploy money at the moment, and you don't want to spend time on them. So be very very meaningful of your time and their time as well. So the research to hypothesis to method, there is a certain hypothesis template. Investor X will lean in because they believe in something and they will worry about something, and we can neutralize that by showing within 30 days. So basically, it's how to unlock the next milestone. When you look at this particular fund, try to build this hypothesis about each of them, answering those two things that are left blank on this slide. and then within the next 30 days, try to achieve those milestones and kind of unblock or neutralize those things that you believe are most relevant to them. Read their memos, interviews, portfolio breakdowns, map their check sizes, stages, geography, their stance on token or equity rounds. Identify 3 pattern matches and 2 pattern breaks. So basically, look at their portfolio and see why 3 of those projects are there, and also try to identify what's breaking the pattern, why there's some random gaming project in the portfolio of RWA and DeFi fund, and what would be that pattern breaker, why. Usually, it's just to give you the hint, usually it's a team and how team is aligned with the core product that they build. So I don't know, one guy might have worked in Rockstar and helped building GTA 4 at his career, and that's why he was so convincing. That's why this very odd project within this portfolio, this happens sometimes. And the great idea is also to try and talk to portfolio companies of those particular funds that you're pitching. Validate them in LinkedIn, find them on the demo days, I don't know, find them at hackathons, find them at the conferences if you could, and just talk to them, talk to the portfolio companies of the funds that you're hunting. Narratives that win. Narrative basically means market reason now plus why you, and plus moat. Why are you defensible? Example of defensible narratives without being too cringe. It's stablecoin and payments that are capitalizing on global adoption and merchant demands, RWA and tokenization. It's now moving past speculation into institutional asset maturation and regulatory clarity. So using compliance as a competitive mode and geographical unlock as well. I have to go a little faster from here, guys. I have 8 minutes. So unit economy, how does that translate? When you saying we growing fast, what investors hear, is it efficient and repeatable at scale? And the metrics that you want to show is customer acquisition cost, payback period, and retention. When you say our TVL is up, investors would love to know, is it sticky capital or just mercenary farming? And then metrics that you need to show to prove that is that incentive adjusted net revenue. Community is huge. When you say that, what investors actually hear, will they actually pay for the service? And then you need to show those metrics in terms of conversion to paid or to usage depth. Token will capture value, which sounds like a very ridiculous promise. What investors will hear is, show me the precise economic mechanics. This is basically to work with a great economics expert when you're designing something for a token. And then you have to show how fees are flowing, how token thinks, how do you design the buybacks. And obviously, as we've been saying since 2017, show the clear utility of your token if you're building anything with token. Crypto native unit economy. Use this carefully and only add protocol style metrics when it's relevant. Those metrics are gross protocol revenue, net revenue, take rate, revenue concentration, liquidity cost, and retention. Partnerships are your superpower. So your fundraising superpower consists of 4 main parts. It's basically, are you able to provide the distribution? Can you de-risk the integration and basically prove your technical viability? Can you validate the pricing and prove the willingness to pay for your product somehow? And can you compress time to market and bypass cold start problems? LOI that you sign must be specific, credible, and closable. Round life cycle is the easiest slide here. We all understand that at pre-seed level, you have to prove your wedge, generate early demand and signals, and demonstrate your team capability to actually execute. At the seed level, you already have to have established repeatable go-to-market. You have to prove your user retention basically through churn, through lifetime value, through customer acquisition cost. And then you have to ensure your unit economy are actually directionally right, which is growing and bringing even more revenue in time. And then round at Series A, you have to demonstrate scalable distribution, very robust unit economy, and highly predictable growth engines already. You don't need to create a startup anymore. You need to show how you're growing to be a big company. Assurance for early investors come through three main things. This is basically about your safes or SAFs that you're signing. To provide comfort without killing your cap table early on, you need to adjust your pro rata rights. Is basically the ability for early believers to maintain their ownership percentage in subsequent higher priced rounds. Information rights, it's kind of, this is probably the simplest one. It's a guaranteed cadence of business updates of those financial metrics that you provide them, either monthly, quarterly, bi-yearly, or yearly. I would say the most applicable one is just to have a quarterly report where you obliged to provide those reports to your investors. And build a reasonable dilution process, protect your investors from toxic terms or predatory down rounds. Ensure that their early risk is respected. So basically ensure that everybody that supported you early is protected. So instruments decision map on the high level, safe is basically ensuring that you will provide this equity later. It's fast, it's highly founder friendly, and now at this time of market, from what I'm seeing, this is the most dominant standard for pre-seed and seed stage. Either it's traditional or Web3 hybrid. This is the one that is probably the most attractive as of now. SAFTs, which is a promise of a future token delivery. This is quite heavy legal and compliance burden and very jurisdiction dependent. And essential only if you're raising for your utility token. This one, so I would say the main kind of form of raise now is safe plus token warrant, and even just safes, I would say, like launching a token became not the standard that many of those newly came funds want to see, but still there's, I don't know, 30% of the market that raising through safes and token warrants. Convertible note is an interesting model. It's basically debt plus interest. It carries a certain maturity date and an interest rate. It can add a significant pressure if those milestones slip. So use that with caution, but some funds prefer the convertible note. So at some time, they can just convert this into the interest or into the equity, depending on their own decision. And yeah, non-negotiable is to get competent legal counsel. I know that we all use Claude and we all use ChatGPT now to resolve those legal issues, and you can prompt beautifully, but still to have a last sign-off, it could basically improve the timing, but to have the last sign-off, it has to be a real, live, legal professional. Okay, I have 2 minutes, guys. Let's go. So offer, it's not just valuation. Offer means economics plus price plus credibility, and the checklist is valuation, cap, and discount if it's a safe or convertible note. Most favored nation, use this carefully. How do you provide this clause? Because that might adjust your cap table in the future. Pro rata allocation rules, board seats, observer rights. Check all of that before you go to the round. Token warrants as well, if you're planning to maybe launch a token in the future. And investor update cadence. Usually it's monthly, especially at the beginning, but I would say, like, for me, the most comfortable one is, I also value your time and my time, would be like a quarterly update. But then don't be shy to ask your investors for help, because update cadence, it's an official thing that you send via email. But then if you need to ask something additional, just make sure that you're asking your investors for help. So multiple stack most favored nation can cause cascading unpredictable dilution if terms change. This is kind of, we're going through a deal structure red flags. So when I see this stuff in the documents at the current cap table, that I might provide a lot of questions. First of all, is multiple stacked MFNs, aggressive maturity dates, especially for convertible notes. If those timelines physically cannot meet development cycles, which is usually not the case, but be careful with it. Punitive liquidation preference, everything over 1x non-participating liquidation preference requires like extreme scrutiny. Weird control rights early. For example, if you provide a veto power over certain operations or step-in rights at the seed stage, is usually, for me, a hard no. Stuff like that is not provided in your legal document at the very beginning of your company. And free token allocations, those advisor allocations, those, I don't know, too much of a team token allocation. So handing over your tokens, which is basically part of your company, without like clear vesting lockups or utility definition is a fool's idea, as for me. Be careful with that one. Usually in my career, I remember how many times I was offered to have those advisor allocations, and I would advise not to do that, because when the skillful investor will come and look at that, it would only get them out of your round, not in. You have to incentivize the lead, and the common sweetener here is advisory shares. Shares is not tokens. 0.5 to 1% is equity for dedicated, contracted operational help. Contracted. So you have to, when you provide those advisory tokens or advisory shares, it has to be a contract as well. You cannot just tell a guy that, let's shake a hand, I'll give you 1% of my token supply and you'll give me a few introductions to KOLs. It doesn't work like that. It has to be contracted. Token warrants, rights to purchase future utility tokens at significant discount. This is very Web3 specific, but as I said, usually it's quite applicable to safe plus token warrant rounds, which is probably one of the most common structure. At least used to be. I would say just safe now is the most common structure. Board director seat, only give it to the lead, and only give it to the strongest fund that you have in your network. And if you can, not give it at all. Don't let anybody help you run the company. Investors don't know your product as you know it. Usually, in many cases, it's like that. Super pro rata rights, basically the right to invest more than the initial percentage in the future rounds. This is a good sweetener, as for me, especially like those sweeteners only come to the lead investor. Aligning your option strategy for the team, usually it's 10 to 15%. It's a standard for pre-seed to seed pool. ESOP, which is employee stock ownership plan, it's basically how you attract the best people to your company. But make sure that the vesting is proper. 4 years vesting plus 1 year cliff, especially if you're here for the long term. That's the model that you have to do. All right. Anything else I forgot? We are very short on time. I kind of got the last thing that I will tell you today is, when you do your fundraising, make it a system. Identify 30 targets, 10 ideal, 10 adjacent, and 10 learning meetings, and do the proper, like, set yourself a goal, do the proper output, 5 warm intros, 5 meetings, and 1 update over email, and 1 proof upgrade through metrics, LOI, or any demo that you can show. Yes, this is it. As for me, I'm David, head of Cointelegraph Acceleration. If you guys building an early stage startup, I'm happy to assist you and potentially get you into the program. And we are one of the oldest, I wouldn't want to say biggest, maybe it's going to be conflicting with Ivan, but one of the oldest media outlets on the market. I'm running their acceleration program, and we work with early stage startups across the most hyping up narratives. We're not creating anything new. And we can help you with a lot of market introductions, go-to-market strategies, and different things. So check my Twitter. That would be the best suggestion. Thank you very much. I'm done.
Thank you.
Questions?
I do advise to all the startuppers and founders to screen all the slides, because, as always, traditionally, David gives huge amount of information, and it's all very useful, and you have to take your time to watch them. I was glad to see you. I hope to see you sometimes in person. Where's my?
Yeah, brother, would love to see you somewhere in the world. I'm in US for the observable future, but we'll be back somewhere in Europe, maybe in Singapore.
Maybe.
That's probably.
Thank you, and we will move to another speaker.
Yeah, would love to be here. Thank you very much, everyone, and happy to be here and looking.
The next speaker is called General Manager of Near Intense, but I guess he should be called like a father of Near Intense, because it really is. And so our next speaker is Alex Shevchenko. Please meet him. Hey, Alex. It's
Hi,
so
Ivan. How are you?
nice to meet you. I'm glad seeing you. How are you?
All is good. My pleasure being, as always, here at the Incrypted Conference.
You're also in New York, as like
No.
90% of our speakers. Thank God.
No. Big no.
Let's start. Let's start with the basics, because due to the billions of volumes on Near Intense at the moment, we will talk about this later. Can you explain in simple terms what Near Intent is? So, what is this mechanism and why does it matter?
In simple terms, Near Intent is the tool that allows the users to explain an intent. For example, swap a particular asset into the other asset, or maybe take a perp position, or do some kind of other stuff within the financial layer across the blockchains. And then the whole system is structured in a way that the market makers or solvers for a particular financial primitives, they are starting to execute in this intent, and the user gets what he was specifying.
Okay. So back to the volumes. If I understood you correctly, the Near Intent just hitting like 20 billions of volume, like in June, at the beginning of June.
Yeah, we got through this milestone. There are quite a lot of trades in volume.
That you literally doubled volume like for 5 months since January, right? Because
Yes,
it was like 10 at the beginning of the year.
Yeah, most probably. In general, the intents have been showing a very, very consistent growth throughout the whole previous year. For more than a half a year, we've seen 100% month-over-month growth. So we started pretty small, but then we started to integrate our solution into many front ends, wallet front ends, DEXs front ends. And probably if you have ever swapped something, especially cross-chain in the previous year, there is a high chance that you have been using near intents in the back, and maybe you even don't know it.
So my question was, so what's driving this massive acceleration right now? Is it like more retail or more institutional volume?
So mostly this is retail volume. So what the numbers that you're seeing right now are the ordinary people who are taking care of themselves through the self-custody solutions. They prefer to execute their trades in a decentralized fashion rather than go into centralized exchanges, and they are using this technology. The institutional direction for near intents is well underway, and we are integrating with institutional partners too. But these flows are going to follow a little bit later. There are some specific use cases that more centralized solutions are not delivering to the institutional players. But in the majority of the cases, for institutions, they take care less about whether it is a self-custody, non-custodial setup or the custodial setup. They take care more about the prices of execution, some additional features like delayed settlement, like intraday margins and things like that. So in order to suit this segment of the market, we need to develop some additional features and make sure that for the institutional players, our solution is pretty good.
Okay. So at the moment, the system already supports like 30 blockchains, right? And integration with Brave Wallet was a huge milestone also, which happened just right away. So how significant was the partnership with Brave Wallet? And can you maybe uncover your plans? So for further expansion, new networks, upcoming announcement, maybe you can open some interesting facts.
Yeah, absolutely. Absolutely. So Brave has been a very long and very reliable partner for the whole Near ecosystem. We are interacting with Brave not only on the intent side, but also on the AI side. So Brave's private AI is powered by Near AI. And in terms of the chains, yes, I think that we have even more than 35 chains right now. And the team that is working on integration chains have lots of sleepless nights because of all of the recent hacks and all of the instabilities that AI detects on the blockchain in different blockchain systems. But we are continuing integrating these chains. This is super, super important. Just recently, I was reacting to Martin's tweet from Gnosis Safe. He was saying that, yeah, Ethereum is going to win, is going to be the only settlement layer, all of the stuff. From my point of view, we already are in the world where the innovation is happening across many different ecosystems, and these ecosystems are focused on different particular portions of the market.
Mm-hmm.
And the whole innovation is unstoppable. So the world is naturally multi-chain. The world is spread across, is very segmented, and this is great. And Near Intent is here to help everybody to unite and bring network effects to all of the ecosystems so that they are becoming interconnected. There is a simplification of the liquidity flow. There is a simplification of the AI agents and other entities moving funds across. So we're building here the universal liquidity layer for the whole crypto and making sure that everybody are connected to it. So we eventually would like to connect to all of the blockchain and make sure that they're interoperable with each other.
Sure.
Now,
yeah.
So only for the people who there was no official big announcement of this, but I would encourage everybody to go to near.com. This is our own front end for Near Intents. And definitely I would encourage Incrypted to post in their socials the link to near.com because we have referrals. So now Incrypted can also earn a little bit of money. from the reverse.
Already done, man. Already done.
And there is a very recent new feature that is added to Near Intents now. Besides spot trading, everybody now can trade perps on Near Intents. So everything cross-chain in a single interface. Go and check it out.
I hope the team is now watching the stream and we'll post it. Okay, so more about new features. It's not very new, but some time ago you introduced confidential intents. Tell us more about this. Who is primarily for, and what fundamental problem of public blockchains does it solve? Like for an everyday user who simply wants to make a swap or a transfer.
Yeah, so let's start with the problem. Imagine that you have a crypto wallet and you're going and in your coffee shop where you're buying your coffee, they suddenly, because of some reason, because of the adoption of crypto, they're starting to accept the payments. Right at the moment when you're performing this payment now, the coffee shop owner, the person on the other side of the counter, they understand how much money you own. Because they understand from which account the transaction was performed. And in case you have been targeted by somebody and somebody is watching closely what you're doing, they can figure out that at 10 o'clock in the morning in this particular place in Kiev, because they know from the public information that this place has this account for payments, you appear pretty consistently. Which means that somebody can just stand next to it and see you and do the $5 wrench attack on you and try to steal all of your money. That's an unpleasant truth about the public blockchains. We were forced to build public blockchains as a response to building a trustless ledger. We didn't know the way how to do this. We didn't have the tools. We didn't have technologies. So what confidential intents is doing, this technology is bringing back normality into the payments realm. So when you're putting your assets inside of the confidential intents, these intents, all of the balances, all of the settlement of all of the transactions is running on top of Near's private shard. This is a solution that does not expose the internals to everybody on Earth. And you're able to perform these actions in a pretty confidential manner. Now, this is not end-to-end encryption that you can experience in Zcash. So there is a way, there is a compliance council that can reveal the information, especially to the law enforcement agencies. And we believe that this is a practical security. This is something that everybody are getting from the modern banks and everybody are okay with.
There are some questions about Zcash security at the moment.
Well, we can talk about the recent topics around Zcash too. But this practical security delivers this confidentiality, right? And this is a great solution. And I do believe that this approach is a very long-standing approach that is going to survive many years. And that's actually what is missing for the crypto. There are similar solutions that are focused on a single chain, like Railgun for Ethereum, or like privacy pools and additional initiatives inside of the Solana ecosystem. What a confidential intents is bringing here to the table and why it is different. This solution works cross-chain the same way how Near Intents is a cross-chain solution for all of the chains. Through confidential intents, we're bringing confidentiality to any asset in the world. You can make your Bitcoin private, you can make your Sol private, you can make your ETH private, and any other token. And you are also able to swap these assets privately. So the privacy pool or like the privacy set for a single token now becomes goes into the network and kind of combines with all of the other privacy sets, which means that my Bitcoin is protected by the privacy set of all of the other assets that are inside of the system. And this is a net positive win-win game for everybody. And actually, we're able to achieve this interesting setup where the privacy set for some particular assets is now much larger than the market cap of these assets. So That's an interesting
Makes sense.
quirk.
Makes sense. Yeah.
But this is a win-win in terms of the privacy for everybody.
Okay, so the next question. So for cross-chain intents to work smoothly, you need hyper-efficient solvers, right? If I understood the system correctly. But soft solvers can struggle with toxic order flow, as it calls, from sophisticated arbitrage and MEV bots. So how does Near Intents protect its solvers from being exploited, and how do you keep the market competitive for new fillers?
Yeah, so that's a great question. Indeed, Near Intents at the moment has more than 120 actively trading entities, and approximately more than 20 of them are doing more than $10,000 of trading volume per day, which means that they are relatively big. Some of them they're always competing for these orders. Some of them are specializing on particular routes, and the others are more generic. Now, in terms of the protection, the very good thing about the way how the Near Intents is settling is that they're settling on Near. That's why they are Near Intents. And the settlement on Near brings an amazing feature that the Near has a one block finality, which means that once the next block is on the blockchain, it means that your transaction is final. And taking into account that block time is 0.4 seconds, the settlement is final within less than a second. So this is extremely, extremely quick. And the information about that the like arbitrage or like hard MEV bots are able to extract out of the settlement would probably not reach them in time in order for them to extract this. The toxic flow still can happen, especially when people are trying to arbitrage Near Intents versus some other venues where these market makers are hedging their positions. Many of them are hedging through the spot trading on centralized exchanges. Others are hedging through perps on Hyperliquid and other platforms. So this thing, unfortunately, we cannot do anything about it, right? The protocol is not taking care of this particular thing, because the hedging is something that is very intrinsic to the market makers. This is their realm, and this is where they are actually earning their money. So they need to adjust their models, their parameters of the models, to make sure that they are not losing money and they are, staying afloat. So yeah, being a market maker in this pool of sharks where everybody are trying to squeeze as much as possible from you is not an easy thing. So I have lots of admiration to these teams who are doing this. And the good thing that we see is that there are quite a lot of competition, and they are participating in this, and still many of the teams are coming to us and saying that they are able to earn money, and that's great. The diversity of the solvers that we have is important, is even more important if you know one additional fact. Near Intents in particular has spent $0 on incentivizing these solvers. They are all coming here because of the volumes that they see, the trading volumes, and because of the reason that they are able to earn money on the platform. And this is exactly great, so that the economics of the system works the proper way.
Okay, makes sense. And now I want to go back to Near origins, right? Because Near is heavily pushing the narrative that the commerce is becoming agentic, and all that AI agents will be primary users of dev infrastructure, and so on and so forth. So how is it, and how exactly Near Intent optimized for AI agents? I mean, like solvers, compared to human solvers. And can you see the future when there are no human on these market of solvers and just AI agents in some future?
So I don't think that the agents are going to be on the market maker side. Market makers are usually using some kind of systems to for example, understand like where the market is going and get some additional intel from the market in order to adjust some parameters of their models and their pricing models. But I still believe that the LLMs and AI specifically for trading infrastructure is probably a little bit too slow. It's much better to write heuristics Python code, highly optimized in order to achieve sub-millisecond responses for quotes, right? And that's pretty important because for many providers and for many distribution channels that we have partnered with, it is of utmost importance to get the quotes very, very fast. So
and they're getting better, right?
yeah. It's getting better, but like highly efficient, low-level compiled code would be still better than the LLM that is running somewhere. Now, on the other side, the agentic economy is showing the signs of the early market, right? So we are not yet at the market for agents to trade and execute lots of complicated transactions, but I have no doubt that we are going to get into this position. On my desk here next to my laptop is M3 Studio and True Ultra Max Studio, and I'm running my own inference and I'm running my own agent that is there. It has a separate identity. It has its own crypto wallet because for the agent, I cannot get a bank account. And I would not suppose that the regulation is going to be fast enough to provide such a TradFi services to the AI agents.
Sure.
And that's why crypto infrastructure, like near intents and in general crypto as a whole, makes a lot of sense as a settlement and the value transfer layer for AI agents. I think that the agentic commerce is probably the best bet on how AI and blockchain can coordinate, can interact with each other. I really, really believe in this use case, and I would like to live in the future version of our world where the agents are transacting on blockchain rather than they are transacting on the traditional finance infrastructure. That will be really a pity with all of the flaws and with all of the problems that this infrastructure has.
Yep.
So yeah, that's kind of the thing. I do believe
because
that
in the
we have a
future,
good shot
when
here.
you will ask your agent to buy some tickets to some flight, it'll be much easier to use blockchain and all this crypto kind of stuff
Yeah,
to
absolutely.
make this than just to go.
Yeah,
okay.
I had today like a horrible experience in the morning. I needed to order one particular like table, and this table was I'm located in Portugal, so and the local dealer had only the integration with PayPal. So I was trying to check out through PayPal, and then everything didn't work. Right,
And you
neither
said,
my
let
Revolut
me
account.
get to 1998 and I will do the transactions.
Exactly. So I asked my agent, okay, where can I buy this table in other place? He found me a place in Italy that I can order this table from. I went there. I ordered still as a human, but it would be amazing if I would be able to tell to my agent, hey, look, just do it for me. The ballpark figure of this table is this for the price, and then just do it, and then it does the magic. So I don't think about it. I'm not spending my time on figuring out why PayPal is not working on this particular website.
Okay, I have a few short questions. So the first short question about cross-chain bridges, are they completely dead, or they will survive as a back-end utility for retail users, just never see them anymore under the hood?
It's always the question how you identify the bridges versus the trading infrastructure / intent infrastructure. From my point of view, if you're doing Bitcoin to ETH trade, then this is like an intense type of thing. But if you're doing, for example, USDT on Ethereum to USDT 0 on Polygon, then this is a bridging that is happening through layer 0. In some of the cases, bridge and steel makes sense, especially for newer ecosystems. These use cases also can be provided by the near intense infrastructure. But in general, this becomes a little bit less relevant over time. So for new ecosystems, this is the first good way to get in. But usually the whole ecosystems are evolve into the situation when they have a completely separate set of tokens, and then it's better not to have bridging but rather trading infrastructure in between the chains.
I want to get back to the solvers because the biggest critic of the intent-centric model is that it can lead to centralization, where like few well-capitalized solvers can win all the order flow. So how do you plan to keep the solver ecosystem truly decentralized?
Yeah, this is a very good question. In general, the way how the routing and the auction system is working is that the one who is providing the best price wins, and usually the one that is much more capitalized is able to provide a better price. So the way how we are fighting this is that we are allowing market makers actually to go and have direct relationships with particular distribution channels. And these channels within their quotes, they are able to specify a set of whitelisted solvers that they want to get quotes from. What this brings, it brings an ability for market makers to negotiate directly with the distribution, like with wallets, some additional terms. For example, they can say, okay, we are always going to deliver the trade for you so that you as a wallet can always get your fee from the swap, and then your user will have a better user experience without refunds, without these problems. But this will go at a cost of a little bit worse price for you, right? And then this thing can happen within the near intense setup. I think this is a proper way how to do this. Removes this competition to the zero on the fees that market makers are going to take, and this gives them additional instruments to compete within this market, right? So that's one thing. And second thing is just the protocol itself is incentivized to have many solvers just to make sure that the protocol is robust enough. Actually, many big clients are asking us about the stats around the solvers and like the volume that they're closing, just because of this particular concern. They would like to know that if one party is going to be out because of some reason, the protocol will still continue serving their customers, and then they're going to have the proper use case inside of their front end. So yeah, these type of things, and making sure that these partners are connected. So we are like in the center here, but we're trying to connect all of the parties around so that they have this additional deals, additional whitelisting capabilities, some additional things that are a little bit outside of the protocol, so that these agreements are in place and we see the diversification of the flow.
So you bring the competition not only to the fee level, but more.
Yes.
Like
the competition,
more terms of competitions.
Exactly. The competition only on the fee level is a dead end. It is a lose for everybody always. I would highly urge all of the wallets, all of the aggregators, think very, very carefully and think a couple more steps after when they're installing the simplest from their standpoint solution, which is just pick the best price. This is a road to disaster, and this is not maximizing neither the user experience nor your revenues, nothing. It is a very, very bad approach.
Cool. So we have like a minute left, and I'd like to make a short quiz to you. So quick answers, quick questions, quick answers. So what is the best for investment at the moment, crypto or stocks?
Obviously crypto. I mean, the Bitcoin did that crossing with the 200-week moving
Only
average.
Crypto and 3 intents, right? What's better, privacy or regulation?
I would say that the solution is in the middle of this stance. I would highly encourage the regulated privacy as a solution to our problems.
That's a good answer. Crypto at the end of this year, higher or lower?
Higher.
So now we have bear market or bull market?
I think we have the bear market that is, maybe close to the bottom, maybe not. But yeah, it will be not easy for in the short term. But I believe that we're gonna get back into the bull run.
Better we have bear market, And
Bear
finally,
market will be good.
what would you say to Satoshi Nakamoto if you met him in person?
Thank you for my very exciting youth and the first part of my life. I'm in crypto for 10 years or even more, 11 years already, and still very, very excited about the technology that we all building, and I see lots of potential. So thanks for inventing it.
And we thank to you for a great conversation. It was really interesting, and I hope it was also interesting and informative for all the audience. We're glad to see you and hope to see you in person on some conference or in Ukraine finally when all this kind of stuff will finish. Thank you and have a good day or evening.
Thank you, and everybody stay calm. Bye-bye.
Bye-bye. We're moving forward, and our next speaker is Thomas Martikan. It's the dev lead and at Trezor Wallet team. So we will have a hybrid format. It will be a keynote for like 15 minutes, and then we will have a fireside talk. So please welcome Thomas. Hey, Thomas. Nice to meet you.
Hey, everyone.
Cool. So I'll give you the stage for 15 minutes and then get back to have a free talk, okay?
Thank you. So hello, everyone. I hope you're having a good conference. So my talk is titled Hardware Wallets in the Age of AI. But really, I want to talk about everything that we have coming up in the pipeline on the technical side at Trezor. So first of all, let's start how AI is changing DeFi and what impacts us the most right now. And I would say that what we really are feeling is the impact on security. More money was stolen from crypto in the last year than ever before, and the curve is still bending up. So in the last year, it's estimated to be around $3.4 billion, which is a record. But unfortunately, 2026 is already on pace to beat it. April was the worst month ever. And it's not just big protocols or exchanges getting hacked. We have thousands of ordinary personal wallets getting drained. And the one most famous example is 1.5 billion drained in a single transactions. That was the largest theft ever. And I'll come back to that in a bit more detail later. So all of this is not just getting bigger, but also accelerating because the attackers now have AI. So what does AI actually change? Well, the jump in social engineering and phishing attacks has been very drastic. Phishing can adapt in real time, scam pages and messages getting generated on the fly. Especially interesting is deepfake impersonation. Nowadays you can have cloned deepfake people on video calls, right? You never know if you are talking to the actual real person or you are hiring a North Korean engineer. And everything has sort of industrialized. We have Drainer as a service kits that make it very easy to get set up, and no real skills are required to run a phishing campaign. And the newest front is autonomous bug hunting, analyzing billions of lines of code and looking for vulnerabilities faster than people ever could. So all of that means that attacks are becoming cheaper, faster, and much more scalable. So how can you protect against that? Well, we think that hardware wallets play a very important role in that. There's three things. First of all, most importantly, your private keys stay off your computer. They never touch the internet-connected environment. That means that even if your computer is compromised, in theory, you are still secure. And that is guaranteed by the trusted display. You always see what you are signing. You cannot fake what you see on the Trezor. So nothing moves without your explicit confirmation. But the problem is exactly that. What you see is what you sign. But can you actually read what you're signing? That seems to be the currently biggest problem for us. So as I mentioned initially, the famous example of the $1.5 billion Bybit hack last year, all of that was set up relatively well. They had hardware wallets, they had multisig, they were professionals, but the setup still failed because they couldn't really see what they were signing. We call this blind signing, right? And basically, most ordinary transactions are still blind signing in hardware wallets. We do have clear signing for key operations such as token approvals, both including ERC20 and Permit2, but most complex DeFi operations are not clear signed in any way. The only thing that you see, that you are used to seeing, are these hexadecimal bytes of the call data. And for a human, there is not really much they can do with that, right? There's no token name, no amount, no recipient, and you really have no idea what this transaction will do. So unless you're a computer, you just cannot interpret that, especially if you have multiple pages of this data. You can have dozens of pages of this data in some more complex transactions. But each and every one of these bytes can make a significant difference, as was the case in the Bybit hack, where basically a single Boolean flag making it a delegate call made the impact of the transaction much, 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 much worse. So every single thing in the call data means something, and we need to bring that understanding to the users. And to enable that, we need some sort of external definition, some sort of understanding about this data that we are currently missing, because this is not part of the transaction. So that's where a new standard called ERC7730 comes in. ERC7730 adds an additional metadata layer that allows us to understand transactions. We already have something called ABI that is commonly used in smart contract development, but this doesn't really help users understand things. The goal of ERC7730 is really to make things understandable to end users, which is what's most important. So the way this actually works is that we will be able to dynamically load definitions from a registry, and we will be able to display a nice UI that will make the transaction actually understandable. So no more walls of hexadecimal data, and you can clearly understand what is going on. But just making this data readable doesn't mean that it is fully understandable. If you have a malicious contract, or you have some sort of contract that is designed in a way where the input data doesn't really give you the whole picture, it's not just about the input to the transaction, it's also about the output, about what actually happens. So this is where transaction simulations come in. With simulations, you don't necessarily care what the input looks like. You just care about the end result, about the state change. So with simulations, the whole transactions runs in a sandbox, and you're able to see what is actually happening. So you can think of that as a secondary layer, where with clear signing, you verify the inputs, and with transaction simulation, you verify what the outcome looks like. So this whole clear signing initiative is right now under the stewardship of Ethereum Foundation, with originally major contributions from Ledger. And right now, there's a new working group under clearsigning.org where everyone is coming together as an ecosystem and working together on setting up this registry. And there's still a lot of moving parts, still a lot of things in progress. But it's definitely time for you to check this out and contribute, so we can make sure as much of the ecosystem is covered as possible. So definitely check out clearsigning.org. And there's actually one more big change. So I was talking a lot about making transactions legible for humans, so humans can finally read, verify, and understand them. But what if it's not a human who's making the transaction, right? Well, imagine you have your agent, you tell it, turn my $100 into $1 million, don't make any mistakes. The agent goes off, swap into 47 meme coins, and does some crazy DeFi stuff. And the money's gone. What happened? Well, the agent found some rogue skill on GitHub, and the whole wallet got drained. And that is a common pitfall with these agentic setups, that in the basic form, they'll just have you put a private key somewhere on your file system in a .env file. So obviously that's terrible, and sooner or later you will get drained. And there is several solutions that are coming out to solve this. You have custodial key managers, multi-party computation services, cloud hardware security modules that can add policies, but all of them require trusting a third party. So ultimately, hardware wallets give you the biggest self-custody. You don't really have any counterparty risk. It's just your wallet. And there's open source firmware, not a black box in someone's cloud. So I believe a physical device gives you a unique set of advantages, even for agents. But there's several problems with this. Of course, you still have prompt injection attacks, skill or tool injection attacks. And if the agent has direct access to the wallet, direct access to the key, it has unbounded authority, which is a recipe for disaster. And you cannot trust your computer if random agents are running on it, but you can trust your Trezor since it's a separate environment. The problem is though, do you really want to confirm every single transaction on the device? If your agent fires like 50 transactions, you become the bottleneck. Like, are you seriously going to read every single one of those? Probably not. So in the current situation, every single transaction needs an approval on device, binary choice. But to make that work in an agentic world, you need a new policy-based system where you approve policies and not just individual transactions. You set budgets, protocols, time windows, and you review only the exceptions. And this is advantageous for both humans and agents. So in either case, clear signing is non-negotiable, but approving every single thing manually doesn't really scale. So the shift is to approve the rules and not every single transaction separately. So this is a good middle ground between each manual confirmation and direct wallet access. So you will approve a policy on your hardware wallet once, and the agent will operate within the bounds of that policy. So let's say that you want to allow up to $500 per day on Uniswap, only on weekdays, and revoke after 30 days. Something like that, right? And the way that would be set up is through a smart wallet, smart account wallet, which will be given to the agent to operate with. And the policies will be approved from the Trezor. And we basically have all of the technology that's necessary to make this possible. We have smart accounts with EIP 7702 that allow you to delegate execution from your Trezor to a smart contract. We have modular smart accounts that work like plugins for your wallets. So you can install modules that will enforce your rules. We have this thing called 7710, which is a delegation manager. This is a registry that holds information on what agent is allowed to do what. And 7715 is the API for permissioned request that define exactly what the policy is. So with all that, we have much to build. We have so many new standards, so many new chains, so many new protocols, and so many new features. And this has always been a challenge for us. We have only one firmware, one team behind all of that, and we don't want to be the bottleneck of all this. So our new vision is to have one core, but many apps to go modular. So with our new firmware modularization project, everything becomes an app and the secure core stays locked down. So this will allow third-party developers to come and build their own integrations for their own protocols, new chains, new L1s, or just for giving a better user experience for their dApps. So this would be built by third-party developers in cooperation with us. It would be sandboxed and signed by Trezor. So devices only run approved code. And everything will load on demand. So there would be no managing your flash storage manually. Everything will work in the background. So to summarize what we are doing right now, we are working on the firmware modularization, where we are turning the Trezor firmware into a platform where you can build and ship your own code securely. We are working on clear signing, where we are implementing the ERC 7730 standard, so you always know what you're signing. And we are improving interoperability. We have things such as Wallet Connect, the Trezor Connect SDK, and the Trezor Suite MCP server that lets AI agents connect to Trezor directly. So the theme is that we build the infrastructure and we let the ecosystem build on top of it. So we are trying to really build the bridge between cold storage and AI agents. So if you are building anything with either clear signing, or if you are a project that is working on L1s, definitely get in touch with us and we can figure out how we can enable better security for you through our hardware wallet. Thank you.
Thanks for interesting presentation. It was really interesting for a person who is outside of the box of cold wallets, because so much interesting happening inside. We have a few minutes to talk, and I want to ask you a few questions. So first, I was to ask about the vulnerability. So earlier, Ledger's team publicly disclosed a vulnerability in the chip used in Trezor Safe 7. And you say that the funds are safe. Can you, in short, walk us through what actually happened?
Yeah. So the key part is that we actually have 2 secure element chips. So first of all, to really clarify that everyone is safe, we don't rely just on a single layer of security, but really to compromise the wallet, you would have to break, first of all, the Tropic chip, the Optiga chip, and also the main STM chip. So we have really triple protection in the TS7. And regarding the Ledger Donjon findings, there are certainly very good findings, and of course, very, very important for us. But it is quite a complex attack in a laboratory setting. It involves laser fault injection. So you need to physically be in possession of the hardware wallet and take it apart really on a very sophisticated laboratory level. So this is definitely not a simple attack. And really, there is no real impact for end users.
Okay, I got you. Next question is about the quantum ready. So Trezor Safe 7 is positioned as quantum ready. So, and there are a lot of discussions on this quantum threat for crypto. Some experts give like very different timelines. Some say 10 years, something 30 years. What's your estimate of when quantum computing actually becomes a real threat to crypto wallets?
I think it's not just about waiting for when it happens to be a threat, but being prepared ahead of time. Like chains are already working on migrating to post-quantum signatures. So I believe that this migration should already happen like within the next 5 years. And regardless of what the current threat looks like. Because there is so much at stake, it's important to think ahead and really be prepared. So we believe this is the best approach.
Okay, sounds reasonable. And the question is about AI. So as we all know, AI is changing how software gets written. And how has that affected development inside Trezor? I mean, do you see AI-generated code becoming a new attack surface in encrypted products, and do you use like AI in generating code inside Trezor?
Yeah, we do use AI for development, and I would say that it speeds things up quite a lot. But there is still a very, very careful code review process. So especially with AI written code, you need to be at least twice as careful. But AI is actually also very helpful in reviewing code. And I would say that overall, it's not such a big concern for us because really the biggest problems are, for example, supply chain issues. I feel like in the recent months, this has been the biggest topics where you have compromised packages that other developers use, and very, very popular packages with millions of users that bundle in malware that can steal developer secrets. And that has really massive impact because then they can basically spread this way through infecting other resources. So I would say our biggest concern is software supply chain attacks. And
you mean there's
really
libraries and all this kind of stuff, right?
Yeah, exactly. So we, of course, do many things to protect against that. But for us, the most important thing is always the firmware level. And at the firmware level, we're very, very careful about dependencies. We don't really bring anything in unless it's been audited very thoroughly.
Okay, I got it. One more question. If just I guess I'm right. So Trezor is the only major hardware wallet with the fully open source hardware, right? And software.
Well, I cannot say we are the only one, but we certainly are open source, and all of our firmware is fully visible on our GitHub. There is no private code there. So
I mean, the question is, what are the real advantages of that, and some trade-offs?
Yeah. Well, of course, we cannot expect every regular user to just go out and check the code themselves, right? That's not happening. But there is a big community of very, very technically advanced people, and many of them will come and actually look at the source code. And AI is actually making this much more accessible. So these days we are actually getting much more interest in our code from developers using AI. So maybe in the future, even a regular person will be able to, well, I guess you can already try that, ask your AI agent to go through our repository and make sure everything is legit.
Okay, sounds fair. So I have one more question and then short bleeds. So the question, like, hardware wallets have existed for a long time, really, and yet the market remains a fraction of centralized exchange users. In your opinion, what is actually holding people back?
I think the core message is self-custody, truly having control over your own assets. And self-custody is actually a difficult topic. Like for some people, they don't really feel comfortable with having that kind of control themselves, right? They would rather have an exchange where they can normally log in as they're used to hold their assets. Because with self-custody, there's a lot of power, but there's also a lot of responsibility. You really need to be aware of how to behave with your private keys. But we are really trying and working on making self-custody accessible to everyone. We believe that it should be accessible to everyone.
Yeah, I guess it's about user experience. You were talking about the extra layer between the assets and like what the people gonna do with all these agents and all this kind of stuff. Because yes, the responsibility is hard for many people, but the user experience, I guess, it's more important. That it should be like easy to use.
Definitely, but I think the core thing is that people need to understand why they even need to care about self-custody, because oftentimes they can find out until it's too late, until their exchange gets hacked, their account gets frozen for whatever reason. that's when we find out that self-custody is
That's
truly
a standard
important.
story. When you get hacked, you become very like pay attention to security and all this kind of stuff. Okay, so we have a short blitz. I think you heard it on the previous speaker. So the same questions to you. So the best investment for today for you personally, crypto or stocks?
Well, we have the big IPOs coming up, and I would totally avoid those. So rather stick with crypto.
Okay, so what's better, privacy or regulation? It's
Definitely privacy.
To you, for sure.
100% privacy.
So crypto at the end of this year, higher or lower?
Well, this is a tough one. I would hope to be optimistic, but I think might be more or less the same.
Okay. So it means that now we're at the bear market, right?
Well, for sure. I think it's obvious.
Okay, and the final question. So what would you say to Satoshi Nakamoto if you met him in person?
Actually, I hope I don't meet him. You know, he's a mythical figure, and I would rather not see him as a real person.
Not to be disappointed, right?
Yeah.
Okay, thank you for your presentation and answers. It was really interesting to dive into hard wallets, what's happening inside. It was really interesting because like a lot of audience think that it's just a hardware and nothing happens in it and no like development and all this kind of stuff. And your presentation was really interesting. So thank you. You're always welcome offline in Ukraine whenever this shit will finish. Hope to see you again. Have a good day. Bye-bye.
Thank you. Hope to see you too.
Bye-bye. Okay, so we are waiting for our next speaker, who will be Alexander Maslov. It's the CAS regional lead at Mantle. He will have a keynote on the topic like the distribution layer, connecting TradFi and on-chain liquidity. So please welcome Alexander. Hey, Alex, nice to meet you. You have to turn on your mic. I'll do it for you. Yes.
Hey, Ivan. How's it going on?
Yes. It's cool. So the stage is yours. You have like 25 to 30 minutes for a keynote. If we will have a few minutes, we will like ask a few questions at the end. So the stage is yours. Here's your presentation. Please welcome.
Thank you. Thank you very much for this introduction. Hey, everyone, and nice to meet you all. I guess I want to walk you through what is quietly becoming one of the biggest structural shifts in global finance, which is real-world assets moving on-chain, and then show you the specific infrastructure layer that decides how far and how fast that shift actually goes. The title of this talk is Distribution Layer, and that phrase is the entire thesis compressed into 3 words. In this new market, value is not defined only by what you choose to tokenize. It's defined by how an asset moves once it's on-chain, how it settles, and how it can be put to work as collateral, as yield, as something composable. This is about connecting 2 worlds that have lived apart. Traditional finance and on the one side, on-chain liquidity on the other side. By the end, I want you to see why the connective layer is a real price and why we believe that layer is Mantle. Let's start the presentation and move to this first slide. A real-world asset, an RWA, is simply a token that represents an asset which lives off-chain and uses treasury bill, a share of stock, or maybe a gram of gold, or a piece of real estate. The token is a digital record on a blockchain, but its value is backed by the underlying asset held with a regulated custodian. That is the key difference from native crypto like Bitcoin or Ethereum or any other coin, which exists purely on-chain with nothing behind it in the traditional world. And RWA is a bridge. It takes something real and makes it programmable. And as you can see, this spans the entire capital stack: treasuries, equities, private credit, commodities, real estate, bonds. But the number I want you to hold on to is the speed. This market has grown roughly 10 times in under 2 years, from less than $3 billion 2 years ago to somewhere around 30 to 34 billion on-chain today. So the single takeaway from this slide is this: tokenization is no longer future thesis or a white paper idea. Real assets are already on-chain, already live in size and today. The only question left is how fast the scale from here. Let's move to the next slide. You might reasonably be skeptical of any single projection. Forecasts in this industry have been quite optimistic all the time, you know. So instead of leaning on one number, let's look at the major ones side by side. McKinsey on the conservative end says to $4 trillion by 2030. Citi-based case is $5.5 trillion. BCG with the Ripple put it at 9.4 trillion in 4 years from now, rising to almost 19 trillion by 2033. ARK Invest says 11 trillion, and Standard Chartered at the aggressive end says more than 30 trillion, like in 8 years from now. They are genuinely all over the map on the exact figures, but notice the one thing that broadly agree on, the direction. Every major forecast we track points the same way. It is up. Together, they imply a dramatic increase from today's $30 billion market. The gap between 2 trillion and 30 trillion is not a disagreement about whether tokenization goes and grows. It is disagreement about definitions, which assets classes you count, whether you include stablecoins and tokenized deposits, how broadly you draw the line. When analysts disagree on the exact size but agree on the direction, that is the important signal. The number may vary, but the message is clear. Major analysts expect this market to grow dramatically. So if the demand is clearly there and forecasts are this bullish, the obvious question is why now and not like 3, 4, 5 years ago? People have been talking about tokenization since 2018. The honest answer is regulation. The legal clarity institutions had been waiting for finally started to arrive recently, and it happened actually far faster than almost anyone expected. On January 28th, SEC staff made clear that tokenization doesn't remove securities law obligations. If something is treated as a security, moving it on chain doesn't make those obligations disappear. Then on March 17th, the SEC issued a crypto asset taxonomy with related CFTC guidance, giving the market a clearer framework across 5 categories. And the very next day, the SEC approved a NASDAQ rule change that allows eligible tokenized securities, including certain Russell 1000 names and major index ETFs, to trade within the exchange existing market structure. And the Clarity Act, I think everybody have heard about this. This act is still moving through and could become another important catalyst for tokenized equities. And here's the part that matters most. Institutions are not waiting for the ink to dry. They are already here, actually. BlackRock's Widal is over $2 billion. Franklin Templeton's Benji is almost $2.5 billion. Tokenized gold did more than $90 billion in spot volume in the first quarter of this year alone. These are not crypto native startups at the edges. They are the largest asset managers in our world, deploying regulated products on public blockchains and scaling them into the billions in months. The ambiguity is narrowing and the capital is moving through the door behind it. But here is the catch, and this is the heart of the entire talk. Choosing what to tokenize is becoming the easy part. Almost anything can be wrapped into a token nowadays. The hardest part is the part that decides whether an asset reaches real scale or just sits there as a digital certificate. Is the infrastructure underneath it. In this market, infrastructure becomes the product. For any serious institution, the adoption decision comes down to 4 questions, and every one of them is an infrastructure question, not an asset question. First question, it's can the asset settle instantly with institutional grade finality? Second, is compliance enforced at the protocol level, built into the asset itself, not bottled or afterward? Third, do centralized order book depths and DeFi composability operate as one unified system? And last question, does it actually reach both institutional and retail bases at scale so that secondary liquidity is real and not just a number on a dashboard? So most blockchains were built to answer one or maybe 2 of these questions. Well, very few can credibly support all 4 at institutional scale at the same time. And that is precisely what will decide the next phase of this market. It will not be decided by which asset get tokenized. Everyone can now tokenize, it's not an advantage. It will be decided by which infrastructure those assets settle on, which is exactly the right moment. This is the right moment to introduce our ecosystem, Mantle. Let's talk a bit about Mantle. Mantle is not a single product, it is a connected ecosystem of companies, and these 4 pieces show how broad the foundation already is. First is the METH protocol. It's launched roughly 3 years ago and grew its total volume locked to 272 times in very few first months. At its peak in 2025, it had over 481,000 Ethereum staked, integrated across more than 40 leading protocols, including Zen, Pendle, agent layer in plain terms. It gives institutions on-demand, institutional-grade access to Ethereum yield. Second one is URBank, launched in October 2025, already with 16,000 unique accounts. UR is the piece that makes Mantle financial stack accessible to everyday users, not just institutions. And the third one is Mantle Index 4. It is the largest non-money market tokenized fund on chain, which peaked to $250 million in asset management, backed by 3 institutional distribution partners, including private banks. And the fourth is a function which turns Bitcoin into a liquid, composable productive reserve asset for DeFi users with amazing, impressive TVL of $500 million. So this is a quite short explanation about our ecosystem. If to talk about Mantle at glance, we are the infrastructure layer for real-world assets, and what you are seeing here are our achievements so far. We were founded 3 years ago. We have ranked as top 30, if I'm not mistaken, even top 20 project globally on both CoinMarketCap and CoinGecko. We have reached over $2.2 billion in TVL and nearly $8 billion in treasury holdings. And the treasury matters because it shows the kind of balance sheet Mantle has had behind this market, not just a promise. Apart from that, Mantle has supported more than $750 million in stablecoin supply, and reached over 1 million global community members, and built an ecosystem of more than 200 partners and applications. So, and about our RWA narrative, here is the simplest frame for the role we play. Think of Mantle as kind of Shopify for real-world assets, and Bybit as Amazon. Shopify gives a merchant the engine to build and run their store. Amazon gives them the marketplace, the traffic, and the customers. Two different jobs, but essential. In our world, Mantle is the RWA infrastructure layer. It handles capital creation and asset distribution. It sits right in the middle, connecting traditional institutions and banks on one side with retail participants on the other. And Bybit brings the distribution muscle and the audience that turns an issued asset into traded one. Together, that's a complete pipeline from creating an asset all the way to getting it in front of real buyers. Distribution. Remember those four infrastructure questions? This is how we answer this fourth question. Yes, that's right. It was said. Distribution. Most networks can help you mint an asset. Very few can connect it directly to where the capital already lives. And this is our ecosystem that sits behind the promise. What you are looking at is the full stack built around Mantle. Over 200 partners and applications organized by the function each one serves. Infrastructure and tooling, wallets like MetaMask, custody from Fireblocks and Anchorage, DeFi protocols including Pendle, Aave, and Fluxion, and generally deep real-world assets column, X-stocks on the securitized bucket, and more, with Bybit's Spot, Perpetual, Earn, and OTC Rails anchoring its underneath. The single point I want to land here is breadth. This is not one feature or one clever integration that we put on a slide. It is a complete interconnected stack across every layer the market needs. And that breadth is not decoration. And let's talk about case studies, I guess. So we chose X-stocks as one of the most famous, probably. These are tokenized tracker certificates that gives on-chain exposure to the world's top equities, and critically, each one is fully collateralized by the underlying security. They have been live on Mantle since the 7th November of 2025, and today every one of those assets is tradable on Fluxion, which is Mantle's native decentralized exchange. Two things make this matter. First, it sits on a compliant regulatory framework based on Swiss DLT Act. So this is a real regulated product, not a gray market experiment. And second, it's composable with DeFi protocols, which means builders can design genuinely new capital-efficient strategies on top of it, using a tokenized stock as a collateral or inside a structured product. Now, think back to the structural problem with the tokenized equities I raised earlier. Fragmented liquidity and execution quality that never matched what institutions get off-chain. By unifying Bybit's deep off-chain liquidity with on-chain execution through Fluxion, Mantle delivers the execution quality institutional capital needs and how they expect it. Tight pricing during market hours, continuous access after the close. Let's talk more about examples, and it's not just about X-stocks. That's the point I want to drive home. Beyond equities, institutions are already issuing other real assets on Mantle. Let me give two examples at opposite ends of the spectrum. The first is QCDT, launched with DMZ Finance, Mantle, Bybit, and with Qatar National Bank and Standard Chartered involved in the structure. QCDT is a tokenized money market product backed by US Treasuries, live on Mantle, and it became the first RWA token that Bybit accepts as collateral. Think about what that means. A regulated treasury-backed product issued on-chain and immediately usable as working collateral. The second is Mantle Index 4, built with Securitize. It is an institutional crypto index fund we built on Mantle from scratch, and it reached over $200 million in assets within 3 months of launch, distributed to banks and traditional financial institutions. I won't go deep on either of them because I don't think we need this. The point is simple as this. A treasury-backed money market product and an institutional index fund are both already running today on the very same infrastructure. when I say this is live, it's not theoretical. There are examples which are working effectively. And I guess since we talk a lot about RWA, some people may wonder, like, how can they build something? How can they get financial aid from different companies? And the answer here is probably the Mantle Turing Test Hackathon, because we have their special track, which is RWA related. So this hackathon is $100,000 in prize pool, 6 tracks, 6 weeks, co-hosted with big partners like Mantle, Bybit, and other big names. And I think this AI and the RWA track is where the intersection of autonomous agents and real-world assets come across. This is a great opportunity, and I think we can consider it in today's agenda, because this hackathon runs till 14th June. It is like 1 week from now, so there is pretty enough time for signing up on this hackathon. To give you a sense of the scale behind it, our previous hackathon drew over 2,000 registrations, more than 500 projects, and over 3.5 million impressions. This is not a small community event, it's a real opportunity for the builders. Apart from the track of AI and RWA, there are other 5 tracks like trading and strategy, agents and wallet, consumer dApps, AI dev tools, and agentic wallets. So co-sponsors include Tencent Cloud, Nansen, Animoca, and other big names, supported by DoraHacks and HackQuest. So whatever you choose, whatever you stick to, there are opportunities for any of you. Yes, and I included here as a QR code in case you are interested and want to do a little research. You can scan this, and it will lead you to the website where our hackathon is based on. If you build on Mantle, you are building on the exact same infrastructure that already powers Xtalks, QCDT, and MI4. Real, live, institutional-grade products that are settling real value here and right now. You are not building on a promise, you are building on a proven track and a proven stack. You can ship in the AI and the RWA track and immediately tap into text-grade layer with liquidity going through Bybit, which, as we discussed, is usually the single hardest thing for a new project to get. And you get to showcase and validate your idea in front of the entire Mantle ecosystem, the partners, the capital, and the distribution we have been talking about for this whole presentation. Everything you need to get started is at this website, which is in the middle of the slide, devhub.mantle.xyz, and you can scan the code to find out more.
Thanks for presentation.
Yes,
Oh,
thank you. I guess
yeah.
everything was covered, and I hope it was interesting for people to learn more about RWA and other opportunities which are happening.
We have a short quiz for you, like short questions, short answers. If you're ready, we can start.
Can you tell me what type of questions? So yes, I will answer.
Yeah, sure. So it's very quick and short, like more of a fun. So what is the best for investment at the moment, crypto or stocks?
It's quite a good question and extremely related to our speech and presentation. So I guess it depends on your conviction and your attitude towards risks. Crypto.
For you personally?
For me, crypto like BTC and Ethereum are like near the bottom right now, and where have been always a good trade to buy them like near the bottom. But you pay for that and the risk with the volatility, because you never know when it bottoms or when it rises. So stocks are more like for conservative people. Lower volatility, a solid way to beat inflation and compound steadily. So you don't risk here much usually. And we talked today a lot about RWA. So I think you have now best opportunities to consider them BAS, because with things like tokenized stocks from X stocks, you can hold equities on chain. You don't need to have brokers and any other obstacles to buy them. And it is open for 24/7, like all the week, like crypto. You don't need to wait for the Monday or like any other day to track it. So in my opinion, I choose BAS because they base on the same infrastructure. It is all on chain nowadays.
Okay. So the crypto in the end of this year, higher than today or lower than today? Just one word.
One word or
yes.
Two? All right. I think same. It will be same level as now.
Okay. So in your opinion, what is now, bear market or bull market?
Surely no question. According to all the statistics we have, like socially, like nobody launches IDOs, nobody launches new projects, and according to like chats, Telegram, Discord, everything is calm. So it's pure bear market, and we have been in this phase, I think, for more than 6 months. So it's a good good notion, because bear market never lasts forever.
I hope so. Hope so. And the last question: what would you say to Satoshi Nakamoto if you met him in person?
Good question. I think the Satoshi Nakamoto is like father of whole crypto, and we are all here. We do our work. We find friends. Somebody builds fortune. For some people, crypto is like an opportunity to transfer funds without any gatekeepers. So I would just thank him for all the opportunities he gave for everybody.
Okay, thank you for your time. Have a good day. We will say bye-bye to you and go into our next speaker. Thank you.
Thank you. Thank you very much.
So the next speaker will be from Avalanche Team 1. His name is Iman Dean. I hope I pronounce it correctly. So Avalanche Team 1 is a global network of builders, developers, creatives, and community members who grow Avalanche. So please welcome. Hey, yeah.
Hey, Ivan, how's it going?
Hey, I'm great. It's like 10 o'clock p.m., so I'm still great. Happy to see you here. So as I understood it correctly, I'll add your presentation by myself.
Yep, please, if you can.
Yeah. So I'll be clicking it, so you can just say next slide, and I will return. So the stage is yours. You have like 30 minutes for that, and I'll be here if you need some help. So just say the next slide when I need it. You need it.
Sounds good. Well, appreciate you, Ivan, and appreciate the Incrypted team for the opportunity to talk on this marathon. Also, shout out to the Solace group who I was talking to last week, and they mentioned that it might be interesting to do a talk on alternative ways to getting a job or a career in Web3, as opposed to the traditional route where you send in your CV, your resume, go through interviews, etc. So that's basically what this presentation will be. We'll give a quick introduction to Team 1, just touch on the alternative route of getting a career in Web3, by contributing to communities. And then a quick introduction to Avalanche at the end. But you can go to the next slide. So again, we'll just lay out the landscape, traditional versus community-based hiring, how those two differ, what is Team One and what is the Team One story, how community can create careers, how projects identify future team members, what they look out for, and then some actionable steps on how to get started. You can next slide. Okay, so just to lay out the kind of current landscape, we have the traditional route where you apply to a bunch of different jobs, you send in your CVs, you hope to get an interview, maybe you get an interview or you go through a number of different rounds of interviews, and then hopefully you get the job, maybe you don't. That traditional route is becoming harder and harder, especially in the tech industry right now. We're seeing a lot of layoffs, we're seeing a lot of hiring freezes, there's a lot of AI automation where your CV or your application may not even reach a real person. It might get filtered out. And then on the other side, we have the community route, right, where you contribute to different community programs. It might be ambassador programs or community initiatives. Show your value, and then depending on what that community or that program is working towards, you may get offered a position. And this really solves the whole get your foot in the door problem that the traditional route kind of has a current barrier to. You know, if you can't even get an interview or you can't even get the opportunity to show what value you can create, the community route solves this. You can go next slide. So what is Team One? Team One is a global network of builders, developers, creatives, and community members who grow Avalanche and blockchain in general. Next slide. And how did Team One start? So Team One began with myself as an Avalanche community member in Colombia, in Medellin. I saw these other ecosystems hosting events, having different programs for community members, having the community really contribute to the growth of the protocol. And I didn't see that on Avalanche at the time. And I loved Avalanche, so I wanted to start that and see if we could build that globally for Avalanche. So I decided to put Avalanche on the metro. So you can see here on the right, there's an image of the Avalanche branding on the subway and the metro in Medellin. The Colombian government right now wants to turn Medellin into the tech hub of LATAM. So I basically spoke with the Colombian government, and the pitch was that if you guys help me get Avalanche on the metro, I can use that to show Avalanche. Ideally, I can get a position there, and then once I get a position there, I can bring some events back to Medellin and bring some attention from the blockchain industry back to Medellin, which is what the government wanted. So they actually agreed to do that. And then the next step was, after getting it on the metro, was to take some photos, videos, upload those on X, and hopefully get offered a position. I did that 10 minutes later after posting the tweet. The founder of Avalanche reached out, the marketing team reached out, the business development team reached out, and basically were asking, who are you? Why did you do this? That got the conversation started. And then for 6 months after that, I set up Avalanche Colombia. And the whole idea with Avalanche Colombia was I would invest $15,000 of my own money. And over the space of 6 months, I would organize different meetups, developer workshops, collaborate different activations with universities, and try and onboard more developers to Avalanche. At the time, there was not much awareness of Avalanche in Colombia. So did that over 6 months. It was effective. We ran a number of events, number of things with universities. And then I also wanted to show that this system that we were using in Colombia could be replicated in other countries. Again, the idea was to be hired to do this on a global scale, right? So I wanted to do it in Colombia first and then be hired to do it on a global scale. So to show Avalabs and the Avalanche Foundation that this could be replicated, we also did an event in Peru and Mexico. And then I was hired to build this out globally. So hired by Avalabs, and initially when I was hired, we launched the Avalanche Ambassador DAO. And the idea with the Avalanche Ambassador DAO, that was the initial branding, was to get more people in from different countries who could replicate the success in Colombia. We launched applications for the program, and we had 1,500 applications in the first round. And for the first few months of the program, we didn't even use any funding from Avalabs or the foundation. We actually raised the funding externally. I spoke with, in the first month after joining Avalabs, I spoke with different projects in the ecosystem, told them the vision of what we want to build, and we actually raised 120,000 from ecosystem projects to kind of use as seed funding for the program. So for the first 4 to 5 months, we used that funding. We started doing events in different countries. We later rebranded to Team One, and we spoke with the Avalanche Foundation, showed them what we did, and we got a grant of 1.15 million to build out Team One from there. Next slide. These are some photos from different events like developer workshops, hackathons, meetups that we did in different countries around the world. Just different photos from different events. You can go next slide. So what has happened? So we started off with one meetup in Medellin, Colombia. The vision was to turn this one meetup into something that would grow Avalanche in Colombia, and then get hired to build this globally. So what has happened in the last year and a half? We've grown Team One to 450 members. We're a global community across 35 countries. We've launched 6 official chapters. So you can see here we have Team One Vietnam, Team One Turkey, etc. These are official chapters that have their own official leads. They have the gold check mark on X, etc. And they're building their own team in their own country. And we have at least 6 more coming this year, planned in the pipeline, and would love to kind of start building a foundation in Ukraine as well, and eventually launch Team One Ukraine. We've done 600 community events across 30 plus countries. We've collaborated with 130 universities. We have 75,000 plus Luma subscribers from the different events we've done globally. We've started generating revenue. So we've built out a pretty big distribution network, both in real life and through events, and then also on X with all the different pages that we have. And companies want to plug into that distribution network. So not only Web3 companies, but for example, we just finished a university tour in Turkey, where BBVA Bank wanted more exposure to university students for different internship programs for their crypto arm. And that bank actually sponsored our recent university tour in Turkey, as an example. We've created 30 plus positions inside Team One. None of those positions were created through an online posting where you send in your CV and you go through rounds of interviews. They were all created where people join Team One as a volunteer, as a community member. They contribute value, they show up consistently, and then when a position is needed in a certain region or in a certain vertical, we create that position and we offer to the members. So some of those are part-time, some of those are full-time. And we've also had placements for jobs in Avalabs. So for example, 3 technical members now in Team One who have been doing different developer workshops in different cities around the world were actually hired by the Avalabs developer relations team. And then there's other positions that were other positions that we had placed in other companies and other organizations. We are the biggest driver of marketing and developer leads to Avalanche. We organize hackathons. We have mini grants and funding for community builders. We're the number one for Build Games, which is kind of like Avalanche's flagship hackathon, for core downloads, which is Avalanche's native wallet, Avalanche Academy, etc. So we've really built this big distribution network that basically anything that Avalanche wants to launch or different Avalanche projects want to launch, they can kind of plug into this distribution network, and we will support them. And again, we've done content campaigns, launch, and announcement support for different partners. Go to the next slide, please. So we started off with one meetup. Now we have 30 plus people internally, and they're organizing more initiatives. So we have the different chapters that launch. Each chapter has a lead. Each chapter has a technical person and then like an operations marketing person. So those different chapters that are launching from Team One are creating positions. We have different funding for different programs. So we have a mini grant program, and we're about to launch another community grant fund, which helps ecosystem projects get funding. And then from there, they also bring in talent and create opportunities for more community members. And then through these different initiatives, we bring in more people to the Avalanche community. They join Team One. And inside Team One, they come up with new ideas, they come up with new initiatives, new verticals like accelerators, etc., that eventually go into projects that need a full-time or part-time position to manage them. So it kind of creates this nice flywheel effect from we organize initiatives in Team One that creates career opportunities. Those career opportunities bring people to the Avalanche ecosystem. Those people that join the Avalanche ecosystem join Team One, and then there's more opportunities and more ideas that kind of come through the flywheel, and that's kind of what we're aiming to build out more of. This is really only effective if three key pillars are followed, right? So both to build a project like Team One, but also to be a contributor to a project like Team One. There's three extremely important pillars, and if these aren't covered, it's very, very difficult to achieve success. One is to show up consistently. Presence builds trust over time. If I had just done the Avalanche on the Metro and I left after that, the idea was to put Avalanche on the Metro and I would get offered a job. If I had just left, I wouldn't be here speaking today. Later, I had to go and create Avalanche Colombia, do that over 6 months, and then I got offered the position, right? So extremely important to show up consistently. And then when you do show up consistently, you want to bring real value, right? So you want to find gaps, come up with good ideas, organize events, whatever way you can deliver value. Bring that to the community initiative, the community program. They should support you to do that if it's set up correctly. And just make sure that when you're showing up consistently, each time you bring value. And then thirdly, an extremely important part is storytelling. So not only do you want to show up consistently and bring value each time, you also need to tell the story of what you're doing, right? So make sure that the impact that you have is visible, make sure that the value you bring is visible, post about it, tell the story. When I set up Avalanche Colombia, sometimes, even though the initial audience was Colombian and Spanish speaking, sometimes I would do tweets in English. And the reason for that was so that Avalabs and the Avalanche Foundation, who I knew was watching, would see what was going on in Colombia, see the success of it, and then eventually support us to build this out further. Next slide. So how do projects identify future team members? What kind of do they look for? One is, like I said on the last slide, people who identify gaps, identify issues, and bring solutions. That is one group of people. The other group of people is they just identify issues and they don't bring any solutions. There's a huge lack of people in the first group, and we have a huge surplus of generally in the world of people in the second group. If you are in the first group where you bring a solution for any issue or gap that you see, generally you're immediately at a huge advantage because communities and community programs like Team One, that's exactly the type of person that we need, right? We have so many things to do. There's so many countries we want to go into. There's different types of events we want to do. There's different types of content programs we want to do, builder support. There's such a wide array of things that we can do that it's extremely refreshing to find people who recognize this and come up with a way to make that happen. Content creators and event hosts, every project wants more content about the project, more visibility, and then also events really help, especially in the age of AI. It really helps bridge your project from the digital to actual in real life and people connecting personally. Who climbs the tiers? So certain programs have certain tiers set up, and those tiers generally reward those who show up consistently and with some competence and deliver value. So a prime candidate for positions and jobs are people who successfully progress through the tier system of different programs. Those who show up over time, again, consistently extremely important. Leadership qualities and resourcefulness, not extremely important for every role, but certain roles do need a level of leadership and resourcefulness, as some roles, you will have teams under you. If you want to take on certain initiatives, that requires leadership in many different aspects, and also resourcefulness to make it happen. Whether that's getting funding, getting the support you need from different people, these are two extremely important qualities. And then high emotional intelligence. Obviously, this is, if you're going to be showing up to a community over a certain amount of months, you're going to have a lot of different relationships with people. You're going to communicate with a lot of different people. A high level of emotional intelligence on how different things work, how to build relationships, etc., really helps. And it's not just all about IQ. And again, this is not just how Team One works. This is the approach that generally works across different communities and projects in the industry. If you're a huge contributor to a DAO, you're more likely to get a position, a paid position in that DAO. If you're a huge contributor to any different community or ambassador program, you're more likely to get a position with those programs. Next slide, please. So how to get started? First of all, choose the ecosystem that you genuinely believe in. I wouldn't recommend just doing this for the sake of trying to get a position, because again, this way does involve having to show up generally for free for some time. So if you don't really love it or you're not really into the ecosystem, it's maybe better off to look at a different one. So pick the ecosystem that you genuinely believe in, and then really there's two paths at a high level after that. One is the launchpad already exists. So in the ecosystem you choose, or the project you choose, there is an ambassador program, there is a community initiative entity like Team One, etc. And all you have to do then is join that and show up and deliver value. Or there is no ambassador program, there is no initiative or entity like Team One, the way Avalanche was 2 years ago before we started, right? And then that's an opportunity for you to either build it yourself, fill that gap yourself and build it, or contribute value in a way. If you don't want to build it yourself, contribute value in a way where the team sees that more of this would be great, and then they decide to build a structure around a program like that, and you would be one of the first members of it. So find one thing that is missing and something that you can do better. Do it publicly, tell the story, make sure it's visible, and then if there's clear value being delivered, open the conversation and around the work that's been done and how that could be expanded or improved, or more could be done around that, and a potential position could be created. Next slide. So what to avoid? First of all, there's a few things you want to avoid, there's many things you want to avoid, but here's a few of the top ones. One is you want to lead with contribution, not extraction. So when you join these communities or these initiatives, make sure that you deliver value first before trying to take something from the program. These programs are very much a cream rises to the top kind of program. So the more you give to it, the more you get out of it. So definitely lead with contribution and not extraction, and deliver value first. Secondly, don't wait to be asked to do something or invited to do something. Take the initiative. If you see something that needs to be done, either do it, or if you need support to do it or approval to do it, then make a proposal to go and do it. Spreading yourself thin across many different projects. So one red flag is when someone has, like 6 to 8 different projects in their bio. You can generally kind of see that they're kind of spreading themselves too thin across different projects. They're not dedicated to or focused on one, and the exact value that they may be able to deliver is kind of limited. And then finally, disappearing after one contribution. So again, back to the example, if I just went with my initial thought process of I can put Avalanche on the metro or the subway and immediately get offered a job, then again, I wouldn't be speaking here today, and we wouldn't have Team One. It really was down to, after that, setting up Avalanche Colombia and contributing over 6 months. Next slide. Yeah, so that's generally a quick high-level overview on how you can think of this alternative route to getting hired in Web3. Some people already know this as they've been through these programs, but we've had a lot of conversations with different people lately who are been laid off from different programs. They've applied to many different programs and they just get no response, or they do get a response and it's a waste of time for a few weeks. So just wanted to kind of give this talk to maybe be open to the other route. Yes, you do have to contribute and show up for some time for free, but also if you are just consistently sending in resumes and CVs without getting a response, you might be better off dedicating that time to actually contributing to a project. And again, it solves the issue of not being able to get your foot in the door. Through the community route, you can get your foot in the door and actually show your value. So just one quick comment on the Avalanche ecosystem. I won't go too deep into it for anyone that doesn't know much about Avalanche. Avalanche is an EVM chain. You can actually launch your own layer 1 in the Avalanche network. So it's a network of many L1s. We have a lot of different companies integrating and building on Avalanche. For example, the World Cup starts this week, and we had FIFA launch their own layer 1 blockchain on Avalanche and migrate their FIFA collectible app onto Avalanche, right? So before World Cup tickets actually went on sale, you could use FIFA Collect. There were certain collectibles on there that actually gave you the right to a ticket, and that could be converted to a ticket the actual World Cup. So Avalanche actually had tickets to the World Cup before they were even on sale to the public. And that's just one example of many cool things that are being built on Avalanche. There's many also games like MapleStory. There's a bunch of different institutions and businesses building on there. So really exciting things happening in the ecosystem. And if you do want to check out more, have a look at Avalanche Cascade, which is a website with an ecosystem map. You can click into different projects and you can explore what different projects are doing on Avalanche. And there's also some onboarding paths. If you're a developer, it shows you kind of the best route to maneuver and learn more. If you're new to Web3, there's a special path for that. If you're coming from a different ecosystem, we have a path for that and how to bridge and how to test out apps. So Avalanche Cascade was built by a Team One member and a really cool resource to help you discover the Avalanche ecosystem. And then next slide, which I think is the last one. So yeah, then finally, Team One is currently open for applications. We open a few times a year. So we opened a week and a half ago, 2 weeks ago. And so far in this round, we have 2,500 applications across 65 countries. It is open to people from different ecosystems. We would love to have people come over from other ecosystems and learn more about Avalanche and see what value and opportunities there are in the Avalanche ecosystem. So you don't have to be an Avalanche community member to apply to join. We expect to close out around 3,300, 3,500, and we'll accept maybe 150 people. So if you would like to join, feel free to scan the QR code here. We are looking for everyone from event hosts to founders, content creators, designers, BD, marketing, developers, university students, and country leads. As I referred to earlier, we would love to eventually launch Team One Ukraine. And in order to launch Team One Ukraine, what we would first need to start doing is find some good members, start organizing some events, collaborating and partnering with some communities that already exist in Ukraine, supporting them, reaching out to universities in Ukraine. And then when we have a good foundation and some, a good network built in Ukraine, we would actually look at how we would launch Team One Ukraine and speak with some of the members there and figure out how we would roll that out. So that's something that would be amazing to launch this year. I think for Ukraine, currently we have 12 to 14 applications already with zero presence in the country. So yeah, it would be amazing to have more people apply, and we would love to see people here on this call join Team One. And then later this week, we also do have an in real life meetup in Kiev with Solus Group. So looking forward to that. And if you do want to reach out to me, feel free to ping me on Telegram at CryptoChimba. I'm happy to chat with anyone about Team One, careers on Web3, the Avalanche ecosystem, etc. But yeah, thank you, Ivan. Appreciate it.
Thank you for your presentation. It was really interesting and very close to me because, you start doing something without any closer goal of what you can achieve. And so my first question is to you: what helped you to make this jump into uncertainty and doubt and to move on? Because you said you spent like $15,000 and you were contributing, and then you get some results. So what helped you to move on that time?
Yeah. So before Web3, I was used to building communities. I built with a partner of mine a network of Facebook and Instagram pages in the fitness industry. We had 9 pages at the peak. We had 9 pages with over 16 million followers, and then we had a bunch of different fitness groups and fitness communities globally. So I had kind of like a good experience in building communities globally. I seen how effective those kind of different community initiatives and ambassador programs were for other ecosystems, and Avalanche didn't have one. So I mean, my initial thought was that all I would have to do was put Avalanche on the metro. They would be really impressed with that, and I would just get offered a job. That didn't happen. So I realized that consistency is what is needed here. That I can't just show up once. I need to show up over a certain amount of time, and I just kind of had faith that if I do that, something would happen. Throughout the 6 months, I was constantly in contact with the team, because I want, in Telegram, constantly sending them different tweets, different things that we were doing. There was a bit of a feedback loop where I was getting kind of feedback from them that they liked this, etc. So I could see that things were going in the right direction, and kind of got a good sense that if this kept up, that we could do this globally and not just in Colombia.
And you're originally from Colombia?
No, I'm Irish, but I've lived in Colombia since 2018. So I actually learned Spanish.
That's why your English is so good, because I think how Colombian you can speak English so fluently. Okay, yeah. that makes sense. Okay, so did you have some Web3 background before? No. So it was just your first crypto project?
Yes, no tech experience, no Web3 experience. Just loved Avalanche and wanted to build something. Yeah.
What was the reason that you chose Avalanche?
I bridged over to Avalanche in 2021, and there was a lot happening. I'm sure many people here remember 2021 when there was a lot of different apps that you could do things on. There was a lot happening in the Avalanche ecosystem at that time. It was extremely fast, extremely cheap, very different from the kind of what I was used to. And yeah, just immediately got in contact with different community members, learned or kind of integrated myself into some of the sub communities on Avalanche. Just started to kind of feel at home there from the tech side to the community. I just felt like Avalanche was my place. And then a few years later, I decided to do this.
So you're not considering to replicate it for another network?
No. Well, like so Team One does stuff with other chains. Like we do meetups, we do hackathons, we do developer workshops with other projects and other ecosystems. So we're not just only Avalanche, and we can't do anything with other chains. But generally, Team One is kind of Avalanche focused, but open to everyone.
Okay, I got it. So we have a short quiz to you. So quick questions, quick answers. So best investment for you personally at the moment, crypto or stocks?
Right now, Bitcoin.
Okay. Say hello to Michael Saylor. Yeah. So what's better, privacy or regulation?
Privacy.
That's my man. Crypto at the end of this year, higher or lower?
Hopefully higher. I'm optimist. I'm an optimist that it will be higher.
Okay. So, and the next question. So, what is now, bear market or bull market?
Now I think it's a mini bear market.
You say as an optimist.
Well, I mean, hopefully close to the bottom of a bear market, right? So bear markets don't last forever, and we always come out of them. So, but I think everyone can look at the charts.
One more time. When did you dive into crypto? In what year?
2017.
Oh, so you've seen like 3 bear markets, right?
Yes, yeah. Bought Bitcoin, Litecoin, and Ethereum on Coinbase back in early 2017.
Okay.
Yeah.
So in the final question, what would you say to Satoshi Nakamoto if you met him in person?
I'd try to shill Avalanche.
Good luck. Okay, it was a really motivational story, and I think you're right when you say that this approach is compatible not only to Avalanche but to the whole industry, that you have to contribute first to give value, to make your contribution visible, and it really helps to come up, because a lot of people try just to buy some shit, and they think that the market owes them something. I don't know why. But first, they have to give value to the industry and then get back.
Exactly.
Okay, so we we're eager to find some connections in Ukraine. We can help with that. We know the guys from Solus, and I hope that a lot of Ukrainian developers and founders and all these kind of creators can get some can give some value to Avalanche and then get some profits from it, because there are a lot of developers here and founders and all this kind of stuff. So you're welcome to Ukraine whenever this shit will finish. Maybe next year on Incrypted Online offline conference. That time will be offline, so you're welcome. Okay.
I've been in Ukraine before. I went in 2019 to Kiev and Pripyat, and I absolutely loved Kiev. It was an amazing city.
I agree. I agree.
I can't wait to go back.
You're welcome. You're always welcome. Just write to us, make a call, and we will do some stuff together, I guess.
Yeah, for sure. Thank you.
Okay. Thank you for your time. Bye-bye.
Thank you. Bye-bye.
So we're moving to our next speaker. It's Nurtilek Talaybekov. I'm sorry if I pronounce it not correctly, but I tried. So it's the head of EU markets at Certic. So please welcome. Hey, Nurtilek, welcome to Ukraine Online. Hope some days will be offline.
Yeah, hopefully one day.
So it's time to speak about Web3 security. So the stage is yours. You have like 30 minutes. The stage is yours. Please take your time. I'll be here if you need some help.
Sure, sounds good. So yeah, hi guys. Really excited to be a part of this Incrypted conference today. We'll discuss the current state of Web3 security, review some significant incidents from 2025 and 2026, and examine how that threat landscape is evolving. So as more banks, custodians, payment providers, and fintech companies entering the digital asset space, we think understanding these threats becomes increasingly important. So the objective is just review what happened, but also understand what institutions can do to prevent similar incidents. So the session will be divided into 4 parts. So at the first one, we'll look at the Web3 threat landscape and analyze exploit statistics from the past 2 years, 2025 and this year. Second, we'll review emerging attack patterns and examine detailed case study of the most sophisticated attacks we've seen recently. And the third section will be about defense strategies and what organizations should prioritize when building a security program. And finally, some takeaways and discuss what these trends mean for institutions entering the digital asset ecosystem. Historically, Web3 security was considered primarily as a concern for crypto-native projects. I think that's no longer the case. Today, we see banks launching custody services, financial institutions exploring tokenization, payment providers integrating stable coins, and lots of exchanges serving institutional grade clients. So the challenge that Web3 introduced entirely different security model. Private keys effectively become production assets. Smart contract can directly control millions of dollars, and blockchain transactions are irreversible. And unlike traditional finance, where many incidents remain private, Web3 attacks unfold on-chain for everyone to see. So the part one, the first section will examine how the threat landscape has evolved and where attackers are focusing their efforts today. At Sortec, we do continuously monitor blockchain ecosystems through our security, research, threat intelligence, and incident response teams. The data presented in this section comes from the real incident tracked and analyzed by our researchers. We do publish lots of Medium blogs, articles that you guys might check out after whenever you have time, and check out the Skynet Hacked report as well to learn more about those incidents. So 2026 number of exploits by months. In this chart, we're going to highlight a concerning trend. During the first 5 months of 2026, exploits activity accelerated significantly. January recorded certain incidents. By April, that number had increased to 27. Even more concerning, several major attacks were not spontaneous discoveries. They were involved vulnerabilities or preparations that had existed for months or even years. The Drift protocol, for example, involved planning that began in 2025. The TrueBit exploit leveraged a vulnerability that had remained dormant for years before the exploit took place. So this demonstrates the risk does not disappear simply because a vulnerability remains unused for a long period of time. So accumulated exploits in 2026. So when we look at those numbers, the trend becomes even clearer. By May 2026, we had already recorded 88 exploits. This represents a dramatic increase in attack frequency compared to previous years. What we are observing is not just more attacks, but a broader range of attackers targeting a wider variety of projects. The barrier to enter for attackers continues to decrease while the number of potential targets continually increasing. This slide compares the cumulative exploits counting between 2025 and 2026. So by May of the last year, the industry had recorded approximately 35 exploits, and by May of this year, the number had reached 88. So within only 5 months, 2026 nearly exceeded the entire exploit count recorded throughout 2025. So this highlights how quickly the threat environment is evolving and why security programs must evolve just as quickly. When we examine the largest incidents of this year, an important pattern emerges. The two largest attacks, Kelp DAO and Drift protocol, were both driven by social engineering combined with advanced second stage exploitation. Together, they count for nearly 80% of the losses among the top 10 incidents. So we also see traditional smart contract vulnerabilities such as collateral manipulation, breach verification failures, and Oracle attacks. So this shows that while smart contract security remains critical, human-focused attacks are becoming increasingly dominant. A key observation is that 5 of top 10 incidents still originated from smart contract vulnerabilities. However, the largest losses were generated by attacks targeting people, governance processes, and operational security. Attackers are increasingly looking beyond code and targeting the entire ecosystem surrounding a protocol. Looking back at 2025, one incident stands out above all the others. The Bybit exploit resulted in approximately 1.4 billion, which makes it the largest exploit in Web3 history. The attack didn't originate from a traditional smart contract vulnerability. Instead, it relied on interface manipulation, multi-sig abuse, and social engineering. Other major incidents involved private key compromise, infrastructure failures, and operational weaknesses. Only 3 of the 10 attacks in 2025 were traditional smart contract exploits. This was an early warning sign that attackers were increasingly targeting operational security, infrastructure, and governance mechanisms. This trend has continued and intensified in 2026. The most damaging category was social engineering combined with advanced second stage exploitation, responsible for over 578 million in losses. Private key compromise remained a significant threat. We also continued to see breach failures, parameter validation issues, and access control weaknesses. Many of these vulnerabilities are well understood as they continue to appear in production systems. In 2025, the multisig hijacking dominated losses due largely to the Bybit incident. Private key theft, insufficient access controls, Oracle manipulation, and rounding efforts were all the major contributors. This important lesson is that security failures rarely occur in isolation. They often result from multiple weaknesses being chained together. So when comparing the 2 years, several themes emerge. First, nation-state actors continue to represent one of the largest threats. Groups linked to North Korea remain associated with some of the largest attacks. And the second, basic coding mistakes continue to create substantial losses despite years of industry experience. So the part 2 is the section will move beyond statistics and examine how attack methodologies are evolving. So the Drift protocol attack is one of the most important security cases for this year. It was not a simple bug exploitation. It was a multi-month operation involving social engineering, trust building, malware deployment, governance abuse, and protocol manipulation. The sophistication of this attack provides valuable lessons for every institution operating in digital assets. The attackers first approached the Drift contributors at the major crypto conference in person. They represented themselves as a legitimate quantitative trading firm interested in integration opportunities. So over several months, they built relationships through Telegram discussion, technical workshops, and collaborative conversations. Eventually, malware was introduced through shared files, compromising contributor devices. So this stage demonstrates how social engineering increasingly extends beyond phishing emails into long-term relationship building. The attackers then prepared a fake token called CFT. They artificially created liquidity and manipulated pricing data through controlled trading activity. At the same time, they exploited Solana's durable nonce mechanism to prepare a transaction that could be executed later. So through the social engineering, they convinced legitimate Security Council members to sign this transaction without fully understanding their purpose. This process is commonly also as a blind signing. So what makes this attack special is that once the pre-signed transaction were activated, administrative control of the protocol shifted to the attackers. With those privileges, they added they added their fake token into accepted collateral. The system believed the token had significant value. So as a result, approximately 282 million worth USD of legitimate assets was withdrawn. So the attackers, so the key takeaways, what makes this attack stand out is that they invested real capital. They built trust over 6 months. They attended industry-leading events and met the Drift Protocol team in person. They interacted with contributors repeatedly, as well as they prepared technical infrastructure long before the execution. So this was essentially a professional intelligence operation rather than a traditional cyber attack. That's the new reality many organizations face today. So the part 3, so given this evolving threats, how should organizations defend themselves? That's what we're going to be talking in the upcoming slides. So I think there are 4 major trends worth highlighting. The first is AI accelerating both vulnerability discovery and attack preparation. Second, attackers are willing to spend months preparing operations. And third, social engineering is becoming more sophisticated and increasingly targets individuals in person. And finally, attackers are expanding their focus beyond smart contracts into infrastructure, cloud system, CI/CD pipelines, and operational processes. Many organizations believe that once smart contracts are audited, the primary risk is addressed. What we see in reality is that attackers increasingly target dependencies and third-party providers. The Bybit incident demonstrates risk associated with wallet infrastructure. The Kelp DAO incident highlighted dependency risk involving cross-chain infrastructure. So today, organizations must secure not only their environment, but also their vendor ecosystem. The first layer of defense begins with security development practices. Security should be integrated throughout the software development lifecycle. Regular audits, penetration testings, code reviews, and threat modeling should become standard practices. At the same time, organizations must invest in people, leadership, engineering, operation team, and business functions all play a role in security. Defensive capabilities must extend into infrastructure and operation, endpoint protection, cloud security, network segmentation, threat intelligence, and incident response all play critical roles. Organizations should continuously monitor both Web 2 and Web 3 environments. Most importantly, incident response should be practiced before an incident occurs. The worst time to develop a response plan is during an active attack. So in conclusion, Web3 threats evolving rapidly, attackers becoming more passionate, more sophisticated, and more focused on people and infrastructure rather than just the code. The most successful organization will be those that adopt a defense in-depth approach, combining security development, operational security, threat intelligence, monitoring, and an incident response. That will be the end of my presentation for today. That's pretty much. Thank you so much.
Thank you for your presentation. We have a few minutes for questions. So you mentioned about the AI, that hackers use AI and defenders should use AI too. Can you be more specific on that? So what changed with the AI era to Web3 security, and how do you use AI to prevent these attacks, maybe?
Yeah, so at Certic, we do use AI, and we're saying that AI will be an important part of any of the security assessments going forward, just like security companies implementing various AI agents to efficiently handle the assessment process, as well as improve the assessment process. We think that attackers are using advantage of AI as well. AI can Yeah, so from the CERTIC perspective, we have recently launched an AI auditor tool to optimize some of the process of the auditing work that we do, as well as yeah, we're saying that it's gonna be a industry standard soon, and just like we're developing AI tools to secure the projects, we think that attackers are also getting sophisticated in using
For
AI
sure.
for their
And in your opinion, it's more harm AI does to code or to people, like social engineering and all these like people mistakes?
I think it has an element of both. It has an element of both. I think it really makes probably the attacker's life easier to create some social engineering, as well as for the coding part. We're saying that yeah. So my answer would be it works well. I think on the both fronts. It's not like one thing is in one area AI works better, another one not. I think like it works quite well for both.
It became more interesting, I said, with the AI. And one more question. I forgot what I wanted to ask. It was there was a news that the most vulnerable sector in Web3 is DeFi. Is it true, due to your experience and all kind of certain stuff? And can it be changed like in the next months or years? Because at the moment, as I understand, DeFi is the most vulnerable part of Web3.
I think it's because in the case of TrueBit, right, that smart contract was on testnet. It was deployed on testnet, but never really verified for many years, and that vulnerability existed in that smart contract for that long time before the actual exploit happened. So I think maybe that could show that DeFi is still the most vulnerable. But on the other hand, we think that social engineering is also becoming one of the most vulnerable areas as well. And social engineering can be applied both to DeFi and to those institutional grade activities that are happening, that are getting so popular lately. So I think DeFi, yeah, is predominantly probably might be a bit vulnerable, but I think we should be still paying a lot of attention as well as to the off-chain components, to the operational resilience. And that's what I think most of the regulators around the world are also seeing a huge emerging threat in, and making those projects be compliant and have those incident response and pay much more attention to their operational resilience, which I think is also as important as DeFi as well.
Yeah, human factor always is important. Okay, so we have a short quiz for you. So quick questions, quick answers. It's more like a fun, so don't be too much serious on that. So what is the best for investment for today, crypto or stocks?
Well, I think maybe both. I really think that diversification of your portfolio is important.
But stocks also on chain, right?
Yeah, with all those institutions, all those chains getting active, the institutional grade chains getting active, maybe diversification would be a good option.
So the next question is interesting to hear from CERTIC. What's better, privacy or regulation?
I don't really have an exact answer. I cannot really say that I'm a big fan of privacy or I'm a big fan of regulation. I surely think that regulation plays an important role and privacy as well. So maybe you just need to try to find a balance between those two.
That makes sense.
Yeah.
Crypto at the end of this year, higher or lower?
Maybe higher.
You're optimistic also, right? Okay.
Yeah, quite optimistic. I just read the news that Clarity Bill in the US just got approved. So I think it's on the way. Probably that will make some difference in the market soon.
When did you dive into crypto? In which year?
I joined Serdec actually 6 years ago, more than 6 years ago. So
And it
Serdec-
was your first crypto project?
Yeah, it was my first crypto project, and I'm still with Serdec, helping them develop, expand globally. So yeah, Serdec is my first Web3 company I
So
joined.
you entered the market just on the bull market, and it was too much fun, I guess.
I think lots of people had fun in the bull market.
Because we started in the end of 2017, and we thought that this bull market will be forever, and then 2018 started, and it was like always down. So you think that now is bear market or bull market?
Maybe bullish with maybe bullish with volatility. Yeah.
You just have to to make a right strategy, right, on the trading.
Yeah.
And the final question. So what would you say to Satoshi Nakamoto if you met him in person?
Yeah, when I joined, I heard the previous speaker said that he would have a lunch with him. So I think that's something that lots of people would want to do it. I mean, yeah, if I had a message, if I had a chance to say something to him, maybe like I could just say that you built it and they're sort of trying to secure it.
Okay. That's that's good for you as a Certic guy. Okay. Thank you for your time. It was nice to hear from you. You're always welcome to Ukraine whenever this finish during our offline conference, maybe next week or next year. In my thoughts, next week.
Yeah, hopefully.
Thank you, and have a good day, night, or morning, whatever you have.
Thank you guys for having me, and wishing you all the best. And yeah, thanks for the invitation.
Yeah. So bye-bye. Thank you.
Yeah, bye.
So we're waiting for our next speaker, our last but not least speaker, and I will say that it'll be CJ Hetherington, CEO and co-founder of Limitless. My man, my friend. So please welcome CJ. Hey, my man.
Hey, how you doing? Good to see you.
Good to see you. Is a tradition. I have to say it when I see you. Oh shit! Here we go again. CJ is here. So CEO of Limitless Energy. CJ, it's so nice to hear. I first time I met CJ in Kiev during your event in 2022. It was the first event during the war, where you brought Vitalik Buterin, and I guess that it gave the boost for our events department. So thank you for that also. So let's talk about Limitless. You've raised more than $17 million. First of all, congrats. But a lot of people outside crypto still don't know Limitless. Is it a gap or is it like intentional?
So first of all, I just wanted to say it's great to see you. Thanks for having me on. Yeah, Kyiv Tech Summit was maybe the first event during the war, but Incrypted's definitely been the best events. So you certainly showed us like how to do it properly, even if we did it a little bit earlier. So thank you for that as well. And I joined also the Incrypted conference before in Kyiv, and it was a great show, and I'm sure today has been no different. So yeah, really happy to join. In terms of capital raising, I can probably give you a small alpha leak that we have raised more than 17 million.
Do it.
But we will have an official announcement about that soon. And yeah, I think that, brand awareness for Limitless certainly much more within crypto than outside of crypto. I think that mostly because where we started, right? Like actually our most popular contracts are crypto contracts, right? So people on Limitless really love to trade the short duration crypto contracts. And, we've been part of the crypto community for many years. And so I think it's just kind of the natural starting point and like springboard for us. And, we will continue to grow and expand into other markets and communities over the next few years.
Do you plan to use like World Cup to expand
Limitless
to non-crypto guys?
We have a lot of markets surrounding the World Cup on the global product right now. Definitely would check those out. Yeah, actually, football is an area that we're super excited about, and yeah, also an area where we feel like we have an edge. And so it's great to see those markets growing on the platform as well.
So prediction markets have been promising to go mainstream since like 90s, I guess. So what's structurally different this time? Not just the hype cycle, right?
So the first thing, in my opinion, that kind of catalyzed the growth of prediction markets is actually stablecoins. And the fact that kind of blockchain enables self-custodial financial services, where people can not only communicate with each other on the internet, but also transact between each other independent of traditional custodial rails. And I think that's where the kind of hockey stick moment for prediction markets really started. Always every kind of US presidential election cycle, there is a lot of kind of interest and demand for prediction markets. And historically, that's kind of been, right. Yeah, it's kind of been growing every single election cycle. What was different this time, so you have kind of, low cost blockchain environments like, layer twos where you can transact for cents on the dollar. And also you can reach like 200 countries with this product without necessarily going to, every single country and spending, years getting the relevant licensing for custodying user funds. I think the most powerful thing about Limitless' global product is that it's self-custodial. So, we don't actually hold customer funds. Customers hold their own funds in their crypto wallet. And then if they buy a position in a particular event, which is a great way for them either to express their view about what they think is going to happen or de-risk themselves or their portfolio from what they think may happen, their money is held in a smart contract. And there is no kind of central custodian who's custodying those funds. I think historically, a lot of crypto exchanges, let's talk about BitMax or Binance, for example, right? They had enforcement because of custodying user funds. But when you actually have self-custodial financial services on a low-cost layer 2 blockchain environment, the game changed. And so it was the election that drove the initial demand and excitement. And then it was accelerated by the result of the election, because there was a huge kind of regulatory regime change whereby, for the last few years prior to, the recent administration, there was literally a war on crypto in the US, right? And so a lot of products and services were kind of pushed offshore. But what changed with the new administration is that the regulatory environment became much more clear, much more rules-based, and much more open and accessible for innovative products. And this kind of resulted in more institutional attention and demand, starting with venture capital, which then I think led a lot of people to think, are we missing something here? Like, how are these companies able to raise so much money? It must mean that the market and the opportunity is really large. It must mean then that prediction markets can do a lot of brilliant and amazing things. And that's basically what has led us to where we are today. So to summarize, stablecoins, low-cost blockchains, and then regulatory regime change and a new rules-based and innovation-friendly order in the United States.
But still, United States is cool, but we still have an opposition to official government. They want to block all these prediction markets. But we see the trend in like European countries that they try to block prediction market. Do you feel this pressure in different countries? And
so interestingly, if you look at all of these cases, most of the time it happens during an election cycle. So it just so happens that governments around the world don't really like it when people can bet on elections.
Just to avoid this influence of prediction markets on elections, right?
Yeah, so I think the primary reason for banning of prediction markets in a bunch of countries around the world, in Europe and in Asia particularly, has almost every time been during an election cycle in that particular country. Not in all cases, but in the majority of cases. And so I think the largest risk is probably soliciting local users during an election cycle to bet on a local election. And Limitless doesn't really focus on election markets, so I would consider the risk to be considerably lower.
Okay, smart enough, smart enough. So the question, more like a private question. So every founder builds something they wish existed. So what was the moment you realized the market you wanted didn't exist yet?
So this is an interesting story. First of all, what sparked my interest in prediction markets actually was in Kiev. Limitless actually was founded in Kiev. And with my co-founders, we had a lunch with a dude called Ales, the CTO of Reface. And this was in late 2024. And he basically told me that he wants to create an economic system or like a market where swarms of AI agents can compete against each other to determine if a piece of information on the internet is true or not. As we know, for people in Ukraine and Europe for many years been battling like Russian propaganda, and so information provenance is something that is super valuable, and that's probably why he was thinking about that. And he basically wanted to create a system whereby the AI agents would compete against each other to mine knowledge to determine if a piece of information or a post on the internet was true or not. And if the AI agent swarm was good at determining if it was true or not, it would make money. It would almost be like a profitable investment fund with like a year-to-date return profile. And if it was like trying to manipulate the market or it was wrong regularly, it would lose money, and so it wouldn't cover its computation costs, and then it would effectively die, right? And then I immediately started thinking that actually the perfect and easiest way to implement this would be using prediction markets, and kind of kept me awake for many days, and I was thinking a lot about this. And then eventually talked to my co-founders about that. We started kind of building and iterating. And interestingly, my co-founder, Dimer, actually was he was looking at the market, like the consumer market. We kind of feared that it was too early for this kind of AI agent network back then. A lot has changed. Probably it's much more doable now. I mean, we have a lot of AI agents that are actually trading on Limitless, and we make it super easy for people to do that intentionally. And of course, the primary way of how to achieve that goal is by building a liquid exchange and marketplace. And so we kind of just understood that consumer, like playing to our strengths and background of people in the company, and like building a consumer product was the right way to go. And immediately, like Dima's insight was like, there are no user-generated markets. Like people can't create their own market, but it would be cool if people could create their own market and then monetize it somehow. And it would kind of be like Amazon and prediction markets, and we would achieve distribution by individual creators creating and sharing their own prediction markets. And so that's actually the kind of assumption that we started building the main Limitless product with. Of course, there are lots of challenges to achieving user-generated markets.
For sure.
But recently, we actually launched initial version of that, which is funny. Like 2 years later, I mean, we did have versions of that previously, but we just kind of had this mantra of how can we test as many assumptions as possible, as fast as possible, in as few steps as possible. If something
and as cheap as possible due to base.
And if something like works, we double down on it, and if it doesn't, it's okay. We move on to the next thing. We kind of have this cycling nature of assumptions and ideas and tests that we validate or invalidate and keep moving forward. And so we kind of found product market fit in another area, which is more so the prices market. Now we also have other like emergent networks like the football or the esports or whatever. But more recently, we actually got back to this kind of founding assumption of user-generated markets.
So firstly, it was truth-oriented, customers-oriented, because so people can create their own events, right? And variations-oriented, so to test as many things as possible, right?
Yeah, a long way of saying we're basically just nerds and we're having fun doing this.
Yeah, that's the only way. Only nerds can win, I guess. So the next question about your competitors, like more or less, like Robinhood has 24 million users, right? And brokerage license. Kalshi has CFTC approval. So what does Limitless have that they can't replicate?
Ukrainians.
In your team, right?
Yes, exactly. We have a higher density of Ukrainian talent than any other prediction market in the world. That's why we'll win.
Say no more. Say no more.
Yeah,
they can't replicate it.
Also, like, I mean, looking at the market, we kind of focus on clear beachheads where we feel that we have an edge and we can dominate. Limitless kind of pioneered like short duration prices contracts before any other prediction market. We listed them for the first time in 2024. That's our main driver of volume and revenue for the business today. And that's primarily where, we've been focusing. Another one is, as I mentioned, football, right? Kind of, with our team growing up like in Europe, mostly have much more exposure and like also passion for football growing up than a lot of companies who are US based. And so that was another kind of natural edge for us. And so our strategy for the global product is basically focus on clear beachheads where we have an edge, treat them as distinct standalone atomic networks, and serve those communities as well as we can. And then I think that in the US market, it's our feeling that kind of incumbents are missing the forest for the trees when it comes to prediction markets, and that based on our analysis, sports contracts are like a $6 to $10 billion annual revenue opportunity in the next 10 years, but the institutional opportunity is more like a $50 billion or $60 billion annual revenue opportunity. And so our plan for the US market is actually a little bit different to the global product. It's not to focus on retail consumers, it's actually to focus more on institutional clients and risk transfer.
Okay, that makes sense, I guess. It's a bit hard, but less competitive, I guess. So the next question is about on-chain transparency, which means that your wins and both your losses are both permanent and public. So how do you build a product around radical honesty?
So I think it's good. I think truth is good. I think openness is good. I think transparency is good. And so, when everything is like out in the open and auditable, you can clearly see, what's happening. I highlighted one trader recently that's, been making effectively like hundreds of thousands of dollars picking off market makers on the Limitless platform. Most probably this is like just, solo dude. I don't know that for sure, but I assume so, running his own strategies and actually outperforming, market makers on the platform. And you can like see that, on chain. And so as much as there are, losers on the platform, like for every loser, there is a winner, right? And so I think that in general, like this transparency is a very good thing.
I agree. The next question is about Ukrainians. Ukrainians have navigated genuine uncertainty and not market uncertainty, but existential uncertainty for years. Do you think that gives this audience a different relationship with prediction?
So I think that Ukrainians are the most resilient people on earth, and building a startup is about being resilient, like coming short and like facing challenges. And so that's why I think that some of the largest companies that are built in the next 100 years will have strong concentration of Ukrainian talent. And we see that like right now with what's happening in like defense tech. Like I just saw today those autonomous drones that are taking down shaheds like autonomously, right? Which for me is incredible and pretty mind-blowing. And so I think that building a new market, building a company, effectively doing anything in the world like requires a lot of resilience. And I think Ukrainians have more resilience than anybody else.
I read somewhere that success in entrepreneurship and like in crypto also is how long can you stand uncertainty and doubt. So we can stand uncertainty and doubt for years, I guess.
For sure.
So the next question is about your personal red lines, as it we can call them. So what's the market type you would never list on Limitless? So where you draw this line?
I think it's important that markets have integrity and can't be easily manipulated. And so whenever we list a market on the platform, we always kind of evaluate like how it can be influenced and like kind of apply a framework of like, does this market have integrity? Like, is it something that someone can like just bet on and then go and do or not do? And so, I think that framework is very important for us in terms of how we think about markets. And of course, this is like especially important when you're talking about things that also like influence or affect human life.
Okay. The next questions is that about self-custody. So it is your core trust argument, right? The self-custody. But most mainstream users don't want to manage their own wallet. They are like, oh, I can't, I don't want to manage it. So how do you close that gap without compromising their architecture? Or you just want to teach to users who want to manage their own wallet?
So, I understand that self-custody sounds like a scary thing, right? Like banks exist for a reason, right? Like people don't want to lose.
It's like not scary. It's like difficult to people.
Yeah, people don't want to like lose all. I mean, I lose things like all the time. Like know
that feel, bro.
Yeah, so like I also don't want to to custody my own funds necessarily. I understand that. On Limitless, we have like a smart contract wallet with social recovery. So it's much easier for you to like recover access to your wallet. It's very simple to use and you don't even have to like pay gas fees or anything like that. Everything is kind of handled and settled without you even thinking about it. But it's more of like not even necessarily I'm personally taking care of my money. It's more like this kind of code is law paradigm where like the smart contract is taking care of my money, right? And we can integrate like different modes like social recovery or security into that without becoming a custodian. And I think that's what's really powerful about the technology.
So you still have the security of non-custodial wallet, but you improve the user experience like for guys.
I mean, we're certainly not an underground vault in Switzerland where some people keep their money, right? So I don't want to say we have the same level of security of like a really large custodian, because that wouldn't be true necessarily. And I want to be transparent about that. And like, I think it's very important that people do spend time to understand like how the technology works and how to, recover their accesses and how to be secure. Like we see a lot of, kind of social engineering and hacks and fraud and scams in crypto. And so definitely like users should be educated and like vigilant. But it's definitely secure. And, it's certainly like not such a huge and daunting and complex thing. Like if you want to authenticate with your like Google account, like you can do it. It's pretty straightforward and simple for you.
But we both know that people don't give a fuck about security until their first hack, and then they want cold wallets, they want two-factor authentication. So it's like you have to deal with it for them, because when they get hacked, they say, "Oh, I want security," and they start to explore all this kind of stuff.
No, for sure. I mean, we take this very seriously. The Limitless Smart Wallet is very secure. I was just more so meaning like at some point, like you can't get more secure than like a nuclear bunker on the ground with soldiers surrounding it, right? Which is like how some like high security facilities operate.
For sure.
So depending on what's at stake, I think that there is a different security and procedure pipeline for different kind of people and different kind of assets.
For sure. So in a market, when someone wins and someone loses, at what point does a loss become a product problem rather than a user problem? Do you know what I mean?
Not sure I got it.
It means that you have users, right? And some of them winning, some of them losing. And so at what critical point of losing, the amount of losing people has become a problem for a product, not for a user?
You mean that people are maybe more likely to churn if they lose money on aggregate?
Yeah, like that.
So I think the powerful thing about prediction markets that we see right now is that people kind of have this power to like determine their own reality, right? So they can kind of put their knowledge to the test. They actually can go out and they can do research, or like, they can use AI to build like pricing models or predictive models for various things. And like the average person or like a very small team or like someone in their basement has much more flexibility to kind of adopt these new kind of markets and to have an edge in these kind of markets than like super established, really large trading firms, which are kind of more like the late majority. And so what we're actually seeing is like a kind of, I would call this like a renaissance of trading activity, which is happening where retail actually can compete because they're able to, you know, build, like take their insights that they have and like build their own kind of unique models.
You mean like it's more skill-based when people can use their skills to win, right?
Yeah, and it's almost like it's a very human level of insight. Like I feel like sometimes, you know, I'll give you an example. Like I was actually trading a election market on another platform during the Hungarian election cycle. Don't ask me why. Sometimes on Sunday I like to like trade or to write some research or something to kind of have some downtime. And I noticed in the Hungarian election voter turnout rate market that basically the market was really overweighting the likelihood of like an unprecedented high turnout. And just like being like a nerd about elections since I was like a little kid, I was like, even before I did any research, I was like, that's not right for me because like voter turnout rate should not be that high.
So you play elections when you were a kid?
I mean, I actually like first tried to join a political party when I was 10 years old. So I definitely been like into that. Yeah, and like what I noticed is that people were following the Hungarian like national statistics website that was releasing the live voter turnout every hour.
Mm-hmm.
But this only take into account voters who are inside of the country. But there are a lot of voters outside of the country, abroad, that were not factored into this turnout rate percentage. And so the true denominator was different, and people were massively overweighting the true probability. You know, and so it's just little things like that where like it takes kind of human level of just like reasoning and exploration and a little bit of research, where like small lean teams or even individuals can kind of have an edge over large systematic operations. Like, you know, if you look at how really large, you know, market makers operate in like traditional futures markets, right? It's all about kind of speed, like latency, infrastructure, and of course the quality of your pricing model. It's a very systematic thing. Prediction markets are much more like dynamic. And like there is not like a silver bullet or like a one size fits all model for that. And so what that means is there are a lot of opportunities for average people actually to monetize the knowledge that they have, right? And that's why it really feels to me like a renaissance. And even in the like price prediction world, which is probably similar to traditional futures or more like options than anything else, but kind of different because of the payoff structure and that it's binary and not linear. And of course, like digital options have existed for a long time, but even in prediction markets, like the traditional way of doing things just doesn't work. And that creates new opportunities. And also the fact that the scale of the P&L is not at the level of traditional markets yet means that it's kind of the golden era for average people to, you know, start participating.
So if I understood you correctly, to sum up, the on-chain transparency plus the ability of the people with skills and knowledge to win makes the losses not the problem of the product, because people see everything and they can win if they like know the market and know the product they participate in, right?
Exactly. And just because the market is new and dynamic, it creates more opportunities for people who are kind of, you know, thinking and tinkering and experimenting, because there's no like one size fits all kind of solution for these markets. They're very different. They're very dynamic. And there are a lot of opportunities for people who pay attention and have some unique insights.
One of the last questions. So what's the most unexpected market that performed on your platform that surprised you and your team?
Good question. I mean, there are probably like a lot of things that like we didn't see coming necessarily. Like I can like lie to you and say like, oh, we're super smart. Like we saw the price market was coming, like the 0-day options, like from first principles. Really, we were just like fucking around and finding out, right? So I think, to be honest, like the whole journey has been like a lot of constant kind of surprises and a lot of happiness for me. But yeah, I think even the fact that we kind of landed on this vertical of like short duration prices contracts and that growing into a pretty large market and still growing very fast. Like Limitless recently crossed like 50 million in annualized revenue, and the revenue from these short duration prices contracts is like at least 40% of all of the on-chain revenue generated by prediction markets. And I think it will turn out to be much, much larger in the future as well.
So it was, I guess, sorry for the previous speakers, my favorite speech at the moment. Thank you for your time. We have the final short quiz for you. So quick questions, quick answers. That's
Okay.
more of fun, so don't take it too much serious. So the best investment for today, crypto or stocks?
I'm going to say equities, particularly Asian equities.
Asian?
Yeah.
Okay, interesting. So what's better, privacy or regulation?
Regulated privacy.
You son of a... Okay, crypto at the end of this year, higher or lower?
Higher.
So what we have now, bear market or bull market?
Bull market.
Okay, and finally, what would you say to Satoshi Nakamoto if you met him in person?
GM.
What?
GM.
GM?
GM.
What is that?
Good morning. GM.
Ah, GM. Okay. So thank you. It was so fun to talk to you. I'm waiting for you here in Kiev all the time. You're always welcome whenever you come. If you will not call me, I will, beat you ass.
Of course, I'll call you. Love you, man. Thanks for
you,
hosting
man,
a great event, and thanks to the team. Yeah, keep doing what you're doing. It's amazing to see.
The same, man. So good luck, every success to Limitless and to you personally. And the main thing, continue to just fucking around and having fun. That's the only way to live in crypto. Okay, bye-bye.
Thanks, man.
Thank you.
Take care.
Thank you, bye-bye. So it was the last speaker for today at our Incrypted Online Conference. It was a long day, but it was just the first event in our Ukrainian Blockchain Week. So don't miss the links and the places where we will have offline events if you're inside the Ukraine and if you're outside of Ukraine. So subscribe to our Twitter because we will have a lot of materials from that online conference. If you miss something, I will post some shorts and videos and all this kind of stuff. And we also do a lot of other content in Twitter and the website and Telegram, YouTube. So keep subscribing to all the resources when it's suitable for you to take your finger on the crypto. I don't know if it's correct to say so or not. I'm happy that you were here with us. So now we have 3,974 people on stream. It is so cool. I thank to all of you. Thank for your activity in the chat. Continue to believe in crypto because it's like our third bear market, and it for sure will finish, and everything will be cool. So have a good day. It's over for now, but we will meet you very soon. It was Incrypted, and bye-bye.